Good morning, everyone, and welcome to all of you watching online and on Fios One News. I'm Alexis Christoforous.
And I'm Brian Sazi, and this is the first trade for Friday, October 11th.
Oil attack. An explosion rocks an Iranian tanker and sends crude oil spiking. We have the latest on this developing story.
Closer to a trade deal, perhaps, top U.S. and Chinese negotiators are meeting again this morning ahead of a big sit-down at the White House. Could a partial victory in the trade war send stocks skyrocketing?
And a devil's bargain? Apple shares spiked to new highs after pulling a controversial app connected to the Hong Kong protests. But did CEO Tim Cook make a political move to protect Apple in China?
Let's get a look at the futures here ahead of the opening bell. Lots of green on that screen amid a whole bunch of trade talk optimism. Dow futures up 262 points. The S&P 500 and NASDAQ are nicely in the green.
We'll get a full check of the markets for you in just a bit. But first, to today's big story.
Oil prices are spiking after reports that two rockets hit an Iranian tanker. It happened while the tanker was traveling through the Red Sea. There's been no comment from the Saudi Arabian government, which suffered its own attack just last month. Iranian state media says the tanker was on fire, leaked oil, and suffered massive damage. Yahoo Finance's Scott Gamm is at the Wi-Fi Interactive board with more. Scott?
Well, Brian, we're seeing West Texas Intermediate, that's the U.S. benchmark for crude, up this morning about 1%, just over $54 a barrel. But that's still well off of session highs. Just a few hours ago, we saw oil as high as almost $55 a barrel. But this move is still relatively modest, just compared to mid-September when we had those airstrikes in Saudi Arabia. And as you can see by this one-month chart, that's when oil prices hit a one-day gain of 15%. But that rally was short-lived. I mean, look what happened in the following couple of weeks. We completely erased that gain. And now, even with the modest gain we're seeing today in oil prices, we are at levels below where we were trading prior to those mid-September airstrikes in Saudi Arabia.
Yeah, I mean, exactly. This is happening not long after that oil attack on the Saudi Arabian facility. So what do you think this is going to do to oil going forward, at least through the end of the year?
Well, look, I think investors are watching the geopolitical uncertainty in the Middle East. And anytime you have these types of events, you tend to see a knee-jerk reaction in crude. But I think investors also know that the U.S. produces so much oil that any type of production disruptions in the Middle East are unlikely to have a major impact on prices over the long term.
All right, Scott Gamm, we'll see you a little later in the show. Thank you. Trade talks continue in Washington today, and hopes for some kind of a deal are much higher than they were just 24 hours ago. President Trump now says he will meet with China's Vice Premier Liu He later today at the White House. Yahoo Finance's Jessica Smith is in our D.C. bureau with more. Jessica, are there high hopes for this meeting?
Well, the hopes are much higher than they were yesterday. Negotiators just arrived at the U.S. Trade Rep's office, so they'll be working throughout the day after a long day of negotiations yesterday. It was just Wednesday night. We were worried that trade talks might be cut short, but that is clearly not what we saw happen. President Trump yesterday told reporters that talks were going very, very well. And then at a rally last night, he continued that optimistic tone.
We're going to see if we make a deal. But they want to make it. We're going to determine whether or not we want to make it. But they've been very nice. And today I got a call from one of the top representatives. He said, "Congratulations, Mr. President, on having a truly great economy." That's pretty nice.
So the meeting between the president and the vice premier is scheduled for 2:45 this afternoon. And the reason that is causing so much optimism is because in the past, when we've seen the two of them meet, it has usually led to some progress. It could have been a delayed tariff hike or more ag purchases promised by the Chinese. So we'll be looking for any sign of progress there. And while there aren't really hopes for a broad trade deal getting done today, there is hope that there could be a limited deal that kind of de-escalates things. Right now, that meeting is closed to the press, but that could definitely change. So we'll keep you updated on what happens throughout the day.
Jess, what would a limited trade deal look like?
Well, there's been a lot of reporting on that. In some of the areas we're watching are ag purchases. Will China agree to buy more U.S. farm goods? There could be some kind of a currency pact. Huawei licenses could be on the table. And then we're also watching the October 15th tariff hike. That is scheduled. We'll be watching to see if there's any sort of a delay there. As for whether or not the president would accept a partial deal, he has said in the past that he just wants a complete deal. But the administration has kind of left the door open in recent weeks weeks. And more so than a partial deal, I think this is more of a truce just to kind of lower tensions on both sides here.
All right. Thanks so much, Jess. For more analysis on the trade talks, I'd like to get John Tamny in here. He's the director of the Center for Economic Freedom. John, good to see you. Do you think the market is too optimistic on what it might mean if we do get a partial trade deal?
Yeah, I think the market is ultimately priced for a full deal, but not right now. My guess is that what we get out of this is that the October 15th tariff deadline is pushed back. But Donald Trump, I would say for bad, thinks the electorate likes this notion of him getting tough on China. In my perfect world, presidents would have nothing to do with trade. Trade is, it happens among individuals, not countries. But my guess is that he's going to drag this out until 2020 so that he can make a deal, something that happens during the election.
Didn't someone have to stand up to China, though? Wasn't it time that somebody pulled the trigger here?
No, I don't think so at all. Let's never forget that every day that the Chinese get up and go to work, Americans get a raise. Let's also remember that precisely because Chinese are producing so well for the American people, they're a huge market for American companies. Apple gets 1/5 of its iPhone sales from China. GM sells more cars in China than it does in North America. China is McDonald's second largest market. It's Nike's second largest market. Boeing sells 1/4 of its planes there. For us to put a bullseye on China is for us to put a bullseye on the U.S. economy.
How badly, though, does President Trump need a victory here, even if it's a partial one, because his numbers are falling in the polls? This is an election year for him. He's got the impeachment proceedings. Isn't some sort of a deal, even if it's a piecemeal deal, better than a complete deal?
Oh, I think so, but I also think the polls, when it comes to Trump, have never been very accurate in the first place, and so it would be hard for me to take the ones saying that he's way down seriously in consideration of what was said ahead of 2016. I think he needs a deal. I think it's a shame. I think it's particularly a shame Republicans have historically been about free trade, that suddenly he's moved the party in the direction of basically the president will decide what other countries do in terms of buying soybeans, how they trade. He will decide whether U.S. companies can sell to Huawei. All of this, I think, is very, very dangerous. And so, yeah, I think he'll take a deal. He's going to puff it up as bigger than it is. But ultimately, reality is going to intrude on all of this. China and the U.S., the people in these two rich countries are trading with one another, and no president's going to change that.
Do you think corporate America is in for a rude awakening because of the financial impact from this trade war? You mentioned some big companies. If I'm a McDonald's, I have to be concerned that the president will push this to the max.
Well, and I think that's why every time you see a big statement from Trump talking about, I demand that they withdraw, U.S. companies withdraw all their activities in China, or when he talks tariffs, that markets correct so much. U.S. companies are the most valuable in the world, and they're the most valuable precisely because they have operations globally. So anytime you put a bullseye in such a huge market, you're going to terrify markets. It's the equivalent of basically Gucci saying, okay, we're going to go to war with Beverly Hills and Fifth Avenue. Do you think that would take down its share price? Well, in the same way, U.S. companies are very reliant on sales in China.
What are your thoughts on the rebooted deal with Mexico and Canada? Are you in agreement with the way the U.S. is approaching that?
Look, in my perfect world, there would be no trade deals. I just think individuals trade, and they should be free to do that as free individuals. Individuals,
though, when you're talking about in between countries, who are the individuals exactly?
They're the people. It's my right. It's your right as an individual to trade with whomever I want. It's our right to have the world compete.
So the companies in those countries would be the ones making deals with companies in other countries.
Yeah, I don't think government should be involved in trade. I think that's incredibly dangerous. We know that central planning failed pretty miserably in the 20th century. I don't like the idea of governments now asserting themselves in this way. My understanding, my read of the USMCA is that it was basically NAFTA all over again. An incorrect statement was said that NAFTA was the worst deal ever. There was no basis for that. There was no knowledge backing that. And let me be clear. I'm saying this as someone who thinks there's a lot of good things that Trump has done. But on trade, I think it's terrifying. And there was no evidence that NAFTA was bad. And so the USMCA was breaking up an old deal to basically get a new one that looks the same.
All right, we're going to have to leave it there. John Tamny, thanks so much for coming in.
Thanks for having me.
All right, time now to head over to the New York Stock Exchange. Check in with Yahoo Finance's Inez Ferre for an early look at what's going on. And it looks like Apple's indicated to open at an all-time high. What's behind that, Inez?
Yeah, that's right. Apple's set to open at a one-year high, Alexis, and this stock is seen as a trade bellwether. As you guys were just talking so much about trade, it's seen as a trade bellwether. And this week also, Apple removed its controversial app that's tied to the Hong Kong protests. But really, recently, Apple has been getting some bullish notes from Wall Street. Longbow yesterday upgraded Apple to a buy with a price target of $260. And these notes really are highlighting optimism regarding the iPhone 11 demand and also longer term the 5G adoption next year. And then also we're watching this morning Roku up almost 7%. October is proving to be a better month for the stock than September. Roku was upgraded at RBC Capital to outperform with the note there saying that Roku's valuation is attractive given the 31% pullback from its recent highs. And then we're also watching Fastenal surging in pre-market. This is after beating on the top and bottom line for the third quarter and just going through their earnings release. They talked about their growth drivers, industrial vending, on-site locations. They also increased some prices. They did say that the slowdown that they had seen in the second quarter of 2019, that they continue to see that slowdown in the third quarter of 2019. Nevertheless, the stock is surging in pre-market given the better than expected results. Alexis,
all right.
Brian?
Thanks so much, Inez. Now let's get a look at European markets. A lot of green over there as well. The FTSE 100, the CAC 40, and DAX all nicely in the green. Yahoo Finance's Oscar Williams-Groot joins us now from London. Oscar, the Brexit headlines have been pretty downbeat over the last few weeks, but there are some positive signs potentially emerging, correct?
That's right. The mood music has totally changed in the last 24 hours, Brian. Earlier at the start of the week, the deal was essentially dead. Negotiations had stopped, but Prime Minister Boris Johnson met with his Irish counterpart Leo Varadkar yesterday, and Varadkar came away from the meeting saying he could see a pathway to a deal. Now, today we've had similar positive statements from the EU, and Michel Barnier said he had a constructive meeting with Stephen Barclay, the UK Brexit Secretary. This has led to, just within the last hour, reports that the EU are set to green light intensive Brexit negotiations between the UK and the EU for the first time since Johnson became Prime Minister. This is sending the pound nuts. It's up over 1% against the euro and over 1.5% against the dollar to a 3-month high as people bet that a deal could actually be in sight.
All right, got to talk a little Facebook now. I understand the company didn't pay much tax in the UK last year. What's that about?
The company filed its UK accounts and they show that Facebook paid £28 million in tax on revenues of $1.6 billion. Now, Facebook point out that, of course, tax is paid on profits, not revenues, but critics have consistently accused the big tech giants of picking and choosing where they book their profits. They point out that actually Facebook's profit margin, the rate at which it converts revenue into taxable profits, is lower in the UK than it is in the US. Now, Steve Hatch, the Vice President for Northern Europe at Facebook, said businesses across the country use our platform to grow revenue and revenue from customers supported by our UK teams is recorded here so that any taxable profit is subject to UK corporation tax.
All right, Oscar Williams-Groot there in London for us. Thank you. And now our partners at the South China Morning Post have the latest on what's happening in Asian markets right now. Here's Louise Moon.
Hong Kong and China markets both gained about 2% this week, each reversing 3 weeks of losses, mainly over optimism about trade talks. It was a 4-day trading week after both markets took Monday off for China's National Day celebrations. Starting the week well, Tuesday saw small gains after upbeat consumption numbers during China's holiday last week. Some food, liquor and transport-related stocks lifted. But it wasn't all positive. 8 Chinese tech giants were put on a trade blacklist by the US, who claimed the companies violated the rights of Muslim minorities in China. Hangzhou Hikvision Digital Technology lost over 5% this week, and Zhejiang Dahua Technology fell almost 8%. Adding to the problems on Wednesday was the suspension of NBA basketball preseason games by Chinese broadcasters. This came after the Houston Rockets team manager tweeted in support of the Hong Kong protests. Companies that ended their NBA sponsorship deals dropped, like Anta Sports and China Mengniu Dairy. Those related to the China Basketball Association rose, like Li Ning, which sponsor the league. The week ended positively after Trump said negotiations on Thursday, the first in over 2 months, were very, very good, and the White House said they were better than expected. Over in Hong Kong, MTR, the subway operator, rose this week after 3 weeks of losses, boosted on Friday. It opened all of its stations on Friday for the first time this week after being heavily vandalized by protests over the weekend. That's all from me. Back to you in New York.
Let's take a look at today's News Bites. The death toll continues to rise along Syria's border with Turkey as Turkish warplanes and artillery take aim at Kurdish targets. Tens of thousands have fled their homes in the region. President Trump earlier this week gave Turkey the green light and pulled U.S. troops from the area. Turkey is defending the offensive as necessary to create a safe zone. Two men who helped the president's personal attorney, Rudy Giuliani, in his efforts to investigate Joe and Hunter Biden have been arrested on federal campaign finance charges. They are the first criminal implications related to Giuliani's dealings in Ukraine, which is at the center of the impeachment proceedings against President Trump. Now, as part of the inquiry, Democrats are also investigating why Mr. Trump put a hold on $400 million in aid to Ukraine just days before his phone call with that country's leader. Fire crews are racing to contain a major wildfire in the San Fernando Valley of Los Angeles. Mandatory evacuation orders are now up for thousands of homes. The Saddle Ridge fire has already burned more than 4,000 acres. It has consumed at least one commercial building and several homes. The flames have shut down several major roads through the area, including the 210 freeway. Meantime, California Governor Gavin Newsom is calling PG&E's sweeping power outages unacceptable. The utility is starting to restore power after cutting off electricity to some 700,000 homes to prevent lines from sparking fires. While appearing at our All Market Summit yesterday, Bernard Tyson, CEO of Kaiser Permanente, explained how the outages were impacting his facilities in California.
Of course, we have generators and emergency generators, and we know how to work without power by having our own self-contained power.
Meantime, a blizzard warning is being issued in the Dakotas while Colorado residents deal with the aftermath of an early snowstorm. In some cities like Denver and Colorado Springs, temperatures plummeted more than 50 degrees in just 24 hours, while snow totals range from 1 inch to 9 inches in the Rocky Mountains. Residents across the northern plains are bracing for the storm, which threatens power outages and damage to crops that have yet to be harvested.
Coming up here on The First Trade, bringing in the big guns, the major step GM is taking to try and end the long, financially painful strike with the UAW. Also, the major executive shakeup at Walmart that will impact all of its U.S. stores, that's coming up next. Taking a look at their futures here, though, futures are solidly in the green, and they have been for all of the morning. The Dow futures up 241 points. The S&P 500 and NASDAQ also in the green. We'll be right back. Welcome back to the first trade. Taking another look at the futures here ahead of the opening bell. Again, lots of green on the screen on this Friday. Dow futures up 242 points. The S&P 500, NASDAQ also in the green.
GM is pressuring the United Auto Workers to reach a resolution in that strike, now wrapping up its fourth week. CEO Mary Barra met with the union's president Gary Jones on Wednesday, and in a letter to the union, GM's top negotiator urged them to step up the pace of the talks and asked for round-the-clock bargaining. Senior columnist Rick Newman joining us now for more. Rick, I have to think more talks is just a good thing.
I guess, but it looks as if GM is actually might be the one blinking first here. Now, GM did not publicize this meeting that Mary Barra had with the union representatives. They sort of, brought the top dog in. Usually you would do that to kind of close the deal, and there was no closing of the deal. So if it was an effort to sort of bang heads and say, let's get this over with, it didn't work.
Rick, by some financial measures or reports, GM has lost $1 billion because of the strike. Are they near that point yet of being financially crippled?
Financially crippled, no. And, this is all about the, GM's future. This is not about what happens later this year or next year. This is about the next 5 years, really, and GM transitioning into different types of vehicles, electric vehicles that are manufactured very differently. And so I think from GM's perspective, they would say, we need to take the hit now because we got to make sure we have the flexibility to adapt to whatever is coming in the next few years. I think that's what this is all about. They do seem to have made strides on things like pay and the issue of the temp workers, making more of those permanent workers. The sticking point now seems to be union demands that GM move production of some models from Mexico back to the United States. And importantly, those are vehicles that are actually sold in the United States. So the idea is, if you're selling those vehicles here, make them in the home market. And GM's answer to that is, we just have to control labor. We cannot be at a labor cost disadvantage on every vehicle in the lineup.
Like you said, we'll see who blinks first. Rick Newman, thank you. All right, the opening bell is coming up next here on the first trade. Here's another look at those stock futures. We have a lot of optimism today about trade talks that are going to be taking place between the president and Chinese premier later this afternoon. Dow futures up 245, broader market also rallying. Here's your look at the action in overseas markets today, and we'll be right back. Welcome back to the first trade. We are about 5 minutes away from the opening bell, and stock futures are looking pretty good here to end the week on Wall Street. Let's go around the bell with Alicia Levine, chief strategist at BNY Mellon, and Tom Essay, founder of the Sevens Report, along with Yahoo Finance's Scott Gamm over at the Wi-Fi Interactive Board. Good Friday morning to you all. Alicia, I'm going to start with you. Is this market setting itself up for failure if we don't get a trade deal, which is very possible?
So the market's already pricing in some sort of temporary trade truce, because if you look at a basket of stocks that are levered to China trade, they have not collapsed. They're sort of midway where we were from May to where tariffs were first put on. So the market's already pricing in something happening. This is obviously good news. I'll take any good news on any kind of skinny deal we get. But the truth of the matter is, to really push higher on the S&P, you probably need something more fundamental, and you have to stabilize earnings for next year. So I think you get a nice little bump here, but I'm not sure this in and of itself is sustainable for the market.
Tom, I was reading your morning note, and you noted that if we do get a trade deal, the S&P 500 could only reach about 3,000. To me, that's pretty disappointing. What gets the S&P over 3,000 more aggressively?
I think there's two things. Number one, we have to get a positive surprise on trade. And by positive surprise, I mean existing in-place tariffs reduced. So not just promising not to do more, it's actually removing the ones that are currently in place. That, I think, would be a positive surprise. The other thing is earnings, right? We're coming up on earnings season. It's been sort of lost among this trade soap opera. But earnings start next week. If earnings are stronger than expected, that could also help markets rally past 3,000 in the S&P.
What about earnings, Alicia? You know, we still have expectations for a 10% rise in earnings for 2020. Talk about setting yourself up for a disappointment. What do you think about that?
That's right. So the way the sell-side earnings game works is that analysts don't really address the next year's earnings until the fourth quarter of the previous year. So right now we're in the beginning of the fourth quarter of 2019. Those 2020 earnings are stale. And they're stale estimates, and they have to come in. So if you look at sort of historically what happens, 2020 earnings growth by the end of this quarter, by the end of December, probably is going to look around 7% if we're at 10% right now. So that has to be priced into the market as well. That's why I completely agree with Tom that any kind of skinny trade deal that keeps tariffs in place and is just a truce and we're going to keep on talking cannot really get the S&P going, because you've got earnings weakness in front of you that has not been addressed by the market yet.
Scott, over to you at the Wi-Fi Interactive Board.
Well, Brian, taking a look at stocks across the globe, and we have a lot of green on the screen. We've got stocks in Asia up, Shanghai, Tokyo, Hong Kong, all in the green. Also, European stocks are higher, especially in London and Paris. And then when it comes to U.S. stocks, of course, futures are higher. But remember, the market, especially in the U.S., has been rather range-bound over the past 6 months or so, especially in the S&P 500. We've been kind of trading between 2,800 and 3,000, and a lot of that movement depends on some of those trade headlines that we get from time to time.
Tom, what do you like right now as we are sort of on the precipice of earnings season? Are you moving some things around in the portfolio? What are you doing?
Yeah, I think for me, what's worked so far, I think will continue to work. And to me, that's more defensive sectors, right? If you look at something like an SPLV, which is a low volume ETF, has a lot of utilities, real estate, that's actually outperformed growth and value this year. I think that can continue between now and year end. Look, if we have the yay, we're all friends again trade, truce thing this afternoon, will we see a little bit of a momentum run? Sure. But I think, again, unless we get real tariff relief, that fades into the end of the year, and you stick with those defensive sectors, I think they can continue to outperform.
Tom, we have seen the momentum trades, which got beat up last month. They've come back to life. What would you do with that sector?
If I would rotate into defensives. I think that this bounce on this trade optimism has fueled that momentum trade, and I think it's an opportunity to reallocate. As I explained the whole trade situation to somebody last night, it's like the global economy is a boat, right? And we have holes in the boat, and the holes are the tariffs. And all of a sudden we said, okay, great, we're not going to drill any more holes, but we're not going to cover the current ones up either. Would you be happy about that? And of course, the answer is no. So no. I think we need to temper our enthusiasm.
Not if I'm on that boat, no. All right, there we have a new trading day underway at the New York Stock Exchange and the NASDAQ. We're starting with a nice, powerful rally right out of the gate. Dow Industrial's up 260. Alicia, Tom was just talking about defensive stocks being a place to be. Do you agree with that? And where else are you right now?
So I would agree with Tom for the most part. But I think when you get a market like this where every trade pretty much is the defensive trade, so yields so compressed and the dividend-paying stocks really outperforming, I think you always have to have some exposure to the other side. Because if the trade goes against you, and I mean the stock market trade, like not global trade, but if the trade goes against you and everyone has allocated in the same way, it could be really ugly. So we do think you have to have some exposure to cyclicals here to the extent that you're wrong, right? And the truth of the matter is very, very hard to game out what is going to happen. It's clear the Chinese need a deal. I think the administration keeps the tariffs on as an enforcement mechanism because it's clear the administration thinks tariffs work. But in the end, you don't know. And so you have to have some sort of hedging against the safety trade.
Speaking of hedging, what else is this market not pricing in right now that could be dangerous?
So the market's already pricing in a negotiated Brexit deal, right? Because if you look at the pound really has not collapsed to a point where it would if there is a hard Brexit. So it's not pricing in any kind of hard Brexit. It's not pricing in any increase in inflation. If you look at CPI is at 2.3% on the core reading. The PCE is what the Fed looks at, but CPI is over 2%. You know, it's interesting that none of the tariffs have shown any kind of increase in inflation here in the U.S. But again, that really doesn't pass the sniff test. So you're wondering if it's coming. The wage growth is interesting. It looked very subdued on the top line when we had the jobs number on Friday. But, you know, if you look at the non-supervisory workers, they've actually gotten quite a nice pay increase. And that's the part of the economy that spends the money. So there could be some inflation coming through here. I'm not saying it's likely. I'm just saying there's some signals that it's not dead. And the market's certainly not pricing that in.
Tom, I don't know if you saw the president's rally last night, but for me, it was quite the interesting watch. You know, he pretty much gave everyone what their pound of flesh and what you would expect from the president in that type of setting. But is that a major risk going into the market next year? That increased political rhetoric, is that a headline risk that people should not ignore, that need to be priced in?
I think to a point it is priced in already. I think it depends who the Democratic candidate is. I think if you have Warren emerge or Sanders emerge as the front runner, then the market has not priced that in at all because clearly their economic policies are not nearly as growth friendly as Trump's, or I would say even Biden. If it looks like Biden stays the front runner, then I don't think the election becomes a material headwind on stocks. But again, we haven't even had the first primary yet, so we've got a long way to go on that.
I want to point out Apple because we're just 3 minutes into the trading day and already that stock is at an all-time high. And remember, we had a lot of analysts very bearish on Apple. Do you think Apple's getting a little ahead of itself, or would you believe this rally?
So Apple's interesting because Apple had its bear market last year. And if you look at the street, most of the analysts do not have a buy on the stock, right? Which traditionally is a setup for a stock moving higher. I think technically the stock looks really good, actually.
Tom, what do you make about this Apple move? Is the Apple stock the canary in the coal mine here that, yes, maybe we will get a full trade deal?
I think it's certainly a positive anecdotal example, right? If the market were nervous that all of a sudden things are going to fall apart like it did in July, clearly Apple would not be at new highs. I think also it's reflecting what was said just earlier, that look, that people kind of soured on the stock and they're doing a nice transition into sort of more of a subscription-based business, moving a little bit away from hardware. It caught people by surprise, but I think it is generally a positive anecdotal point on China trade. And again, we probably get some sort of a skinny deal out of it.
And Apple, Scott, definitely one of the reasons why the Dow is up so nicely here in the early going. Take a deeper dive into the index for us.
Yeah, that's exactly right, Alexis. I've got a heat map up right now showing all of the Dow stocks, and you only have a few names in the red: Coca-Cola, Walmart, and Procter & Gamble. As you mentioned, Apple shares opening at a record high right now, over $233 a share. About a year ago, this stock was at about $232 a share and then sold off big time in the fourth quarter of last year. We're also seeing the other company in the Dow worth over $1 trillion, Microsoft, up over 1%. The one problem with this map gap right now is a little bit of weakness in Boeing shares. It's still up, but we know Boeing is such a powerful stock for the broader Dow Jones Industrial Average. So for today, you want to keep your eyes on Apple, Microsoft, and Boeing. Also, the banks are doing well. JP Morgan shares up 2%. That also is about trade optimism, because anytime you have trade optimism, you have folks think that the outlook for the global economy is better, and that, of course, helps the banks.
And Alicia, it's great that we have all this optimism. The market is pricing in a potential trade deal. What does that mean for the Federal Reserve? They're meeting later this month, and we all expected a rate cut. Do we get the rate cut?
We get the rate cut. We get the rate cut because we still have the inversion on the 3-month 10-year, and the Fed has to disinvert the curve, right? So that it needs to do that. You know, our feeling was the Fed should have cut 50 basis points earlier in the summer to just take care of the problem and to stop this conversation about how many more times the Fed's going to cut, because they would have disinverted back then. We think that you're going to get a cut because the data continues to be weaker than expected here in the U.S., and the manufacturing data has already been in decline, but now you're looking at the consumer services side that looks a little weaker for the month of September. So that was a surprise for the market.
Tom, I want to talk a little bit about whether or not a recession might be coming. You know, yesterday we had our all-market summit. We had Minneapolis Fed President Neel Kashkari on, and he was saying that base case, he does not see a recession on the horizon because he pointed to strong job growth and wages rising. Do you think that we're going to slow down globally, but the U.S. will not fall into a recession in the next 12 months?
I think probably no, we do not see a recession in the next 12 months. I don't think the curve inversion 10s, 2s was sort of enough of a powerful signal for me to say, oh boy, you know, we've got a recession coming here in the next year. That said, the risk is as high as it's been in a decade that we do find ourselves in a recession maybe 18 months from now. And I think we've got to get growth going again. I couldn't agree more. I thought the Fed should have gone 50 at the beginning of the summer and kind of gotten us out of this. I think they're still a little bit behind the curve, and they've got to get going. We need trade clarity and really tariff reduction to get businesses spending again. If that doesn't happen, then 12 to 18 months, I think that we could see ourselves in a recession. Yes.
Super quick, Alicia, just really quickly, what do you look at in terms of a timeline for a recession? Would you agree 12 to 18 months with Tom?
So this is one of the most difficult markets I've ever seen in being in this business, because I've never seen a market so dependent on macroeconomic headlines like this. Very difficult. So in a sense, you have contingencies. If this, then that.
Right.
If you get a trade deal with some reduction in tariffs, you avoid the recession because you'll get CapEx moving again. You'll get, because what you have is CEO optimism and willingness to spend on investment has turned over much more than consumer sentiment. Mm-hmm. So that's sort of the leading indicator. So you've got to change that. The question is whether it's gone on too long. We've had a trade war for 18 months. If the tariffs go on much longer, it will be hard to reverse the march towards recession. Our base case is no, because we think there's an incentive to get a deal on both sides by the first or second quarter of next year.
All right, this is confusing stuff in confusing times. Alicia Villeen, always good to see you. Tom Asay, good to see you. And Scott Gamm, thanks. Now let's head down to the New York Stock Exchange and check in with Yahoo Finance's Inez Ferre. Inez?
Yeah, Brian, we're looking at the Dow that's up more than 300 points right now. You've got financials, industrials, technology, which are leading the gains. We're watching Uber this morning after the company announced that they are acquiring majority ownership of Cornershop. This is an online grocery provider that operates mostly in Latin America. It was started in Chile back in 2015. Now, the terms of the investment haven't been disclosed, but this partnership is expected to close in early 2020. We're also watching Slack seeing a bit of a pop after the company announced that it now has 12 million daily active users. That's a 37% jump from a year ago. And we're watching Johnson & Johnson. This is after Johnson & Johnson received an upgrade at Bernstein to outperform from market perform, saying that the valuation is historically cheap. The Dow, as I just mentioned, up, still maintaining up more than 300 points right now. The S&P and the NASDAQ also higher. Alexis, Brian.
Okay, Inez, thanks so much for that. Oil is up today after news broke of 2 missiles reportedly striking an Iranian tanker. Yahoo Finance's Scott Gamm is back at the Wi-Fi Interactive board with our commodities report today. So, Scott, what is this doing to the oil price?
Well, yeah, let's bring you up to speed on what's going on with oil, because we've got oil up about 0.6%. Earlier, it was up over 1%, so the rally is fizzling out. We've got West Texas Intermediate now below $54 a barrel. As you can see on this bar over here, oil prices were at one point near $55 a barrel, but this is a pretty modest gain today, especially with all the geopolitical uncertainty out of the Middle East. As you'll remember, about a month ago, in mid-September, we had airstrikes in Saudi Arabia, which caused a 15% gain in oil prices in just one day. That was in mid-September. But that rally was short-lived. We gave up all of that gain in the coming couple of weeks. And now, even with some of the movement today, we're still below where we were trading prior to those airstrikes in Saudi Arabia in mid-September. So this shows that the knee-jerk reactions to some of this tension is really short-lived.
Okay there, Chartmaster. Where could oil prices go next?
Well, I mean, I'll save that for the analysts, but I will tell you that the reason why you're seeing such modest movements in the oil market, even the one in September was a big one-day move, but again, it was so short-lived, is because the U.S. is producing tremendous amounts of oil, and the market knows that. So anytime there is disruption in the Middle East, it's unlikely to disrupt the supply chain that much.
Scott Gamm, thanks so much. Let's talk more about crude oil with John Caruso, senior market strategist at RJO Futures. He's at the CME in Chicago. Good to see you. Oil prices at $52 a barrel here. I thought we would have seen more of a spike off this news. Why didn't we get that spike?
Well, we did. We initially saw the market jump up 2% in the overnight. We're certainly giving that back right now. The market is still focused on near-term classic supply and demand factors, which right now supply is far outstripping demand. However, I did mention back on after the September 14th attacks, I do still believe that the market is seriously discounting the geopolitical risk factor that is still hanging in the backdrop. Clearly, with last night's attacks on the Iranian oil tanker, that is still very much prevalent in the market. So I think that's something that investors need to take into consideration.
And John, I think consumers are looking at this going, when's it going to hit me at the gas pump? When's it going to hit me when I heat my home this winter? How long before we see this rise in crude trickle down to us, the consumer?
Well, to be quite honest with you, I mean, we're sitting under $54 a barrel right now. I think after the attacks, we did see it spike to about 64. That premium came off quickly. So I don't think you're going to see that big of an effect at the pumps anytime in the near future. However, we still are of the opinion that geopolitical risks are severely being discounted right now. And we still think that the crude oil prices resolve themselves higher by year end. I certainly think the risk of this market moving higher are certainly far outweigh than oil prices falling below $50 a barrel.
John, you mentioned a good amount of supply continuing to be on the market. Given that prices didn't necessarily spike, obviously, to over $60 a barrel, is the oil market still pricing in a recession? Is it pricing in a recession?
Well, I think OPEC did a pretty good job of trimming production to meet the slower demand that's set to come in 2020. I do think ultimately you will see production and demand come in line, and it could happen a lot faster than you think.
John, I want to get your thoughts on this Aramco IPO, which seems to be off one day, on the next. We're now looking at possibly a $1.5 trillion valuation. That sounds outrageous, but it actually would be lower than what the Crown Prince was looking at. He was hoping for a $2 trillion valuation. If and when Aramco goes public, what does it do to the oil market?
Well, to be quite honest with you, I think $1.5 trillion is a far better valuation than the Crown Prince suggesting $2 trillion. I do think over the course of the next year, I think it's all about investor sentiment at this point. And investors want to feel that they're investing in something where there's value. They're getting in at a good price. I do think that a lower valuation is also going to help that stock fetch a higher dividend in a year's time and bring it more in line with other industry giants like ExxonMobil and Royal Dutch Shell, which both fetch north of a 5% dividend.
John, why wouldn't Aramco be worth $2 trillion?
To be quite honest with you, I'm going to side with the street here. You know, the underwriters, they've done their due diligence. I'm going to side with Wall Street on this one. And it certainly gives investors a good feeling that they're getting in at a good value. So.
And let's talk about the range. Are we just going to be bound range here on crude oil? We'll go bouncing between, 53 and 57 a barrel?
You know what? I think I just lost you there. Crude oil prices right now, we have seen them bounce off of that 52 to 50 level. I do still think there's a lot of bearish forces that remain in that market, that it's going to take some time for that chart to sweat off the bearish forces. I think in the meantime, we could see prices rise to 55, potentially 57, but I would largely expect them to stay capped under there here in the near future.
Excellent job. For not hearing me all that well, John Caruso actually answered the question. John, thanks a lot.
Sure.
Have a great weekend. All right, Apple is the apple of our eye today because it's trading near its highest levels in more than a year, and it comes in the wake of the company pulling that controversial app linked to the Hong Kong protests. China had complained that the app let protesters target police. Tech editor Dan Howley joining us now. Talk to me about the optics of this. Some people are saying that CEO Tim Cook caved. This is a political move. It wasn't about, you know, being altruistic and saving the police in Hong Kong.
Yeah, there's two basic narratives here. There's the Apple narrative and then the critics' narrative. Apple's narrative is we were trying to protect police as well as citizens in Hong Kong, basically saying that this app, which allowed protesters to see where police were, to see where barricades were or blockades were, was allowing criminals to notice where police weren't and then target citizens. The critics, however, are saying that this is Apple caving to China's pressure. They obviously rely on China incredibly heavily for their revenue, so they don't want to upset them in any way. So that's why they pulled the app from the App Store. It's also worth noting that in addition to this HK Maps Live app that was allowing people to see where police were, they also pulled the Quartz app, the Quartz News site app, as well as blocked the Quartz site. China did, but Apple pulled the app from the App Store in mainland China. And a lot of the speculation is this is related to the fact that they've been covering the Hong Kong protests pretty heavily. And so China doesn't want that to be able to be around.
Dan, Apple stock all-time high today. Are you surprised by that? You were at the Apple product release event a couple weeks ago. They're obviously very exposed to the slowing global economy. Are you surprised by why the stock has just rallied the past couple weeks?
I'm not. Obviously, they've received some upgrades, some nice views from analysts. But, you know, I think one of the interesting factors that a lot of people were missing out on from the event was the fact that post-event, introduction of these new iPhones, a lot of people were interested in buying them. And, you know, these are people that have held on to their phones from the 6 and 7, and they see these new devices and they go, oh, maybe it's time for me to upgrade.
Is this the super cycle we've been looking for?
I don't know if it's going to be the super cycle, but I think it's going to be a lot better than what analysts were originally predicting, just because of, you know, my own experience seeing people hyped up about this phone and then going out and actually purchasing it, and you're already seeing it in people's hands. I also think there was that kerfluffle about, oh, well, they're going to be giving away a year of Apple TV Plus to everyone that buys a device. I think, though, that that's really just Apple's way of really locking you in, and that's their way of doing things. Get you
in the ecosystem. We should just mention quickly, Google also pulled that app.
They did.
That we've been talking about. It's not just Apple.
Yeah, that was their gaming app that they pulled, yeah.
Apple will get you one way or another. Dan Howley, thank you.
Thank you.
The world's largest retailer is shaking up its executive ranks. Walmart has named John Furner the new president and CEO of Walmart U.S. starting November 1st. He will be replacing 5-year veteran Greg Foran. Alexis, what do you make of this? This was somewhat surprising news.
You know, though, Furner, I love the Furner story because he started out at the low rung of the company. What did he start out as? You know, an associate, an hourly associate in 1993. Now he's CEO of Walmart U.S.
Just like Doug McMillon started in the
That's
store.
right. So, I mean, you know, there really is, I guess, that opportunity for growth there. Now, of course, he was CEO of Sam's Club since 2017. They did see a turnaround there, but he had to make some tough choices. He had to close over 60 stores. He had to lay off 10,000 workers, but he got the job done. So there seems to be, hopefully, some confidence that Furner can continue what Foran was doing at the U.S. stores.
Two things that I like. One, that he has extensive experience in China. He was the chief merchant in China. Very important because that's where Walmart gets a lot of its stuff. And then secondarily, I remember talking to Furner when he was announced as Sam's Club CEO, and I like that he kept it straight to me. He said, we have to close stores. We have to get our business right. We have to get our merchandise assortment correct. And he went out and he did it, and now Sam's is winning.
And now Furner needs to work closely with the CEO of Walmart's e-commerce division, Mark Lohr, something that reportedly his predecessor couldn't do all that successfully.
True that.
So we'll see. And by the way, Foran, is from New Zealand. He is now going to become CEO of Air New Zealand, so out of retail altogether, different industry.
He's done a heck of a job. He completely turned Walmart US around.
Yeah, absolutely. All right, coming up here on The First Trade, Friday is finally upon us. Finally, we'll talk about the biggest moves of the week and what you need to get ready for Monday. Flashback Friday is next.
Take another quick check of the markets. The Dow is up. Wow, 370 points. Talk about a happy Friday over at the NASDAQ. Oh yes, you're looking at some green too, up almost 2%. Last but not least, the S&P 500, also in the green. We'll be right back. Welcome back to The First Trade. You're seeing a rip-your-face-off rally here on Friday. The Dow is up 371 points. The S&P 500 and NASDAQ are solidly in the green, all thanks to optimism over those trade talks happening right now in D.C.
Now for a look at some of the companies the Yahoo Finance team is watching for you today. A scathing new review faults the FAA and Boeing for the issues around those grounded 737 MAX jets. The review by an international panel of air safety regulators says Boeing did not properly explain the MCAS system on the jets, and the FAA was not equipped to really understand it. Boeing and the FAA say they are now reviewing that report. And there is somebody new in the driver's seat at Renault after the French automaker fired its CEO Thierry Bolloré just days after Nissan shook up its leadership. Renault's current chief financial officer has been named as interim CEO. Renault and Nissan have struggled to get some stability back into their alliance following the finance scandal surrounding former chair Carlos Ghosn, who was ousted last year. And the struggles escalate for Victoria's Secret. The executive vice president of stores is stepping down after more than 16 years for personal reasons. The L Brands owned company also laying off about 14% of its corporate staff here in New York and Ohio as more customers turn to rival retailers. Tilray and Anheuser-Busch InBev are teaming up in Canada. The two brands will commercialize CBD-infused non-alcoholic beverages in a joint venture called Fluent Beverage Company. Fluent is looking to have the drinks on sale by next month, depending on Canada's regulatory timelines. And Nike is ending its Oregon project, which supports elite track athletes after a top coach was banned for a doping scandal. This decision came less than 2 weeks after coach Alberto Salazar was banned from the sport for 4 years. A probe revealed that Salazar distributed testosterone and tampered with evidence. He is appealing that decision.
We're winding down another week here, and you know what that means. It's time for another Flashback Friday. Alexis, for me, it's been a heck of a week for these trade talks all over the place.
Yeah, but it looks like at least Wall Street's really banking on at least some sort of a deal, even a piecemeal deal, if it's not, the whole kit and caboodle, or at the very least a truce, which would mean no additional tariffs. And the market is seeing that as a major positive this morning.
And like Alicia Levine just told us, you may not get a trade deal plus another interest rate cut. That could lead to a big, major stock market rally. And you're probably seeing some of that happen today.
And maybe the thing that's going to push the S&P above 3,000. All right, one of the big earnings reports this week, of course, we're really going to start in fervor next week, was Levi's. Remember, there's still a newly IPO'd company. Wall Street seemed to like this report a little better, though, than the previous quarter.
Second earnings report as a public company for Levi's. The initial one-day reaction to the stock was negative for the second time. And I think a lot of people out there in Wall Street remain concerned about how their business is doing at department stores. It's challenged. The company is strong pretty much everywhere else. Even in China, sales were up, I believe, over 17%. That's really good. It's all about those department stores still, and they're dying.
And, you know, some of the positives here to hold on to, like you said, China's strong, international sales overall. They're also targeting women, and they seem to be making strides there. And e-commerce is growing. So I wonder how much of this sell-off was really warranted.
And besides Levi's, we also had our Yahoo Finance All Markets Summit yesterday. Really phenomenal event by the team. I talked to Mindy Grossman, CEO of WW International, and Paul Schneider, the CEO of Susan G. Komen. Here's what Schneider told me about income disparities in the state of the healthcare market.
It's not just about, where you live. It's also cultural. There's a lot of underlying factors. There's a lot of work to be done, and we are doing that work, but it's person by person, city by city. It's a lot of really heavy lifting.
So big time work there by Paul Schneider at Susan G. Komen to fight breast cancer. But besides that, looking towards next week, bank earnings. Earnings season is about to start.
That's going to be the big one. Here you've got it, October 15th, 16th, and 18th. Mark these on your calendars. The 15th is a big one, though. 4 companies, JPM, Goldman, Wells, and Citi.
Bring it on. Let's do it.
All right, that's going to do it for this first trade this Friday morning. I'm Alexis Christoforous.
And I'm Brian Sozzi. Have a great weekend. Now let's get one more check of the markets with Inez Ferre down at the New York Stock Exchange. Inez, big time rally.
Yeah, big time rally. That's right, Brian. All based on trade optimism. You've got industrials and financials, which are leading the gains. We're watching a Wendy's this morning. This is after Wendy's has said that it's expanding into Europe. Wendy's CEO told analysts that it's going to be expanding into Europe, debuting in Europe in the next 12 to 18 months. This, of course, is part of Wendy's strategy to jumpstart growth. They're also expanding, of course, their breakfast nationally in 2020. We're also watching Fastenal surging after beating on the top and bottom line. Their growth drivers being industrial vending and on-site locations. And also Apple opened at an all-time high. It's been a trade bellwether stock, and several Wall Street analysts have recently written some optimistic notes regarding Apple. Stay with us. Wi-Fi AM starts right after the break. Don't go anywhere. We'll be right back.
Good morning. Happy Friday morning. Welcome to Wi-Fi AM at Yahoo Finance. I'm Dan Roberts. We've got Scott Gam and Heidi Chung here on the couches to discuss all the business news on this Friday. Markets right now are up. We are seeing green across all three major averages. The Dow up more than 370 points, 1.4%, and the Nasdaq is up 1.6%. As China trade talks will continue today in Washington, and hopes for some kind of deal seem to be higher than they were just 24 hours ago. President Trump says that he will meet in person with China's Vice Premier Liu He later today at the White House.
We're going to see if we make a deal, but they want to make it. We're going to determine whether or not we want to make it, but they've been very nice. And today I got a call from one of the top representatives. He said, "Congratulations, Mr. President, on having a truly great economy." That's pretty nice.
And joining us to discuss more from D.C. is Jeff Moon of China Moon Strategies. Jeff, thanks for coming on.
Thank you.
Well, what do you make of the chatter we are getting today? So often, day to day, we hear something and the markets react in kind, whether it's positive or negative. And then a week later, well, nothing has really moved the needle. But of course, today we do have an in-person meeting. So what do you expect? What's the optimistic case here?
Well, I think the optimistic case is that there is a mini deal. I don't think that anyone is thinking there's going to be a comprehensive deal that's going to take care of everything. Things that are being discussed are that on the American side, they might grant some licenses in non-sensitive technologies to Huawei. On the Chinese side, the main thing that's being offered is agricultural purchases. The Chinese really need the pork. They really need the soybeans. In no case do I see anyone making any real concessions. These are all self-interested actions that both sides would be taking were it not for the trade war. So they're giving themselves permission to do things that they'd like to do anyway.
Hey, Jeff, it's Heidi here. So let's say we do get a skinny deal. Do you think that's enough to pacify the markets for more than, let's say, a week or two? Because we've seen this scenario before where the Chinese have agreed to purchase agricultural products, but they back out of that every single time. So what do you think is the situation this time around?
Right. All of it depends on follow through. The Chinese actually, on the agricultural side, it appears that they have been making purchases steadily in the past few weeks. So there's a track record there of performance on some of these promises that are going to be made. But for example, there is talk about commitments on the financial sector, opening up the financial sector within the next year. I recall a few years ago, the Chinese premier came to the General Assembly of the UN and announced that a ban on American pork or beef in China was going to be lifted. And then when we looked at it, there were actually 3 or 4 more approvals that were actually required before someone could actually sell those products. So this is an example of how we need to look and see and examine very carefully whether there is performance. Another indicator of whether the parties are serious is what kind of follow-up meetings will there be? If things are going well, then you would think that USTR Lighthizer would be going to Beijing sometime soon for more negotiations. And then all of that is leading to APEC on November 16th or 17th, when the two leaders are actually going to meet and could maybe move things forward a little more.
Well, Jeff, I want to ask you, because the last time there was some sort of a deal was back in May, and then according to all the reports, China backed out of that. Now, I'm trying to think about what has changed since then. And of course, what has changed is that there are tremendous protests in Hong Kong. So what do you think that plays into the calculus of the Chinese right now in terms of coming to the table and getting a deal done with the U.S.?
Well, you're right that the Chinese decided to back away from the 150-page document that they were negotiating back in May. And among the things that have changed are the pressures on both of the leaders. I think that both Xi Jinping and Trump are politically at their weakest point of their tenures. Xi has been directly threatened by what's happening in Hong Kong, which is a direct challenge to China's rule in Hong Kong. Trump, in the meantime, is under a lot of pressure due to the impeachment inquiry that's now underway. So another reason for them to come to this deal is, frankly, to develop some good news and change the subject.
Hey, Jeff, let's wrap this way. Let's say we do get a mini deal, as you described it. What do you think that would do for the markets?
Well, any minor positive news drives the market up. I mean, the market is up 300 points today, for example, just on speculation that there's going to be a deal. So any positive sign can only be good for the markets.
All right, believe it. Jeff Moon of China Moon Strategies, thanks for coming on Wi-Fi AM.
Pleasure. Thank you.
Well, let's talk about the NBA's ongoing crisis in China. The Lakers and the Brooklyn Nets played just last night in Shanghai. It was an exhibition game, and it wrapped up one of the wildest weeks in the NBA's history. Of course, this all started when Houston Rockets GM Daryl Morey tweeted support of the Hong Kong protesters. That tweet was deleted, but it has caused a major problem for the NBA with its business partners in China, who are still angry, and many have threatened to walk away from NBA deals or have already done so. Just yesterday, I sat down with former NBA player turned ESPN NBA analyst Jay Williams at our Yahoo Finance All Markets Summit. Here's what he had to say about the controversy and his advice to players.
The NBA should remain unapologetic about where they were and how they handled the situation, and less is more. And I would say this from the player side. Now I think NBA has moved away from more institutional and into more individuals as far as it relates to guys, being able to be creative with their own brands, if that's LeBron James or, James Harden. I know he made a quick comment, even though I would not advise any player to speak out on that issue. And, we get into this thing, freedom of speech, but with freedom of speech are repercussions.
All right, Jay Williams says he would not advise any player to speak out on the issue. Brooks Melchior from Sports by Brooks has some thoughts on this and joins us now from LA. Brooks, thanks for coming back on.
Happy to do it.
So let's talk about the Daryl Morey angle. You and I were chatting about this on Twitter earlier this morning, and you expect to see him gone from the team soon, whether that's by firing, whether that's by resignation. What do you think is going to happen with that?
Well, understand that he is separate from the NBA as far as China is concerned in the way China has treated him. If you look at state-run media, if you look at TV editorials by Chinese news pundits, if you look at print editorial, again, from state-run media, which is all-encompassing, as I think we all know by now, Daryl Morey is a flashpoint. His name is burned into the minds by now of Chinese across the country. So when you talk about the embargo and the sanctions, I think those are all going to be rolled back for all NBA teams with the exception of the Rockets. And if that happens, it's tied directly to Daryl Morey. So what are you going to do with if you're the Rockets? And now keep in mind that that Rockets team is worth $2.2 billion. $200 million of those dollars are attributed to its relationship in China. The Rockets are China's team because of Yao Ming. So you can understand why I think Daryl Morey is right now, I think, in a very unfavorable position. I'm not saying the Rockets are going to fire him necessarily, but I wouldn't be surprised if he quietly moves on to another team in the next year or so.
Now, Brooks, you and I agree that certainly the NBA or the Rockets can't really fire him at this point because Adam Silver has taken this big stand and said, we are not in the practice of regulating what our players or our people say, so they can't really fire him at this point. But yeah, I guess your prediction is that he would resign or quietly switch teams. But don't you think that even if that happens, it would appear to everyone like he was forced to do so, and it would basically be the same outcome? It would contradict what Silver has said publicly about supporting free speech.
Well, I think a lot of it's going to be timing. A lot of it's going to be the circumstances if and when he departs. Let's say the Rockets have a really bad year, and they potentially could be. The Harden-Westbrook situation could blow up. But I really think it's important to understand that the NBA is responsible in large part for what's happening to Daryl Morey because of the initial response by the NBA. You may remember, Daniel, they put up 2 press releases, one in Chinese language only for the benefit of the Chinese people, and that release threw Daryl Morey under the bus. James Harden's subsequent apology threw him under the bus. His own owner threw him under the bus. Joe Tsai of the Brooklyn Nets threw him under the bus. So that's why the NBA is in this situation. A lot of it's going to depend on media coverage and the circumstances of his departure. I wouldn't necessarily rule out him being able to lead the team, move on to another team in a year or two, and there's not a lot of discussion about it.
Hey, Brooks, so I've heard some arguments that, you know what, in this situation, the NBA actually might have the upper hand here just because it's so big already in China. Now, those folks are saying, well, that's going to force the Chinese to not perhaps block the actual season when it starts. So what are your thoughts on that argument?
I completely disagree. And I think you've got to look at Xi Jinping and the difference in the country since 2012. Everything that is happening right now is driven by the Chinese government, and that's precisely why the NBA has now canceled all media availability with any authoritarian regime up as down. There's nothing you can say publicly right now. They've totally backed down, and Adam Silver is always, as long as Xi Jinping is in power, going to be beholden to the NBA. So I think the opposite's probably true.
All right, some interesting thoughts, and we'll keep watching this situation, Brooks, because clearly the problem is not going away just yet. Brooks Melchior of Sports by Brooks, thanks for coming on.
Thanks.
Well, coming up on the show, the GM strike continues, and Mary Barra has now met with the union. We will get the latest from our car man, Rick Newman. Stay right here. Welcome back to Wi-Fi AM at Yahoo Finance. Let's see what markets are doing right now, because we are seeing green, especially on the Dow, up 390 points on anticipation of this U.S.-China trade meeting today. Let's get some more insight on what other stocks are doing. Let's check in with Inez Ferre, live on the floor of the New York Stock Exchange. Hi, Inez.
Hi, Dan. Yeah, it's all really about trade optimism today. You've got the Dow that's up almost 400 points, and you've got materials, industrials, financials. All of those stocks are leading the gains. I want to show you, though, what's happening with Roku. Roku is seeing a pop after being upgraded at RBC Capital to outperform with a price target of $155. The analyst note there says that Roku's valuation is attractive again after seeing about a 31% pullback from its recent highs. And also, an SEC filing shows that Citadel and Citadel's founder, Ken Griffin, took a 5% stake in Roku. Now, this has been a pretty good week for Roku because it also got an upgrade earlier this week to outperform at Macquarie, with a note there saying that, yes, there's competition, but the playing field is big, and Roku is a leader in this industry, and they will find a ready market as they expand abroad. So certainly this past week, a better week since the stock has seen a pullback from its recent highs in early September, Dan.
Love talking about Roku. It's such an interesting stock, especially because for now, It's just the pipes. It's the device. They're not worried about doing original content. Thanks for that, Inez.
Thank you. Thanks, Dan.
In the first criminal proceedings now related to Rudy Giuliani's dealings in Ukraine, federal prosecutors have indicted Lev Parnas and Igor Furman, two of Giuliani's business associates who worked with him reportedly to seek information in Ukraine on Trump's political rivals. And Giuliani dined with the two men at Trump's hotel in D.C. just hours before they were arrested, waiting to board a flight abroad with one-way tickets. Now, moments ago, U.S. Ambassador to the European Union Gordon Sondland said that he will testify in the House impeachment inquiry. So a lot happening here with Rudy, and Yahoo Finance's Rick Newman joins us now to discuss. Rick, what do you make of this? Two Rudy guys indicted.
Oh, it gets frothier and frothier. Ooh. I mean, it is really a fascinating story. Trump says he doesn't know either one of these guys. He has no idea who they are, but they did visit the White House. There is a photo of Trump with at least one of them. It reminds me of Trump saying, I have no knowledge whatsoever of these hush money payments to anybody. And it turns out he actually wrote the check for the hush money payments. So we'll see what happens. I'm not sure that these two Ukrainian guys are going to implicate Trump in anything, but I mean, I think Trump's in enough trouble as it is with these other allegations of, trying to get the Ukrainians to investigate Joe Biden.
So nothing like when someone says, I don't know those people, and then immediately it turns out there's a photo of you with them.
Check your Twitter account.
But granted, he's taken photos with a lot of people. I do think that's true.
Yeah. But would you say this is more smoke than fire at this point?
No. I mean, we should remind people what this is all about. This is about foreign money making its way into U.S. campaigns, which is illegal. I mean, it's illegal to accept campaign contributions from foreign interests, and that seems to be the case here. So there is a lot going on with regard to Ukraine. I mean, I don't assume we know all the whole story, or anywhere near the whole story. So how much more is going to surface at this point? I don't know. I mean, Trump has basically already acknowledged that he was trying to get these foreign investigators to dig up dirt on Joe Biden. I mean, that in itself is possibly criminal, and we've got all this other intrigue around this now.
What's the latest with the impeachment inquiry, though? So what are the next steps here?
I mean, it's going full speed ahead. I mean, there's going to be some testimony next week. We mentioned Ambassador Sondland. The question, so even though these people, there are at least 5 important people, I think, supposed to testify next week. That doesn't mean they're going to testify, because it's possible that at the last minute the Trump administration will block these people. Some of them are still in the Trump administration. So we're going to have this Ambassador Sondland. Apparently the Trump people think that could actually be beneficial to Trump, because he is the one who in the text messages said, to somebody else, no, I think you're wrong. I think this is not a quid pro quo. I think Trump is not using holding up the aid as a bargaining tool to get some dirt on Biden and Ukraine. So he may be actually favorable to Trump. But on the other hand, the Trump team thought it would be good for Trump to release a transcript of the call, and they were completely wrong about that.
All right, well, Rick, stay with us, because obviously you are the car guy. We need your insights on this. But GM is urging the United Auto Workers Union to, quote, around the clock to reach an agreement and end the strike that has lasted for more than 4 weeks. The pressure comes after a meeting yesterday between GM CEO Mary Barra and UAW President Gary Jones. It was the first time the two sides met face-to-face since the union workers went on strike, despite GM's headquarters being housed in the same complex as the Auto Workers Union. So what are the latest developments, I should say, on this? Because to my knowledge, didn't GM also send out a email to their employees kind of breaking all of this down?
Yeah, I mean, the negotiations are secret, so each side leaks what, details that it thinks are in its advantage. And it sounds as if they have resolved some sticky issues, including pay, of course, and that they may be closer to agreement on this issue of temp workers and making more of the temporary workers permanent, making them permanent workers sooner, and things like that. One of the big sticking points seems to be a union demand that GM move production of a few vehicles from Mexico back to the United States. And GM has said this year, actually, that they were going to close, I think, 4 North American plants. I think one of those was in Canada. And the workers want new model production to go to those factories. So keep those factories open. And I think it's unlikely GM's going to do that. I mean, there's a big difference between a modernized factory you built in Mexico within, the last few years and an old factory here in the United States that would cost a lot to get up to speed and make it more efficient. And, GM and the other 2 domestic automakers, they do have a labor cost disadvantage. I mean, their labor costs more than everybody else making cars, including transplants, the foreign automakers who make cars in the United States. Those plants are mostly non-unionized, and labor costs less.
Well, I wonder what the economic impact of all this is, because we're all worried about the manufacturing sector here in the U.S. The data has not been good, and yet you have these 2 sort of one-off items, right? GM's issues with the strike, and then Boeing with the 737 MAX issues. So these are our 2 sort of biggest manufacturers in the U.S.
Yeah, and economists are now saying that these 2 issues are big enough to move the needle on manufacturing data, and that it's going to make the next set of data, the next couple of months, is going to look worse than it otherwise would. And we are in a manufacturing contraction, a modest recession in manufacturing. It's going to make it worse.
But also, Rick, the labor market as well, it's going to be impacted as in the next month's figures, because the previous figures, it wasn't included, right?
It's a big number of people.
Yeah, so it's going to be it's just going to be a skew in the numbers. Is it enough to move the numbers on for total labor force? Maybe, we're talking 1/10 of a point or 2, but it'll skew. And then, assuming the strike is over at some point, I mean, it has to end sooner or later, they will go back to work and we'll get back to the normal line. I think Scott raises the more important thing, which is this is a legitimate problem in the manufacturing sector. GM is still big enough. It's not what it used to be. It's not the powerhouse it used to be. But I mean, they have 10,000 suppliers in the United States. I mean, some of those are medium-sized companies, some are small companies, but those companies are just waiting I mean, they're not shipping GM parts. They're not doing anything because GM does not, automakers don't stockpile parts the way they used to. It's just in time manufacturing. You only want the components when you need them on the assembly line. So there are a lot of companies that are not doing anything right now because of the GM strike.
Worth mentioning quickly, yesterday at our All Market Summit, we had Shad Khan there. He's the owner of the Jacksonville Jaguars, but he made his money as CEO of a car bumper maker, which sells its parts to all the big automakers, Flexingate.
It's still a huge business.
Yes, and he said he believes the auto manufacturing sector is the best it's been. But maybe he's being a little over-optimistic. He said it's a great picture.
The reason for that is leading up to GM's bankruptcy in 2009 and Chrysler's also, the domestic industry had way too much capacity. And by virtue of the bankruptcy, that really helped GM and Chrysler get rid of all this excess capacity. Ford had to do it more slowly over time. They're still struggling with that a little bit. But the domestic auto industry is in pretty good shape for that reason.
Good for suppliers.
They've downsized, yeah.
All right, thanks, Rick.
Thanks, guys.
4 weeks of the strike. We will monitor and see if it ends soon.
Yep.
Now, we're going to take a short break, but we want to remind you right now we are seeing a huge rally. Right now, the Dow moments ago was up just more than 400 points. It's 1.5% on optimism and excitement about the meeting today between President Trump and Liu He, the China trade representative. So we will see if we get what some analysts are predicting, a mini deal. But right now, markets rallying. Stay with us after a quick break. Welcome back to Wi-Fi AM at Yahoo Finance, where we are seeing a market rally on the news in anticipation of a trade meeting in person today between President Trump and Liu He. Look at the Dow right now, up almost 400 points, and President Trump is tweeting about the meeting with China. The president tweeted just moments ago, one of the great things about the China deal is the fact that for various reasons, we do not have to go through the very long and politically complex congressional approval process. When the deal is fully negotiated, I sign it myself on behalf of our country. Fast and clean. What do you think?
It was just yesterday that he said, well, do we want a deal? I know that China wants a deal, but do I?
Well, and now he's saying one of the great things about the deal as if it's a given.
Right. I mean,
let's see what happens.
Exactly.
Right? I mean,
we can't.
Trump treats or Trump treats. There's nothing else to. You can't analyze them.
Give it 24 hours.
You just have to read
Everything
them.
might change.
Everything might change. Not even 24 hours. In the next 12 hours, at 4 p.m. when the market closes, we might see something else from him. So
stocks up, market doing great. Thank you, Mr. President.
All right, I'd rather talk about trending tickers. So let's do that. The first one is Slack. The corporate communications platform said it had more than 12 million active daily users in September. This is a 37% increase from a year ago. In a blog post, Slack's vice president and general manager of platforms said, quote, "We're seeing a generational shift in how we collaborate at work. People are moving away from email and into channels, away from legacy suites of badly connected products and onto new customizable platforms that can more easily connect the tools they use to work." Look, I mean, you have to now look at Slack in comparison to Microsoft because they have a robust messaging platform. And I think the issue with Slack is they're not really scalable, whereas if you're a Microsoft's cloud customer and, of course, a user of the products that we've known for decades, Windows, maybe you would want to use their messaging platform instead of Slack.
How about profit, too? It doesn't have that. Now, it's inching back toward its IPO price. We have written a lot on the website recently about the last 6 months of unicorn IPOs. Later in the show, we're going to talk about Pinterest, which has been an exception. All of those unicorn IPOs, almost all, are trading below their IPO price, including Slack. But today, on this good news, inching back toward $26, the IPO price.
But you know what?
Still down.
No one's talking about with IPOs. Like, let's wait for next year? Like, give
Right,
it a
it's too
year.
soon. It's too
right?
soon.
Everyone wants to judge it 3 months,
they
6
do.
months after.
It's just so fun, though, Scott, to judge right away.
But
And when those lockup periods expire, it's always really interesting as well because we see a big plunge as well.
Although no lockup with Slack.
Direct listing. But to your earlier point about Microsoft, what's interesting there, though, is that Microsoft obviously has this immense ecosystem, right? Where people, like you mentioned, the cloud, they're into the Office, they're into, they use Word and Excel and all of those things, whereas Slack doesn't really have a necessary ecosystem. Right. And so if this company wants to be a contender in the space, I think that they need to bring customers into an ecosystem of sorts.
What is different about Slack than any other messaging platform? I mean, it's such a basic tool. Like,
it is.
I don't really care if I'm using Slack or Microsoft, right?
Well, that's interesting. Now, I haven't used Microsoft's, but I will say, and of course, probably more serious people at serious businesses would say, well, who cares about the look and the feel? It's a functional tool. But on our staff, we used to use internally Atlassian HipChat long ago, which is still out there, and some people use that. And that sort of was very 1.0, very clean. It was like using the Bloomberg terminal. It was just text. Now we use Slack. Slack has a feel to it. Right. I would even say a fun interface. Once you know how to use it, it feels familiar. You like it. Things are easy to do. You push the slash to do commands. I'm not sure how Microsoft's work, but I think Slack has its own unique
staying power.
Yeah. I think it's sticky.
Yeah, it's a brand that people like.
You enjoy using
Elastic? No.
It's got good UX. All right, we're going to go to another short break, but coming up, a leadership change at Walmart we will discuss. Plus, we will explain how Pinterest has stayed out of the unicorn IPO negativity after the break. Welcome back to Yahoo Finance. Markets right now are rallying. The Dow is up more than 400 points on optimism about a trade meeting today. But let's talk about Walmart, the world's largest retailer. It is shaking up its executive ranks. Walmart's U.S. President Greg Foran is out, and his replacement is John Furner, who comes from Sam's Club. Now, the change takes effect November 1st, just before the holiday shopping season starts. New U.S. CEO, Sazi. So what will this mean for Walmart? Brian Sazi covers Walmart very closely.
Well, I think Furner, well, first of all, Greg Foran, he pretty much saved the U.S. business. When he started a couple years ago, the U.S. business was the absolute tatters. It was absolutely depressing to go to Walmart. So he fundamentally changed his company, took out a lot of inventory, just got things working in the right way. But John Furner, he started working in the aisles in 1993 in a Walmart store, a true rags to riches story.
Just the like Garden Center.
Just like CEO Doug McMillon. But I do like two things with Furner. One, he has extensive China experience. He was the chief China merchant for Walmart China. That is a big win, especially when you're a Walmart US. You get all your stuff over there from China during a trade war. And number two, I remember when Furner took over for Sam's Club as Sam's Club CEO a couple years ago, I think 2017, he got on the phone with me and said, you know what, we're going to have to make some tough changes. I think clearly Furner knows what he's doing. This is a very experienced executive. He's not afraid to make tough decisions.
But, you know, some of the acquisitions, you could argue, may not have panned out as they wanted. I mean, look at what happened a couple weeks ago. Bonobos.
I'm wearing my Bonobos pants.
I mean, they had layoffs because there are reports that their e-commerce division is not profitable.
Right.
So what do you make of something like that?
Well, here's the backstory, I think, on that. You know, Mark Lowry, he's had a lot of wins. He's made a lot of, I think, acquisitions that haven't worked out accordingly. But right now you have to get these two businesses working very cohesively, the stores business and the online business. They've done great work, but I think they have to take it to the next level in terms of integration. Foreign is known as a great old school retail merchant. He's in the stores, he's wearing his Walmart vest, he likes to see things, he likes to touch things, he likes to talk to people. Yes, but now it's time to take it to a guy who appreciates the store level stuff, but also understands what's happening online.
Well, I don't know about investors, but Wall Street analysts are not happy about Foreign leaving. They're saying this is a huge loss for Walmart. I mean, I will say, though, he was the one who sort of spearheaded this turnaround, like you mentioned. So is Furner coming in when it's already good and he just barely has to prove himself at this point?
Well, Furner has extended. He rose to the ranks at Walmart. He knows the company's culture. He knows what it takes to get ahead in a very competitive environment that is Walmart. And he has driven successful results at Sam's Club. He has re-accelerated sales. He's got profits moving back in the right direction, in part because of those store closures. This is not some inexperienced schlub they pulled off the street to run the business. This guy knows what he's doing, and I think Wall Street needs to give him a little respect here.
Let's make sure we also mention, management shakeup, and we're talking about making sure that you do well with the business, but the company is doing very well. It's not a bad situation that needs fixing.
And obviously, the headline here is that you never want to see a retail exec leave before the holiday season. But keep in mind, Foreign has essentially helped build the inventory collection for the holiday season months and months ago. In fact, probably last year. So all the inventory in the stores, all the marketing, all that planning was helped by Foreign. So all Foreign has to do is just make sure everything hits the stores correctly, and away he goes.
Keep the trains running on time. All right, Sazi, thanks so much. Well, almost all of the recent hotly anticipated tech unicorns that went public in the last 6 months are now trading down from their IPO price. Uber, Lyft, CrowdStrike, Peloton, just to name a few. But Pinterest is up more than 30% since its IPO price. Now, the social media site has kept itself out of the unicorn funeral conversation, and the lesson that gives to other tech companies might just be more quiet and keep the hype low. Analysts say they like Pinterest user growth, its expansion into new markets, and the fact that more users are pinning videos lately. And of course, advertisers like videos. And the founder, Ben Silbermann, really stays out of the limelight. Useful to bring on someone who uses and likes Pinterest, and that is our colleague, Julia LaRoche. So, Julia, let's talk about this, because the three of us don't use it, but it certainly interests me as one of the unicorns that has actually done well.
Are you ashamed to use it?
Y'all, I want to be private on my Pinterest. I don't want anybody following me, but I use it. I'm like,
don't follow her.
Just leave me alone. Leave me in peace. But yeah, no, I mean, it's useful. I was planning a wedding earlier this year, and I was like, okay, what do I want my bouquets to look like? I want peonies, but I don't know how to put together bouquets, so I would use Pinterest, type in my peony bouquets, and it's kind of make my boards, figure out what I want for my aesthetic. And now I'm thinking, okay, well, how do I want to decorate my apartment?
Oh, that's good.
Or I saw this on my mini honeymoon. I saw this awesome bar cabinet in the Soho Miami Beach house, and I'm like, okay, I need to find this cabinet. Couldn't find it anywhere. Found it on Pinterest, y'all.
Really? Really? And this is great, Julia, because you started by talking about the wedding, and I feel like there is a sort of stereotype about Pinterest. A, that it's all female users, and we've had people on the show say,
I think there are guys on there. Come on, there are totally guys on there.
And that it's going to become more balanced, even more so soon. But also, there's a stereotype that is sort of the primary use case is planning a wedding.
Children, decorating, but look, it's great. Or even fashion, or hair
But you're giving
ideas.
us some other cases.
Yeah, but okay, well, I'm not using Twitter to go plan my wedding. They'd be like, shut up and get off. Or Facebook, y'all don't want to see that in your feed. So it's a nice community. It's great for sharing. I mean, I'm thankful for everyone who posted images of these bouquets. I'm not kidding. Like, I literally took the screenshot, sent it to the florist, and they replicated what I found on Pinterest.
But if you don't want people to know you're on it, or you don't want to like interact with people on there, is it not a social media?
No, I think so.
They say it's a visual discovery
My sister-in-law has hundreds of followers, and she follows hundreds of people. For me, it's like, okay, I'm sometimes real talk, sometimes I get a little insecure about what I want to do or design, and I don't want people like looking at everything I'm doing, so I just kind of like to look at what everyone else is doing and put it together. So this is my personal take.
We were trying to get a grasp to see how many of our colleagues actually use it, and quite a few of our colleagues do actually use it. But to me, it seems as if the growth story here is, okay, we're going to expand internationally. It's going to be this huge thing. And it's not just females that use it. Men are also going to use it. So that's an untapped market in and of itself, according to a lot of bulls, right? But I just don't see what the strategy is here.
Well, it's a great way.
Ads.
No, and going back to the social media thing, you don't have anyone making you feel uncomfortable. That's so.
A lot of people say this.
I don't want a lot of followers.
It's a nicer
But I've never felt uncomfortable, even if someone does follow me. It's just my own personal thing.
And
I'm
just
not
very
there to get
quickly,
the followers like Twitter.
The main thing with Pinterest's stock, no regulation risk. No one is talking about breaking up Pinterest. Everyone's talking about breaking
They
up.
didn't like sway the election or something, so.
And worth mentioning, I think another reason that Pinterest has done well, it had a very strong earnings report. Its first earnings report after going public came out, beat expectations on revenue. Now look, still has losses, still a company that is not profitable, but growing very nicely. And again, I want to stress this, what people I talked to said about Pinterest, quiet. It has sort of been quiet, intentionally so.
Well, I think that's actually a good point because I honestly forgot they went public because all we did was, I'm sorry Pinterest, but all we did was talk about all the ones that failed, that just like tanked this year. And I mean, other than Beyond Meat, which is
too soon to tell with Pinterest as well, guys. Too soon to tell.
True.
Still worth discussing. All right, Julia, thanks so much. Useful to have you on. Maybe soon I'll try Pinterest. We're going to go to a short break, but coming up on Wi-Fi AM, Porsche partnering up with Boeing. We'll explain.
Welcome back. I'm Ines Ferre here with Pete Tuchman from Quattro M Securities. Pete, we're looking at the Dow that's up 400 points. What do you make of all this?
You know what? It's look. This is 400 points is sort of the new norm on positive news, but I kind of feel like today is a little bit of a. It feels strong. It feels positive. About the way the information about a trade deal. This has been going on for 18 months. Yeah. We've had 13 deals or no deals. Right, so in my opinion, it's kind of an irresponsible way to disseminate information. We don't know anything more than the fact is, yes, they're in a meeting, and I believe the administration needs a deal, right, to keep the wild card off of whatever else is going on over there. But we don't know. Then we were inching towards a deal. This is a market that's up on hope. I would imagine there's a little bit of a short cover here too, right, where the valuation is high. The moves are big on hope. Right? Nothing's etched in stone.
And if we get a partial deal, what would that do for the markets?
You know what? Look, the market is telling you what it thinks here. So this is a little bit of something to hang your hat on, and we're up 400 points. If we get a partial deal, we'll be up 500 to 700 points. If we actually get something that's etched in stone, this market is off to the races. There are people who are betting against this, and those people are short this market, and I think their risk reward is becoming a little bit painful as we inch to these little bits of hope. But this is we've been dealing with this for 18 months. The China story is a big deal.
Thanks so much, Pete Tuchman. Make sure to stay with us. Wi-Fi AM continues after the break. Thank you, Pete.
Welcome back to Wi-Fi AM here at Yahoo Finance on this Friday morning. Markets in a rally. Look at this. All three major indices are higher. The Dow much higher. It's up 380 points or 1.4% on excitement and anticipation about the trade meeting today between President Trump and Liu He. But time for us to talk about flying cars. Yes, flying cars could be a reality sometime soon. Probably not that soon. But Boeing is working with VW's luxury car brand Porsche to develop a flying vehicle with the intention of transporting people in cities. Now, earlier this year, there was a test flight of a prototype that could hold 2 to 4 people and had a range of 50 miles, a modest test flight. Now, both VW and Boeing are attempting to rebuild their image, of course. You know the recent news about Boeing and VW still recovering from its long emissions scandal. So you could say that this partnership comes at a crucial time. By the way, I'm not sure the average person knows that VW and Porsche.
Yeah, I actually have to be reminded.
Audi too, right?
Mm-hmm.
I think maybe Rolls-Royce at one point.
Sure. So, will you hop in, Heidi? It can take 2 to 4 of us. Let's go.
Maybe not.
No?
Absolutely not.
Now that the Hyperloop isn't happening, this is our only option.
I'm one of those people that I'm still really skeptical about the whole Boeing situation.
Oh, yeah.
And all of the scandals that they've had in terms of things being overlooked when they shouldn't have been in that regard. But apparently Airbus, their competitor, is also looking to do something very similar. We'll see who gets out of the gate first, I guess, at this point.
Well, and rather than a flying car, there is already a flying vehicle, you know, that you can take to places. A plane.
Look, I'll get into a Porsche, I'll get into a Boeing plane, but not some weird combination of the two. And that I have no other analysis beyond that.
I have felt that way about self-driving cars.
Yeah.
We hear so much, oh, it's coming, baby, and look at Arizona where they're testing this stuff. It's starting in trucks. It's going to be great. Self-driving. I don't want to.
That and the drone delivery.
Yeah.
But do you think at some point in our lifetime we're going to have to make that shift, though?
No.
I don't.
Am I too optimistic
That's a
about
really
that?
nice way to phrase it. No. So I don't think that in our lifetime all the cars will be self-driving and you'll just get in and sit and it takes you.
Yeah.
Remember the movie Minority Report?
Yes.
One of my favorite things to
always
reference.
bring this
Which
up.
a lot of the things in that movie now are a reality. For example, he wears haptic gloves and he moves around images on a screen without touching the screen.
We have one right over there.
You can do that now, right? Well, I think Jared has to
touch
touch
it.
the screen, right?
Yeah.
But close, yeah.
Oh, all right.
He doesn't. His hands
he
are over
doesn't
here, and
touch
the
it. Okay.
yeah. But that's here. Sensors, and then he has little chips with video files. That's here. But
Not the
in
eye
that
thing.
movie, no, there is eye scanning too. That's
Well,
another
I
one.
guess so, but not
in
like-
Minority Report. He gets in a car and he's on basically a vertical
yeah.
road, and I think it's either magnetic. I don't know what it is, but everyone else is also sitting in a car where they don't drive. The cars just move on their own. I don't think that will happen in our lifetime, but I do think that probably within the next few decades, you will see some self-driving cars and trucks on the road with us, alongside cars that are being driven by humans.
But that's very different from flying cars.
Yeah.
Self-driving cars and flying cars are very different.
Absolutely. Well, let's talk about Amazon. Amazon is getting a little more transparent with where it stands on certain hot button issues. The e-commerce giant debuted a public website yesterday that outlines Amazon's views on political and social issues, including climate change and immigration, as well as touchier for Amazon subjects like facial recognition software, which has been a little bit of a mini scandal for Amazon in terms of the company working with law enforcement. Now, the website followed comments from Jay Carney, who is Amazon's senior VP of Global Corporate Affairs, that called into question President Trump's patriotism. Carney, of course, had previously served under President Obama. So Amazon getting political, maybe not a big surprise. And by the way, in case any of our viewers magically forgot, Amazon, one of the companies President Trump hates the most.
The Amazon Washington
No
Post.
fan of Bezos, right.
No, he called him Jeff Bozo. I mean, many times.
That's nothing compared. That's vanilla compared to some of the other things.
But look, I think if you're a $1 trillion company, which Amazon isn't at the moment, but it has been in the past, you have a responsibility at this point to weigh in on these hot button issues.
Very interesting.
And, you know, if you're going to run the world, essentially, and Amazon has it's so spread out, it's in so many
Right.
different industries that inevitably employees, the government, customers are going to want to hear Amazon's take on these issues.
Well, Amazon's take on the political issues was interesting, but also what they said about the facial recognition software, saying that this is to the benefit of the citizens, and they should just accept how it is and that this is what the future holds. I thought that was interesting too, because it's like, well, yeah, we understand that a lot of companies are going this direction, but at the same time, you need to be a little bit more transparent in terms of what data is being used, how our privacy is being compromised. I mean, these companies haven't figured that out.
Also, companies don't tell me how to think on certain issues. Thank you. I mean, companies can say, well, look, we're all doing it, so accept it. That doesn't mean I have to accept it or like it. Yeah. By the way, Minority Report again.
Oh, here we go.
Facial recognition, eye scanning.
We should just have the video floating,
ready
just ready to go whenever Dan brings
really
it up.
relevant movie. It's really interesting, Scott, when you say, look, if you are a company this big, you need to make your views clear, because the retort that a lot of people in corporate America still make, and I think others look at them and say, well, get with the program, it's 2019, but they say, no, why would I want to comment on certain political and social issues if I don't have to? Just stay neutral. Why would I want my company to take a side?
I mean, look at ESG investing, environmental, social governance. That's a big issue right now, and investors, especially younger investors out there, use that criteria when they're determining what stocks to buy. I mean, this is a big issue for them. So if companies like Amazon can get ahead of it, so before some sort of controversy breaks, they already have a framework as to what their position is.
And then they can refer back to say, look, we've been clear on this.
It's much easier.
Yeah.
Right, and it seems as if this just kind of is a situation where a lot of corporations and CEOs in America have been kind of playing the politician role at this point, because when it came to gun reform, right, the politicians and lawmakers weren't doing anything. So we had Dick's come out, we had Walmart come out, several of these huge companies come out and kind of take a stand. And you know what? Their companies haven't suffered consequences necessarily when it comes to stock price. Look at Dick's, holding up relatively
well. That's a great point. I mean, look at all the big CEOs who have come out and said, hey, I might run for president one day. If Donald Trump can do it, so can I. Bob Iger, Howard Schultz.
Although, I was just about to say, doesn't know his work, Howard. Doesn't know his work.
He didn't have any traction.
He could come out and run for president, absolutely, especially when he's done.
Still?
He's young.
I think so.
Iger will say Howard.
Howard's done.
Come on, we got the temperature. You know, it's interesting, too, about the political takes, because with Dick's, we had Ed Stack, the CEO, on one of our live shows this week. And he said that when we decided to make this move, we thought there's going to be a little backlash. And there was.
Absolutely.
And we're okay with it. And you need to just accept there will be consequences once you choose to take a stance. We'll have to leave it there. It is a huge topic. Now, coming up on Wi-Fi AM, layoffs at Vicky's Secret. We will explain what is happening with that brand, which is having a lot of problems. Stay with us. Welcome back to Wi-Fi AM at Yahoo Finance. Markets right now very much in the green. The Dow is up 385 points. But let's talk about Nike. It has been not so smooth sailing recently for Nike, and now the company ending its Oregon project, which supported elite track athletes. That's after the top coach was banned for a doping scandal. The decision came less than 2 weeks after coach Alberto Salazar was banned from the sport, that is track and field, for 4 years after a probe revealed that Salazar had distributed testosterone and tampered with evidence. Alberto Salazar is appealing the decision, but Nike has been very much caught up in this scandal. And in fact, you'll remember that documents came out, emails in which CEO Mark Parker was communicating with a doctor who was working with Salazar. And that doctor was saying, oh, we are testing to see exactly how much testosterone we could inject in someone before we hit the amount that would be seen on a drug test. And Mark Parker said, yes, very interesting. Keep going. Let's see how much can be seen without it triggering a drug test. But That doesn't mean that he was saying, we should have them take PEDs. And of course, it does seem like that part of the scandal has sort of gone away. He has dodged that. But that was a ding against Mark Parker. And so now closing down this elite track team.
So is it just easier to close it down? I mean, rather than just kind of look for new leadership?
I don't know. I mean, I think it's just everything right now with Nike and Oregon is tainted because of Salazar, and I think they would like to just go quiet. I'm sure it could be brought back soon. Worth mentioning, when I ran cross country at Wayland High School back in the day,
our cross country runner?
Our warm-ups were called Salazars because Alberto Salazar, this very guy, had a connection to Wayland. I have a feeling that the warm-ups are no longer called Salazars at Wayland.
I will say these are very serious issues, and obviously we should be discussing them, but I just don't think that the Nike consumer cares.
Nope, I agree.
I don't think this is going to affect the stock. Exactly.
There you go.
I mean, it's so resilient.
There is that.
It is one of a kind. It's best in its class.
It was at a record high a couple
exactly.
weeks ago.
So I just don't see how this will necessarily affect the business's bottom line, though they are very serious issues.
Yeah, bad optics.
Right, absolutely.
But let's also remember, we talk about scandals just going away. Similarly, a year ago, we had the NCAA bribery scandal. Nike was caught up in that in a big way. Adidas was caught up. I'm not sure that people who wear those brands care or remember that. All right, let's talk about Victoria's Secret, because the decline of that brand is now hitting its workforce. Victoria's Secret laid off about 15% of its employees at its Columbus, Ohio headquarters. Now, the cuts affected junior and senior level staff. That's according to the New York Times. Of course, this company has been under the microscope in recent years as it tries to reinvent its clearly outdated brand. And boy, it didn't help matters when it was reported that the CEO of L Brands, Les Wexner, that is Victoria's Secret parent company, had ties to financier Jeffrey Epstein. So it went from bad to worse for Victoria's Secret. It's interesting, though, because just recently we were covering the L Brands earnings, and we were talking about how much the Victoria's Secret runway model, push-up fringe, lacy bras brand needs to change, and yet, right at the top of the front page of the earnings report, they're still using a big banner image of runway models walking down the catwalk.
Right, that's the L Brands investor relations page. But I will say, remember recently they said, Victoria's Secret said that they were going to be trying to be more inclusive, they're going to make lingerie of all sizes, but it's a little too late, right? To your point, like Aerie of American Eagle has come out and done that so many years sooner, and their sales are just surging, right?
Is it too late, though?
Yeah.
I think so. I mean, this company is not going to survive much longer.
From those issues that you mentioned versus just broader retail issues, right? How do you determine the cause of this?
Well, I mean, maybe it's the lingerie business. I don't know. Maybe it's too expensive and people don't really care to go into Victoria's Secret stores. But the only thing that's keeping L Brands alive at this point is Bath and Body Works. I always get those two mixed up.
No, everyone does. Everyone does.
That's the only thing keeping L Brands alive at this point.
People shop there?
Oh, yeah. Bath and Body Works doing very well.
Candles.
Isn't that interesting? Just a reminder, retail isn't dead. It is dying, and a lot of it is dead, and then there are some things that are doing quite well.
And that's probably something you would want to go into the store to see the scent and smell it. And
although
you're not going to buy soap online, right? I do, but I don't.
And they have great deals. You can get like 3 different soaps for like $15, or like they have really good promotions. But that being said, of course, when we talk about the retail situation, the retail apocalypse, or whatever you want to call it, it's the big box retail that comes out on top.
Soap over bras. All right, we'll be right back at Wi-Fi AM after just a quick break. Welcome back to Wi-Fi AM at Yahoo Finance. We are amidst a market rally. Right now, all three major averages much higher. The Dow moving higher, especially on anticipation of this trade meeting today. Look, the Dow up about 400 points. But let's talk about something that has not had such a good week, WeWork. WeWork now clearly needs saving, and it might be getting that. The Financial Times is reporting that JP Morgan is putting together a plan to bail out WeWork as soon as next week after the company's failed attempt at an IPO left it losing cash at a faster rate than initially expected. So this company needs yet another cash infusion. That's after raising so much VC money, mostly from SoftBank and big WeWork believer Masayoshi Son. Now, worth mentioning also that Adam Neumann this week, this is purely based on valuation, lost his billionaire status. Forbes lowered its estimate of his wealth to $600 million from $4 billion earlier this year.
But I thought I read he wanted to be a trillionaire.
First, you got to get the billion before you get the trillion. Let's remember also that just 2 days after finally making it official, okay, we're not going to IPO, Adam Neumann was seen walking barefoot through Herald Square in Manhattan.
Was that Manhattan? I thought that was SF. Oh, okay. Either way. Yeah. Boo-hoo, I'm so sorry. He's not a billionaire anymore. But that being said, even if JP Morgan does, give them more cash or try to bail them out, it's still not going to be enough money. They need a significant amount of capital, which is why they wanted to go public in the first place. Right?
Why wouldn't SoftBank just bail them out? I mean,
because SoftBank has already had internal disagreements also over how much money. You remember like a year ago, before we were talking about the IPO, there was a report that WeWork was about to announce like a $12 billion fundraising round, and then instead it went down to like $3 billion because
SoftBank has so many other companies in its ecosystem that if this one goes down, it may give a bad taste to investors for the other companies in their ecosystem. So I think they have an incentive
to double down
to keep WeWork alive.
How much do you keep throwing money at a piece of trash? And then, well, how much do you keep throwing money into the dumpster? And then you say, okay, close the dumpster, it's over. It's
but
trash.
Maybe the business model is okay and you've just had a lot of bad management decisions.
I mean, I
there
feel
are
like
companies
the
that do
business
this,
model is
lease
also
office space
not...
and make money doing it.
How is shocking, but
I know, exactly.
It happens.
Right. Yeah, I don't know, man. I don't know why JPM would do it either, but we'll see.
Well, weren't they they were also one of the lead underwriters in.
Yes.
Okay. Yeah. I mean.
But would the fee from an IPO be enough to justify an investment?
Right.
Because JP Morgan makes fees from the IPOs. I mean,
well, and the new thing is very relevant to this report last week that both JPM and Goldman are holding events to host companies and try to convince them to do direct listings. Because if you're going to do a direct listing, we'd still like to be involved.
But they don't make.
No, they make less. But there are ways in which
yeah.
the banks to be involved.
I wonder if it's actually better for the bigger banks because of the direct listing. You may have fewer banks because you look at the prospectus of a lot of these IPOs and it's like the bulge bracket banks and then all these boutique ones as well. So if you cut out the boutique ones, maybe it's a bigger share for the bigger ones.
That's a good point.
Worth reading, since we're talking about banks rushing to try to get into a big deal, Barbarians of the Gate, the classic business book. I finally read it recently about RJR Nabisco and the leveraged buyout there, because most of the drama is multiple banks and multiple law firms trying to get in to get those fees that would be handed out if they are involved in negotiating the deal.
Non-refundable. It doesn't matter what the IPO does, you get your fee.
Right. That check is the same. But do you guys think Airbnb is going to go direct listing route?
That'll be really interesting.
I think so, because the name is so big. People already know about it. They don't really necessarily need to do the whole entire roadshow to, like pitch the business. Hype.
We will see. We have to leave it there, and we're wishing everyone a great weekend. That's our show for today. That's Wi-Fi AM. Thanks for watching. We'll see you right back here next week, but stay here on YahooFinance.com for On the Move. That show starts next.
It's 11 a.m. here in New York City, 90 minutes into the trading day. Take a look at this. We've got a rally underway. The Dow is up triple digits. S&P 500 and NASDAQ also climbing higher. We're going to obviously talk about China. The buying comes amid the hopes of a deal could be announced, and one is in sight. What you need to know ahead of President Trump's highly anticipated meeting with Chinese Vice Premier Li Hu at the White House, which will take place in just a few hours. The NBA goes silent. The league cancels media availability in China following continued backlash over its reaction to Hong Kong protests. And oil jumps, the latest after an Iranian tanker is struck by 2 rockets in the Red Sea. Welcome to On the Move. I'm Adam Shapiro. Good to have you here. We got to talk about these markets. We are enjoying a big rally, and Inez Ferrer is on the floor of the New York Stock Exchange to help us understand what's at play. Inez?
Yeah, Adam, quite a rally, all really based on trade optimism. Percentage-wise, you're looking at the NASDAQ that's gaining the most. But take a look at the Dow. It's up more than 400 points right now. You've got materials and industrials, financials, technologies. All of those are leading on the upside. Meanwhile, we're watching Apple. Apple hit a record high this morning. Apple is seen, of course, as a trade bellwether as well. And there's been some positive notes from Wall Street in recent weeks regarding Apple and its demand for the iPhone 11 and also 5G adoption in 2020. We're also watching Roku seeing a pop today. This is after receiving an upgrade at RBC Capital to outperform, with the analyst note there saying that Roku's valuation is attractive again now that it's had a 31% pullback from its recent highs. And then we're watching Uber seeing a pop. This is after Uber announced that it is acquiring a majority ownership of Cornershop. This is a startup for grocery online deliveries. It was started in 2015 in Santiago, Chile. And the terms of the investment haven't been released, but this deal is expected to close in early 2020, Adam.
Inez, thank you. We want to get to our top story right now, and that is China. The second day of trade talks kicked off in Washington this morning. President Trump will meet with Vice Premier Li Hu later this afternoon. The president tweeted this morning, and this is the quote, "Good things are happening at China trade talk meeting. Warmer feelings than in recent past, more like the old days. I will be meeting with the Vice Premier today. All would like to see something significant happen. I want to introduce today's panel to discuss if it will be significant." Yahoo Finance's Brian Chung, Richard Bernstein Advisors Portfolio Manager Dan Suzuki, and also joining us is China Beige Book CEO Leland Miller. Let me start with you, Leland. This is not surprising that we might get a deal, but is it a partial deal? It's a market positive deal, but is it the one that we need to end this trade war?
This is the problem with calling everything a deal. So what we're seeing is forward movement towards what the White House would like to get done, which is larger than can be accomplished at this meeting. Can't be done at this meeting. What they want to do is they want to, in return for offering to punt the December tariffs, maybe pull back the September tariffs, they want not just big ag buys, but they want substantive commitments. That includes the IP chapter of the May text, some other nonsensical things like the currency, which won't move the needle, but people think it will. And so what they want is a bigger movement, a bigger deal, which means this can move us towards that, could set the parameters for that. But we're just on our way right now.
So based on what he just said, Dan, if I'm buying into this market, I'm at great risk just because we're moving towards a deal after whatever gets announced today doesn't mean we'll get one.
Well, I think that's right. I think that, though, in the near term, if you come out and have this nice, happy press conference saying that we're agreeing on all these terms, the market's going to take that positively, especially if you're going to get tariffs delayed. I think that's the big concern for a lot of people. So in the near term, it could be positive. But I agree that when you look longer term, is it really going to move the needle on, what we think is the most important thing, which is global growth and corporate profits? Probably not.
And on Leland's point, there's no reason why we should think that there's going to be any permanent resolution out of this meeting. In fact, yesterday at our All Markets Summit, Julia Roche sat down with Blackstone CEO Steve Schwarzman, who has been involved with the trade discussions, not necessarily as a direct liaison in the meetings going on in D.C. right now, but he was saying if you're looking for a full solution to the difference between U.S. and China, that's not going to happen. But it may be something less than that, something partial, that could definitely be on the table. And what we're hearing about the rumors Bloomberg reporting earlier this week that there might be some sort of exchange fringe pact in the works. That's one of those temporary patches that we could see. But again, we still need to hear more details from that meeting to see what actually might be coming of this.
But your organization has discussions with people who are very close to the talks. Where will we see as we move forward the progress? Is it going to be on intellectual property? Is it going to be on the joint ventures, the forced joint ventures? What are we expecting?
Well, look, you're going to see the progress on market access and joint ventures and some other things because China wants to do that. I think in the absence of a trade war, you're going to see that. I think they've already announced, although everyone says this is part of the deal, China already announced this domestically earlier in the day that they were going to be moving towards this. The big move is IP. That's what they want in return for something dramatic like the September pullbacks. That's the bigger deal they want here. People are going to be thrown in the kitchen sink so it looks like there's a laundry list of things, but you're going to go through and basically pick out the very few things that are of substance. They need IP in order to be able to defend this deal politically in 2020.
Does the U.S. give up its leverage if we delay the October 15th tariffs and the December tariffs?
No, I don't think so. I think, it's hard to put yourself in Trump's shoes and what he's thinking. But, if I were him, I'd say, listen, the starting point is before I put any tariffs in place. If I can get a better deal using the things that didn't even exist before he came into power, as leverage, then I think that's a win. So I don't think it gives up his leverage in his view. And I think that's probably the most important thing. I think for the markets, the two most important things are, one, there's been this increasing idea out there that we're not going to get a deal before the election, right? We're just going to put it off. So I think this move in the right direction actually swings market sentiment toward a positive direction there. And then the second thing is tariffs, because we all know that the next round of tariffs is going to be, a big hit to the U.S. consumer, bigger increase on the industrial complex. So I think that fact that those two are moving in opposite directions, that's why the market's moving.
So the Trump administration could score all net, but the NBA, it's definitely an airball. The NBA's fallout in China continues as the league cancels media availability press conferences for the rest of the China trip ahead of Saturday's preseason game between the Los Angeles Lakers and Brooklyn Nets. Now, the NBA released the following statement, quote, "We have decided to not hold media availability for our teams for the remainder of our trip in China. They have been placed into a complicated and unprecedented situation while abroad. We believe it would be unfair to ask them to address these matters in real time." All right, back to the panel. Now, Leland, you tweeted that this NBA controversy may represent an inflection point for American public tolerance of Chinese government pressure on corporate bullying. But let's just look at the numbers. China, it's 5 times basically the size of the United States. That's where the audience is for the NBA.
Well, look, it's just like most industries, China's this beautiful potential market for growth, and so they have a lot of pressure to be able to put on individual corporations. What's made the NBA controversy different than previous controversies with, hotel chains or airlines is America's starting to pay attention. And what you saw before is, it was a bullet point in a newspaper article you read, but this is really upsetting people across the partisan divide. And there's going to be a congressional reaction to this. Even the NBA has shut things down, saying we need to push reset and figure out how to readjust our thinking on this. So I think what's happening in the NBA is going to shift things in a much more dramatic direction, and the U.S. government has become a lot more involved in this pushback against the Beijing pressure on U.S. corporates.
If we could talk about the NBA for a second, I think that the league's handling of this has been a disaster. We had Adam Silver that came out, I think, just 2 days ago saying the NBA will not put itself in a position of regulating what players, employees, and team owners say or will not say on these issues. We simply could not operate that way, and then they kill all the press conferences.
And then you see that, that video of the reporter asking the question at the Rockets
having
presser.
them, basically taken away.
That was just incredible. That's not what we're about in the United States, but do they risk losing so much market in the United States as to what they risk by annoying the Chinese?
Well, that's what they're trying to figure out right now, which is why it's been kind of a disaster. They're going to sort of hold off on all media presentations until, they come up with a corporate policy. I think this goes bigger than the NBA, kind of what Leland was saying. I think, U.S. businesses and U.S. government needs to figure out how they're going to respond to this, because the NBA is only going to be the tip of the iceberg. This is going to be happening to all companies all around the country until we figure out how to deal with it.
Last word on this. How do you deal with it? Does it mean leave China? I mean, can you give up the largest consumer market in the world?
Oh, no, but it has to influence the behavior of businesses who have been thinking myopically for a long time, just need to appease the Chinese government in order to get market share. If they understand that there's American consumers and the U.S. government that are pushing back on the other side, maybe even disclosure regulations in your SEC docs that have to, they can make this a bigger deal.
All right. China Beige Book CEO Leland Miller, good to have you here. And I know we're all watching to see what the announcement will be from the White House a little bit later on. Keep your fingers crossed. Oil prices are on the rise after Iranian state media said 2 rockets had struck an Iranian tanker traveling through the Red Sea off the coast of Saudi Arabia. Joining us now is RJO Futures senior market strategist Phil Striebel. And Phil, we're not used to seeing an Iranian tanker attacked. Help us understand really what this means, because we don't know who launched those rockets, do we?
Well, I mean, they're really leaning towards Saudi Arabia being behind it. They really think that this is like a retaliation against what happened to Aramco. I mean, we're talking about 1 million barrels versus, Aramco was 5% of the global oil. So, this definitely increases some of the geopolitical risks out there. We saw the initial reaction was the market had rallied up pretty good. However, you look at the current supply-demand fundamentals of oil, we've got about 425 million barrels in oil inventory. The 5-year average is at that level too. So, we've got plenty of oil out there. The demand has been extremely weak from just global macro environment has just been every economic indicator has taken a downturn. So this latest push up we're seeing is on those beliefs that a U.S.-China trade deal could happen.
So what happens? How do the Iranians potentially react? I mean, it's not as if the Saudis and the Iranians are allies.
Yeah, I mean, this is a really touchy situation here because of the fact that we've seen Iran already capture several tankers, hold them for several months, bringing oil offline. Also, they've threatened to close the Straits of Hormuz. So it's really going to be interesting to see who they point the fingers at specifically and who was behind this, and then how does that impact oil going forward. So I think that geopolitical risk, that tension is rising out there. You might want to look at longer dated positions like call options on the oil market, something calculated risk. And I do like technically on the bottom. I mean, we had that $52 low, we held it, now we're turning back up.
Given this kind of volatility, how would you advise somebody who said, should I look at the Aramco IPO? We know that Saudis wanted $2 trillion. It's being reported the bankers are telling them 1.5 if you're lucky.
So, I mean, this IPO, it's going to take place. It's going to take a while. It's going to be a very small piece of it. As far as from an investing standpoint, I really got to think that, if you're an owner in this thing, you should be concerned about attacks on Saudi Aramco. If those rockets hit there and you're an owner of the stock should for surely pull back while oil prices are rising, and you're not going to benefit from those higher prices because you've got the repairs that need to be going down. So I think if you want a pure price play on oil, you look at the futures, that Saudi Aramco IPO, that's going to be a difficult one because of the fact that I think that, these types of attacks, I think it's going to be a reoccurring theme.
And last question for you. I am old enough to remember stories about peak oil and running out of oil, and they never come true. There was something not too long ago about peak fracking. Are you worried about, have we kind of tapped out on that?
No, and it's funny you bring up that peak oil because I just donated that book. I think we're beyond that. So the peak fracking, I think that we're still at the tip of the iceberg on this. We're getting better at the way we fracked, and I don't think we've uncovered. I mean, every few months you hear about the largest discovery here in nat gas and oil. So I think we're going to continue to find oil. And, you look at a lot of countries like Brazil, all of their oil production is offshore. They haven't even broken into fracking yet and what's out there. So I think that fracking is getting ready to just begin to take off.
Phil Striebel from RJO Futures, thank you for being here on The Move. Coming up, put it in writing. Amazon takes a stand on some of America's most divisive issues. Plus, Dyson calls it quits. Why the company is pulling the plug on its electric car project with an English accent. But before we go to break, take a look at this live video from outer space. American astronauts Drew Morgan and Christina Koch are embarking on their second of 5 planned spacewalks needed to replace old batteries on the International Space Station. And the only way to describe this is super cool. We're back in 2 minutes. We've got some breaking news from the Federal Reserve, and Brian Cheung, you've got the details about this, and the key to it is why it's not quantitative easing.
Yeah, so the Federal Reserve just announced about 10 minutes ago that it will begin short-term Treasury bill operations and will be purchasing at a $60 billion per month rate. That will be going through the second quarter of next year. This was a decision that came out, again, just this morning, so they didn't wait until the next FOMC meeting, which is at the end of this month, to announce this. Federal Reserve officials have been talking about this for some time. They had been saying that because of the repo crunch episode that we saw about 3 weeks ago, where we saw short-term rates on overnight lending spike as high as 10%, they actually decided that there needed to be more liquidity in the system, which would require a larger amount of reserves on their balance sheet. So on the other side of their balance sheet, they decided that they needed to increase the amount of treasuries that they had on there. So it's not quantitative easing because quantitative easing was targeting certain types of securities. They were targeting agency mortgage-backed securities, agency debt, longer-term treasuries. In this case, this is just them trying to make sure that they can expand short-term treasuries without that sort of targeting. Something that's worth noticing is that the Federal Reserve is quite divided right now. There's been a large multiplicity of views in terms of on the interest rate side of things, what to do next. I had the chance to actually sit down with Minneapolis Fed President Neel Kashkari at our All Markets Summit event yesterday. Here's what he had to say about communicating the differences on the Fed right now.
It's a real challenge for the chairman to try to represent these diverse views through his one voice. And I actually think he should just, my humble opinion is, he should just say what he thinks we ought to do. We all have tremendous respect and admiration for Jerome Powell as a policymaker and as our chairman. And if he wants to lead the committee in a direction, I'm quite certain that he'll have the support of the committee to follow him.
So a lot kind of to talk about there in terms of just whether or not Jerome Powell should be doing a little bit more, being more proactive in explaining what's going on with the Fed right now. There's a lot of confusion in markets about what the Fed's next moves might be, but kind of something worth watching as we get that next meeting in October where markets are pricing in a pretty high chance of another 25 basis point cut.
Market seems to like it. The Dow's up. We've been talking about the China situation, but the Dow, the S&P 500, all trading higher, and we're going to keep talking about this as the hour progresses. Chris Ritzler, Needham Growth Fund Portfolio Manager, joins us now to talk about what's going on not only with the Fed, but also with the China negotiations. And I'm going to give you a softball here. Where do you want to start? All of this news together is positive, and it's driving the markets into the green, and nobody's green with envy.
Look, I think right now, we haven't had any bad news. So I think that's being accepted into the marketplace as something positive. So if you were short the market, I think you're seeing some short covering out there on a day like today. Volumes aren't too high, so you can have exaggerated moves. I think, the devil will be in the details, what we hear this afternoon. We've been through this multiple times where we've been disappointed. So, I think for those who are traders, maybe need to be a little bit more cautious here, up 400 points.
And before we stop talking about China, because I want to get to fourth quarter or third quarter earnings projections, but we've been there before with China, but it seems like the White House and the Chinese are setting us up for as our last guest said, a market positive announcement, which really doesn't do anything but make us all feel good.
Look, our position has been, we're just outside 13 months of an election next year. So when we look into 2020, we think, where do you have to begin to get things going positively? This is probably not a bad time to have some sort of a mini deal that would allow you to begin to have, more acceleration in revenue and growth next year, which I think is what you need to have in the third quarter going into the election.
Okay, so when you talk about revenue and growth, we're going to launch earnings season next week, and the projections are that, we're going to see negative earnings per share growth that we haven't in 3 years. You're optimistic that may be inaccurate?
I think near term it is going to be relatively disappointing, because what it does is it sets up for better comps next year. So then we can see higher growth rates going into an election that politicians can point to. The second and third quarter will begin to be improving. So near term, yes, I think that there's going to be a lot of volatility and noise in the numbers. I think they've been somewhat moderately reduced already by a lot of the sell side. What we're going to be paying more attention to is what's the outlook, and not so much the fourth quarter, but what's your outlook into 2020? Because I think that's where you can begin to see some reacceleration. And we spend a lot of time on small caps. That's what small caps need. They need a little bit higher growth than what we've been seeing, and we think that they could begin to outperform relative to large caps next year.
Dan, what's concerning you, or what's giving you a cause for a smile as we go into earnings season next week? And do you agree with this potential for small caps finally taking off?
I'm a little bit more cautious on that front, but I think in the near term, in terms of what we're seeing, I think that Chris and I would probably agree. I think that if you look at small cap outperformance, it basically peaked, 5, 6, 7 years ago. And so it's already in a relative bear market. And people are talking, are we going to be in an earnings recession? Are we already there? Small caps have been there, are there, will probably continue to be there. And I think that earnings are going to be pretty disappointing this quarter.
In terms of Fed policy, what's the next kind of big catalyst here? I've been trying to crunch through the implications of the balance sheet here. It seems like, though, as of in the past few weeks, it's really taken a backseat, Fed policy, to the big trade negotiations. So is that kind of the bigger story right now, or can the Fed still surprise maybe by the end of the year?
I think trade is the big story. But if I'm looking at the Fed, they remember last year, fourth quarter, where we had a credit crisis basically in December and the markets fell apart. So I think they've learned from that, and so they're getting ahead of that. Clearly, we have them, we're not going to fight the Fed right now. They are in line, I think, with the markets. But they too are reading the same headlines that we are, which we don't even know what's next out of D.C., what's the next tweet. So they are working on data, and they're being data dependent, and I think they still should be. But again, there's a lot of volatility in the news, and I think that they're kind of being patient, which is prudent.
As we go into earnings season, I would love to have you back, and let's revisit the discussion about small caps, because they have been underperforming for so long, and I think a lot of people were expecting, given the China trade problems, they should have done better. But I'd love to see where they go as we go into the future. Chris Retzler, Needham Growth Fund Portfolio Manager, thank you for joining us here on The Move. Amazon is bringing some clarity to its public policy agenda in a paper that they titled, quote, "Our Positions." The tech giant laid out its take on nearly every hot-button topic, from climate change to the federal minimum wage. With us to discuss this is Yahoo Finance's tech editor, Dan Halley. Usually companies want to avoid political, statements, because you're going to annoy one side and you're going to please the other side. But Amazon's gone into new territory here.
Yeah, it's good on them for doing this and getting out ahead of well, not really ahead of the conversations, getting into the conversations. And some of the points are pretty interesting. The ones that I want to bring up specifically have to do with how the company is focusing on different issues like climate change. It's been criticized about climate change before, that it uses too much carbon emissions, or its different delivery vehicles use too many carbon emissions. Its data centers. It also talks about the use of facial recognition, the use of counterfeit products. So it's a mix of things. The facial recognition is something that they've been dinged for because they have Amazon's recognition technology, which is being used by some police forces, and it's been hit by critics saying that it's unfair. And so there's kind of hitting on points where they've already been criticized, and then points that are good for them.
So let's break some of this down. Okay, they're going to buy 100,000 electric vehicles for delivery. Great, you make environmentalists happy. Consumer data privacy should be protected under federal law.
Yeah.
What do they really mean? What are they getting at here? Because we know Alexa's listening.
Get it out of our hands. We don't want to be responsible for coming up with these rules. Give us the rules, and we'll follow them. And this is exactly what Facebook has been saying, exactly what Google's been saying. They all want some kind of federal law because now they're going to be rolling out a state law in California, and they don't want to have to go and have these different levels of law or different types of laws across different states that they would have to deal with. So they want this single federal law that they'd have to abide by. But, I mean, we just had the issue about the videos, Amazon Video, being viewed by people to check the machine learning technology conversations. So it's issues they've been hit with. And then, stuff about taxes that's good for them. So,
And Dan, a lot of this outward facing, but I mean, anything about how they treat their own employees. I think that they kicked it off even, which is a discussion about the minimum wage.
Yeah, and that's something that they were, again, something they were criticized for previously by Bernie Sanders and others who said that they weren't paying their workers enough. They raised the price, the pay for seasonal, temporary, full-time employees, part-time employees to $15 an hour.
Everybody across the board.
Right, yes. And they still have health care as well. So they're doing good there, but it was something that they were criticized for. So this is basically them kind of trying to put the past in the past. Say, look, yes, we've been hit for this. We were hit for the minimum wage. We've been hit for our CO2 emissions. We've been hit for the use of facial recognition and data privacy. We want to put that in the rear view and come out and say, oh, now we support all this kind of stuff because it makes us look really good, as well as the taxes, which is something that they obviously want to make sure that gets there for Amazon.
Dan Halley, thank you for shedding some light on that. But let's talk about the blackouts in California. Coming up, hundreds of thousands are still without electricity. In California, we will speak to one mayor who says the anger being directed at PG&E, that's the utility, that anger's misdirected? Got some explaining to do there. Plus, before we go to break, take a look at some of the biggest winners in the Dow right now. It's 11:30 here in New York City. We're 2 hours into the trading day. Stocks are trading higher as we get ready for an announcement about China from the president. Sterling's on the rise, too. Why there is renewed optimism a Brexit deal may be within reach. Blackouts hit California. We're going to talk to a mayor who says her residents did not take PG&E's warning seriously. And a love of brokerage firms cut fees in a lot of them cut fees in recent weeks. But just why did they do it? Our latest edition of Yahoo You will break it all down for you just ahead. But right now, we are going to talk about London, and I'm going to welcome you to On the Move. I'm Adam Shapiro. But not since the clash said London calling have we had optimism to call London. The Bound is rallying today on hopes of a Brexit deal. European Council President Donald Tusk said for the first time both sides see a pathway to a deal. Yahoo Finance's Oscar Williams-Groot is picking up the other end as we call London. Oscar?
Adam, it's really hard to overstate how much opinion has shifted 360 degrees in the last 24 hours. Yesterday morning, it looked like Brexit negotiations were essentially dead, as they have been for most of the week. But Irish PM Leo Varadkar met with Boris Johnson yesterday afternoon, and he came away from that meeting saying that he could see a pathway to a deal. Since then, as you've said, European Council President Donald Tusk has reiterated those words. And now Michel Barnier, the European Union's chief Brexit negotiator, has asked for and got permission to take both sides into the so-called tunnel, which is the European Union jargon for holding top-secret, detailed negotiations about a possible Brexit deal. This is the first time that both sides have been in the tunnel, so to speak, since Boris Johnson became Prime Minister. That's why we're seeing the pound see these amazing gains today. It is the biggest jump against the dollar since January 2017, over 2 weeks. Now, whether this optimism will be unfounded, it remains to be seen. There's a crunch European summit next week, and realistically, both sides will have to agree a deal by then.
All right. Well, what about Dyson, the vacuum maker? They're scrapping their plans for an electric car. Why?
Well, Adam, it was always a risky bet from the start. Dyson is, of course, best known for hoovers and hairdryers, not cars. They announced this project back in 2017, and they'd actually been working on it secretly since 2015. They committed £2.5 billion to this project, but yesterday Dyson announced in an email to staff that he could no longer see a way to make this commercially viable. It is, of course, a highly competitive and difficult market where you just have to look at the struggles that Tesla has in electric vehicles to understand why it's not easy to make money here. But Dyson was keen to put a positive spin on this. In an email sent to staff and seen by Yahoo Finance UK, he said that actually this isn't a failure. Part of the battery project, which was going to power the car, will continue. That's around 1 billion of the 2.5 billion that has been earmarked. And he said that most of the 523 staff will be redeployed elsewhere in the company.
All right, Oscar, you taught us something too. I guess if we're in the UK, we don't ask them to vacuum the carpet. We tell them to go get a Hoover. Eureka, it's wonderful. Oscar, thank you very much.
True.
Shares of PG&E are in the green this morning after plummeting 29% on Thursday. The utility cut power to more than 1.5 million people in North California to prevent potential fires from sparking off of its electric utility poles. To hear how this impacts local people, we're joined by the mayor of Cloverdale, Melanie Bagby, and it's good to have you here. And one of the things you pointed out is that some of the people in your area did not take the PG&E warning seriously. Why not?
Well, I think it's because this is really the first time that our area has been subject to what PG&E refers to as the PSPSs, or the public safety power shutoffs. And it's hard to take those warnings seriously when, it's sunny and 84 degrees. So I think that after this event, people are going to start realizing that they really need to prepare for 5 to 7 days and perhaps longer without power.
All right. It's the 21st century, and we have all grown accustomed to have electricity at a moment's notice. You're telling people to prepare not to have electricity, but what can be done? I mean, this is the 21st century. People shouldn't have to go without electricity. Is PG&E to blame, or is it something else, like I think it's called the Sonoma County Utility Board?
No, that's actually not the case. We do have a community choice aggregation joint powers association, which I'm a member of Sonoma Clean Power, but PG&E still owns the poles and the hardware and the utility to deliver the electricity. I think that after the initial wave and shock of anger are over, people are really going to need to look at who the regulators were who allowed PG&E to make a lot of bad decisions by not upgrading their infrastructure, making bad energy contracts that were in some cases 50% higher than the same contracts at Southern California.
Well, that would be the Utility Commission, wouldn't it? That'd be the statewide Utility Commission.
That would be the California Public Utilities Commission. Where were they on these two issues? And I think that that's what, as local officials, we need to start holding the CPUC accountable.
Is anybody holding them accountable? Are these utility poles being brought up to code as they should have been before the Camp Fire?
Well, it's interesting because after the San Diego fire is in the late 2000s, the San Diego Gas and Power, the equivalent of PG&E in Southern California, they made a concerted effort to upgrade their infrastructure. We did not see that same response from PG&E. Clearly, we needed to see that, and now we're in the state that we're in. So, ultimately, the CPUC is responsible for regulating the PG&E on those issues.
Hey, Melanie, Brian Chung here. So, when you kind of talk with your residents and those that live in your area and your community, is there any sort of hostility towards PG&E? Because on the other hand, because they're a utility, it's not like they can just simply go to another company, right? And on that point, have there been any sort of demands about what PG&E should do to prevent a situation like another Camp Fire, or to California regulators to make sure that PG&E is doing what it should be doing?
Well, it's really interesting because, I think that the local residents are pretty smart about this. They know that the guys and, the men and women in the blue PG&E trucks who go around and keep the power on, they're not to blame. They keep our power on, come rain or come shine. The people here are pretty sophisticated. They know that the decisions that were made in the, PG&E boardroom to pay out dividends to their investors instead of investing in their infrastructure, that's where the blame really lies. And of course, it lies with the regulators. So people are pretty smart about that. But, we have not taken action maybe as much as we could locally to hold PG&E's feet to the fire. And it's time for local electeds and for groups like Sonoma Clean Power to say, we can't leave our economy and our safety in the hands of the state regulators. We're going to need to start taking action to decentralize our grid, invest in backup technology. And it's a real opportunity here in California, because while we have the neglected infrastructure of PG&E. They've neglected their infrastructure for the last 20 years. At the same time, we have an unprecedented installation rate of solar panels. So we actually have two problems.
And Mayor, hold on a second, because with solar, you got to have the battery if you're going to be off the grid, and that's a whole other issue. In fact, there's a story about it.
We need to be, and that's exactly what we need to be investing in storage options, because we have the two problems. We need to smooth the load when solar is at peak production, and we also need to have backup power for resiliency.
Yeah, and finally, there's some fires right now, we understand. I know Southern California, they're fighting the fires in LA, but what about up near you? Are there fires which pose a risk? And can the people in your area expect to have to live with this on and off again with electricity for how many more years?
For right now, that is the, as we're calling it, that is the new normal, but it is absolutely unacceptable, because we can't take the hit on our economy. Who is going to want to invest in businesses here when we know that the power, it could be undependable? We're having a situation with our tourism industry. This is our high season. This is the time when people come to experience crush and harvest at our wineries. They want to come to our local breweries. And what if we develop a reputation for unreliable power during these times? We have a whole industry around wine country weddings. So, what we need to do is we need to address, we're going to need to take these steps right now, but I'm hoping that they are as temporary as possible, and we need to start moving forward with decentralizing our grid and and modernizing our equipment, and also going to backup power.
Melanie Bagby is the mayor of Cloverdale in California. We appreciate your being here, and I think a lot of people are just amazed that in the United States of America, in the 21st century, we're having brownouts. I mean, people are going without electricity. It really is. It sounds third world. Yeah. Thank you very much.
It absolutely is. Thanks, Adam.
Coming up, presidential candidate Elizabeth Warren has yet to win the Democratic Party nomination, but she is already courting potential vice presidential candidates. Plus, Colorado digs out today from a record snowfall that saw temperatures plummet more than 50 degrees in just 24 hours. The Daily Beast reports presidential candidate Elizabeth Warren is talking to former Tallahassee Mayor Andrew Gillum about becoming her vice presidential running mate. Now, the Warren campaign denies the report, but a source close to Gillum says he is in touch with several campaigns since Florida is key to winning the election. Ethiopia's Prime Minister Abiy Ahmed was awarded the Nobel Peace Prize. The Nobel Committee cited his work negotiating peace with neighboring Eritrea, as well as political reforms within Ethiopia. Those reforms include ending media censorship and freeing political prisoners, as well as legalizing opposition political groups. The former ambassador to Ukraine, Marie Yovanovitch, is being deposed before Congress as part of the House impeachment inquiry. President Trump called her bad news and removed her at the request of his personal lawyer, Rudy Giuliani, who is at the center of the Ukraine scandal after two of his associates were arrested yesterday. And snow skiers will love what happened yesterday in Colorado. The temperature fell in a 24-hour period from 77 degrees and sunny to the low 21. And then the heaviest October snowfall ever to hit Colorado blanketed the state. Just under 7 inches of snow fell. Flights out of Denver were delayed, and police reported more than 200 car accidents caused by the sudden storm. So several brokerage firms, including Charles Schwab, Interactive Brokers, and most recently Fidelity, have dropped their commission fees to zero. But why did they do this, and how do they still make money? It's time for Yahoo You. Brian Chung is here with this week's lesson. Brian?
Class is in session, and with all the major brokerage firms now having dropped their commission fees to zero, some may be asking if there's a catch, and the answer is usually yes. So let's unpack how brokerage firms make money. Now, brokerages help clients place orders on securities. Some examples, like you said, TD Ameritrade, E-Trade, Fidelity, Interactive Brokers, Charles Schwab. But here's a scenario where you might see this play out. Here's Adam, and he's calling up a brokerage firm and saying, look, I am bullish on Chung's shoes. I love what the CEO is doing at that company, and I want to buy 100 shares. Now, those brokerages used to charge a fee per transaction. Now, the broker can go straight to the exchange, to buy those shares, but the broker can also go to a wholesale market maker like Citadel or Virtu Financial. Now, these market makers buy or sell a stock at publicly quoted prices and will actually pay your brokerage firm for routing a trade through them. And the practice of buying a brokerage firm's orders is called payment for order flow. So again, the brokerage firm selling the shares to the wholesale market maker, and then they actually place the order on the stock exchange. Now, how does the wholesale market maker actually profit off of this? Well, when Adam asks to buy shares of Changshu's, what he's actually doing is putting in a price that he's willing to pay, $100, for example. Now, this is what they call the ask price. But as part of the order, the broker is also given a second price. This is called the bid price, and in this case, it's $98. Now, this is the price that the broker will actually find in the market and then actually execute the trade on. So the broker in this scheme will make $2 on the stock purchase. This is all fairly common practice. Now, because Adam is paying $100 and the broker found shares of Changshu's at $98, again, that spread is going to exist. That's what they call it. Now, in a structure where the broker sells the order flow to a market maker, the bounty is then split by the brokerage firm and the wholesale market maker. So why no more fees then? Why are all of these brokerage firms deciding they want to go to zero? Well, it's because selling order flow has become more lucrative for the brokers. Now, here's a chart of estimated revenue. This comes from AlphaCution and also uses SEC and company data. And the big four firms, and this actually excludes Fidelity, which is private, the big four firms actually made $792 million in 2018 off of selling order flow. That's a step up from under $600 million in 2017. And TD Ameritrade, which is represented by the purple part of this bar chart, made the most money off of selling order flow. They netted about $458 million in 2018. But the reason why everyone's gone to zero is because of this little green sliver at the top. That's Robinhood. It's the mobile app trading platform that owned up to the payment for order flow model by slashing their fees entirely. Robinhood has grown its revenue by over 40% from routing orders to these market makers in just the last year. And even though it's just a small figure relative to the industry, other brokerage firms are fighting to keep their clients from running to Robinhood or other feeless platforms as well. So there are questions as to whether or not regulators will crack down on this structure. The SEC has said that they're looking into it. Obviously, this is all because payment order flows tend to favor market makers that will just pay the most, as opposed to the market maker that's actually going to try to find the best price for their customers. So worth watching as we kind of watch the regulatory developments.
It's good to remind people, too, the broker or the market maker is supposed to act, they're supposed to give you the best possible price, but how do they protect against the other side, which is buying the order flow, from manipulating your ask, the bid ask, to their advantage?
Well, and that's the problem, is that customers don't know that. If you have a TD Ameritrade portfolio, you put in an order for a 100 shares of whatever stock you have, you don't know what TD Ameritrade. In fact, most people probably watching that segment had no idea that that was the kind of way that the system works in the first place. So the problem is that it's the SEC and regulators that can really open up the hood and try to put these rules in place. But unless you're someone that's at a hedge fund, you don't have access directly to an exchange. You need to go through a market maker, go through a brokerage to get this done. And that process can be relatively opaque for most users.
It's going to end in a lot of tears, potentially, or not. Okay, Brian, thank you. Earnings season kicks off next week. Major U.S. banks like Citigroup, Goldman Sachs, J.P. Morgan Chase, and Wells Fargo will be out with their third quarter results Tuesday. Bank of America and Morgan Stanley report later in the week. For a preview, we're joined now by Mike Mayo, Wells Fargo senior analyst. And there's a lot to begin with. I mean, you had the note last week, Mike, about how tech could help the major banks catch up with what's happening overseas and save a great deal of money. Do you expect in these earnings reports to start seeing them talk about perhaps downsizing personnel and becoming more automated?
Well, look, you talked about zero commissions at brokerages. Like, this is a multi-decade trend of less revenues in the banking industry. And necessity is the mother of invention. In that case, banks need to control expenses with weak top lines. And that weak top line for rates or spread revenues or capital markets. Excuse me, I'm all choked up by him.
It's going around. I'm in New York.
I'm so excited, but it's technology. This is going to be the decade of technology. And you use technology, excuse me one second. You use technology to control expenses, and the bottom line is banks need to grow revenues faster than expenses. So if revenues are softer, expenses need to be down. We expect banks to talk about what they're doing with expenses, trying to hold expenses flat. Headcount, in the decade of technology ahead, we expect a reduction of banking industry jobs, Wall Street and the banking industry by 200,000. So that is going to be a big lever.
Bottom line, what I hear you saying is there's opportunity right now with the banks for some real upside potential.
We see upside on the, sorry, I'm really excited now. No, I've been talking, I cannot stop talking about banks and technology. We see tremendous upside to improve banking industry efficiency to levels never seen before. So I think it's win-win-win. It's win for the customers because banks can anticipate their needs better and they should get better costs. It's a win for the employees because they don't have to do as much with the mundane administrative stuff and they can deal with the customers and the banks become more efficient. Even in a slow revenue growth environment, banks can still improve efficiency and returns, and therefore we see upside for bank stocks.
So let's talk about earnings for next week, right? Citi and all the other major banks will be reporting. The story largely has been net interest margins has been really compressed because of the yield curve getting flat and just loan volume kind of across the board being maybe not as great as analysts had been hoping. What is the story going to be for the banks, especially that they've been trading at such a discount relative to the market so far this year?
Yeah, so I'm going to pull the lens back one more time. It's like everyone's crying and whining about, a couple basis point reduction in the net interest margin. Oh no, boo-hoo. You know what? Meanwhile, we have this multi-decade structural change, the biggest capital for labor swap in history when it comes to technology. So we're talking about controlling expenses. Having said that, you should see a reduction in net interest margins. The banks did not expect a flattening of the yield curve the way it's happened. They did not expect rates to be this low, and that does have a negative impact on spread revenues. So you'll see that.
So I'm going to try something with you before I let Dan get in on this. I'm going to name a bank. I want you to give me one or two words that investors should expect in this earnings season from the bank. Let's start Citi.
Well, we put out a note on Citigroup, and it's going to be pretty similar. Soft top line, but then the 3 C's. Cost control, credit quality still fine, and capital return.
I thought. They haven't come up to what you've talked about for several quarters. They haven't met their targets.
Well, we don't know yet. So we put out a note saying, well, we aren't sure Citi is going to meet its target for this year or next year. Consensus does not expect them to meet. But the real question for them is, how are they going to continue to narrow the gap with its performance with peer? And they have narrowed that gap. We expect them to continue to narrow that gap, even if they miss their target. But here, I'll telegraph my question. Are you going to make your target this year? And if you're not, how are you showing increased intensity to make sure you're representing the interest of shareholders? You're using other people's money. Make sure you use it wisely.
2 words. JPM. Give me 2 words.
Well, best in class global bank. They're cranking, but
you expect them to knock it out of the park?
No, but they're not immune to the softness from again rates, spread revenues, and capital markets. So you're not immune. It's a slower growth world. And by the way, slow growth for banks can be just fine. I don't want pre-crisis, right? Remember how fast banks grew? Well, what I learned in banking school back in 1988, way back when, was if something grows like a weed, maybe it is a weed. Mm-hmm. And right now, I'm not seeing a lot of weeds in the banking industry. So slower but more sustainable growth out of the likes of JP Morgan.
And finally, Bank of America?
Bank of America, it's just a machine. They just crank it out. It's centralized, it's automated. They're closing branches. They're having more digital banking. They are demonstrating, technology in some of its best form. They have a level of deposit gathering through, mobile. I left my phone down there, but if I had my phone, it'd be equal to the 7th largest bank. That's all through mobile. And by the way, that all started this decade. So there's a lot of hype when it comes to technology and what it can do. But look at Bank of America. They've implemented that this decade.
All right. Mike Mayo, Wells Fargo Managing Director. Good to have you here. We're going to be watching the banks next week. I have a feeling we're going to try and get you on the phone, although I don't know how successful we're going to be. It's going to be a busy week for you. Coming up, why the Federal Reserve just approved a measure to ease government regulation on most banks. Plus, before we go to break, take a look at some of the top trending tickers on Yahoo Finance today. All right, word on the street. We're going to check in with our panelists. We're going to find out what stories they're watching and want you to pay attention to. You, Brian, are following the Federal Reserve's latest on bank regulations and what that could mean going forward.
Very, very nerdy, but the Federal Reserve passed a measure yesterday to put in a new regulatory framework for measuring or regulating the largest financial institutions. Not much changing for the big four, like the ones that we were just discussing.
Talking about.
Yeah, the Citi, JP. None of the regulations have been pared back on them, but kind of the next largest banks after that. This covers the likes of Capital One, PNC Financial, U.S. Bank Corp, Charles Schwab. They put in some new provisions that basically categorize them as a type of bank where they would no longer face 100% of the liquidity requirements that the Fed put in place post-crisis to try to hedge against a crisis. They've then pared it back to about 85% of the liquidity, what they call the liquidity coverage ratio. So basically, these banks will no longer be required to hold as many liquid assets as they were before this change. The thinking behind this change is that we're 10 years out from the financial crisis, and maybe some of these regulations went too far. This is the school of thought, again, within the Federal Reserve from the Trump-appointed Fed governor, that's Randy Quarles, who's kind of been heading this. And the idea is we may have tightened too much on the banks to a point where they can't lend anymore. So here's us maybe moderately paring back.
So these smaller banks, are we talking about part of the living wills for the banks? That's where this...
Also that. Yeah, so living wills are also part of this. So living wills was this provision where banks would have to prove to regulators that they have a plan for winding down their assets in an event of some sort of financial distress. Those regulations and the rules by which they have to report this to the Federal Reserve on a set frequency has been pared back for some of these banks as well. Again, not the largest ones, though.
Right.
Not the Citi, not the JPs, not those.
Okay. Dan, you say even if we get a trade deal, which we're expecting something to be announced this afternoon, the fundamentals of this economy are still weak. Why?
Yeah, well, I think all year, if you look at the markets, I mean, clearly we're close to all-time highs today, but the market's been cycling through these various hopes, whether it's trade deal, which is the hope that's driving the markets today, whether it's the Fed coming to save the day, or it's an earnings rebound. Now, I think all those three hopes are probably need to be called into question here. I mean, we're about to go into earnings season. If you look all year long, every time we've gone into earnings season, the markets realize things are worse than they thought. And if you look at the leadership that takes place when earnings season really starts to kick off, it's really the defensive sector. So if you look where we are today with the market basically at all-time highs, whether you look at the 1 month, 3 month, 6 month, 12 month, the leadership has been in staples, it's been in REITs, and been in utilities. And I think that's telling you that things are slowing down. There's this hope that things are going to rebound. I don't see those signs. Most of the bulls are pointing to a strong consumer. The Fed themselves, if you listen to them talk at all these various speeches, they are asked about the consumer. They say, if we focus on the consumer, we're going to be late to react because the consumer indicators are lagging indicators. And you can't focus on those if you're really going to be timely. So if you look at the leading indicators, if you look at the timely indicators, they're all very widely and directly pointing to further slowdown. So I think that potentially we can get a rebound a couple quarters from now, but why position for that?
I mean, at the same time, even though earnings haven't been great, we haven't hit an earnings recession, though, yet, right?
Some would argue, I think based on FactSet numbers, they'd say that this is going to be the third negative quarter. But, by our numbers, yeah, we're not there yet. But we think the risk of that is going up. We're heading in that direction. A lot of people are saying, well, don't worry, we're not seeing recession. I think people are too focused on recession because you can have bear markets without a recession and you can have recessions without bear markets. Right. A lot of people are talking about, well, look at 2015, 2016. A lot of the data you're seeing is worse than that, or a lot of the data is worse since that. But if that's a bull case scenario, 2015, 16 is your bull case scenario, remember that the market went down 14% back then, and we're 2% or 1% from the all-time highs.
Dan Suzuki, thank you for being here on The Move. We've got another hour to take you through of trading coming up. Will we get a deal? President Trump is set to meet with Vice Premier of China, Liu He, just over 2 hours from now. Which curtain will they pick? Plus, let's take a look at the markets as stocks rally on hopes of a trade deal. We're going to be back right after this. 12:03 in New York City. We're 2.5 hours into the trading day. Stocks are trading higher. We're off the session highs, but we're still expecting optimistic news regarding China because all of this buying comes amid the hope of a deal. What you need to know ahead of President Trump's highly anticipated meeting with Chinese Vice Premier Liu He at the White House just a few hours from now. Not who. Taking a look at the 10-year Treasury yield. You can see right there, it's going up 1.75%. Oil jumps, the latest after an Iranian tanker is struck by 2 rockets in the Red Sea. Who's to blame? A new report says the FAA failed to properly review the anti-stall system on Boeing's plagued 737 MAX 8 jets. We're going to talk about that. But right now, welcome back to On the Move. I'm Adam Shapiro. We're heading to the floor of the New York Stock Exchange, and Ez Ferré is there, keeping us up to speed on what's happening with stocks as we get ready for this announcement from the White House.
Yeah, that's right, Adam. And we're looking at stocks which are rallying today. You're looking at the Dow that's up almost 400 points off the session highs, but pretty much close to it. You did have the rally sort of reinforced also this morning when President Trump tweeted good things are happening at the China trade meeting. All but 3 Dow components are in the green. So let's just take a look at some of the Dow leaders right now. You're looking at Dow Inc., Caterpillar, 3M, Goldman Sachs, JP Morgan, Chase. Banks also are seeing a pop today as financials, industrials, materials, all of those are leading the gains. Apple, seen as a trade bellwether, is up almost 2%. Apple hit an all-time high this morning, breaking its record from October 2018. And I want to show you what's happening with oil. WTI is up more than 1.5%. A couple things going on here. Iran says that 2 rockets have hit one of its oil tankers. You could be seeing some increased tensions in the region. And also earlier, an OPEC official had hinted at perhaps curbing supply more, so that certainly helped oil prices inch higher. Adam?
Inez, thank you very much. Our top story, China. The second day of trade talks kicked off in Washington this morning. President Trump is going to meet with Vice Premier Liu He later this afternoon. The president tweeted this morning saying good things are happening at China trade talk meeting, warmer feelings than in the recent past, more like the old days. I will be meeting with the vice premier today. All would like to see something significant happen. Want to introduce today's panel. Yahoo Finance's Brian Chung, as well as Pras Subramanian. Also joining us from Washington is Center for American Progress Managing Director Andy Green. And Andy, you are not as optimistic about whatever announcement we get from the White House, because at the end of the day, it's not a permanent deal, right?
Well, it's not a permanent deal, and it's not a deal that's in the interest of working families. To the extent that it's a deal of anything, and I think we don't know that it'll actually be much of anything. It's going to be a deal that protects corporate profits and enables banks to have greater access to the Chinese market and buys agricultural products that the Chinese need to buy anyway. So, no, I'm not optimistic.
And you've brought up the fact that the average family, the tariffs have already cost the average household in the United States $831. But if they remove the tariffs, isn't that putting money back into the pockets of average families or not?
Well, sure, sure it is. I think that the question is, the tariffs are painful. Everyone acknowledges that on both the Chinese and the U.S. side. And so removing the tariffs when you get a good result is absolutely the right thing. And actually coming up with a better strategy than just slapping tariffs on your own people is really the way we ought to go. But let's take a look at what the tariffs are fighting for. What is the sacrifice being asked of the American people for? It's not for boosting labor rights in China, improving environmental protection, reducing the subsidies that you take land from the farmers and hand it to companies without any taxpayer accountability on the Chinese side. Those are things that would level the playing field for American workers and businesses in vis-a-vis China. No, this is about protecting intellectual property rights, Wall Street market access, and buying more products from the big agribusinesses. This is a corporate-dominated deal to the extent there is one. It's a corporate set of priorities.
Hey, Andy, Brian Chung here. So it's kind of hard to say what's worth reading into, but I mean, there was kind of an interesting communications jumble earlier this week when we heard that the Chinese may have, wanted to leave Washington early, saying that talks went nowhere, and then the White House had to do a cleanup act and say, no, talks are still on. We're still meeting on Friday. Is there anything worth kind of gleaning from that type of communication there and showing that even the Chinese and the U.S. side of things can't even really tell people or explain to people what's even going on in these trade discussions?
Well, that's for sure, and I think you see this across the administration's trade policy and, frankly, economic policy overall. They're under tremendous pressure for, impeachment. The U.S. economy is not performing as well. We've got a manufacturing recession that's going on. Job creation in the industrial sector is down 46% year on year from August last year to August this year. That's hitting workers in Pennsylvania, Michigan, Ohio really hard. And so the Trump administration is facing the music that its policies are not working for working families, and Chinese are saying, well, we're going to pack up and go. It shows to me a real weakness by this administration. So I'm very worried about whether this deal is going to be good for American working families, and even to the extent that that they're on the right track on just a modest set of those things. I don't think they're going to achieve that.
Hey, Andy Pross here. So what do you make of factories or companies moving production to the States? We've seen that in a couple of cases, and also just leaving China in general. Isn't that a positive from these trade wars?
I think that's a really interesting question. It's been a priority for the U.S. for a number of years to try to diversify Asian supply chains away from China. That was a priority in the TPP talks. They were trying to do it by incentivizing that. The Trump administration, and certainly elements of that, have been pushing for greater diversification of that. And I think we are seeing that. So, tariffs have an impact. On the other hand, Paul Volcker used to say 10 minutes of currency movements will undo 10 years of trade negotiations. So the U.S. dollar has generally been strengthening against the yuan, the renminbi, and so I'm a little bit skeptical about whether when those jobs coming back to the U.S. at the moment, particularly given again the fact that the priorities in this trade negotiation are about enhancing the ability for U.S. companies to do business and protect their corporate profits in China, not actually about leveling the playing field regarding the key cost differences in doing business: labor costs, environmental costs, subsidies.
All right. Andy Green is the managing director for the Center for American Progress. We appreciate your being here.
Thanks so much. Yeah, my pleasure.
Oil prices are on the rise after Iranian state media said 2 rockets struck an Iranian tanker traveling through the Red Sea off the coast of Saudi Arabia. Joining us now is Bubba Trading founder and chief strategist Todd Horowitz. Now, I'm having a thing with pronunciation today, Todd. You just call me whatever. It's good to see you. How should we understand this? I mean, it seems like the oil markets are shrugging this off. I mean, oil's trading up right now.
Good morning, Adam. You know what? Listen, the oil. You saw oil when the drones hit a couple of weeks ago, and oil went to 63. We've seen nowhere near there since. Now we've got some uneasy stuff in the Mideast once again, and oil is able to rally $1 off of way lows. Oil is really going lower again. This is really the market we're in right now. We've got way too much oil anyways. The supply is in plentiful, and of course, with us being a net exporter, I mean, we don't need the oil in the Mideast anymore. It's not part of the overall plan. If something should happen there, we still use it. But if something breaks down there, then it should not create. And you can see that play out in what they call a backwardation in the prices. Right today, October oil is almost $1 higher than February oil, which tells you that this is only being delivered by a little bit of fear. But again, oil's up 67 cents right now. How much fear is it?
Let me ask you this. Are the days of $100 a barrel oil gone forever?
I would think so. I mean, again, anything can happen. But if I were to guess, I would think there's a better chance of $20 oil than $100 oil. That would be my guess. That there's a more chance we can go lower than go higher in the big scheme.
Hey, Todd Pross here. I know you said that we're sort of not necessarily relying upon Mideast oil anymore, but we saw the government's going to move 1,400 troops to Saudi Arabia. I mean, it shows that there is concern there, right?
There's always concern. Again, one thing, the price of oil is one thing, and the concerns we have in the Mideast are another. I mean, they really aren't any more related. We are not held hostage anymore by OPEC. That was always the key. If you go back 30, 40 years, when OPEC would just shut the taps off and say, that's too bad, we're not going to give you any, basically, and oil prices would go higher. Well, now they don't have that option anymore. They have no control, so OPEC has really become worthless and antiquated and outdated and should not even exist anymore.
Yeah, but the world still needs Saudi oil, and eventually is going to need the Iranian oil. But with those two volatile issues in play, we've got the Aramco IPO coming, and would it be a foolish investment to try and get in on this?
You know, I don't know. I think, listen, we know they're going to make money. I mean, they've got plenty of oil. We know it comes out at a very low cost. I mean, certainly a barrel of oil doesn't cost in Saudi Arabia to produce what it costs here. You know, they're working with a lot lower labor costs, kind of like China, right? So, I mean, certainly they're going to be profitable. Certainly they're going to make money. Is it going to be a great deal? I mean, you know, again, the real question is the need for fossil fuels going to remain for the next couple of 100 years? And the answer is probably yes, to some extent. But again, the more efficient we get, the less we need, the easier it is to produce.
Todd Horowitz, Bubba Trading founder, thank you very much for being here.
Thank you.
Trouble continues for Boeing. The Joint Authorities Technical Review found the FAA failed to properly review 737 MAX jet anti-stall system. This is United Airlines is scrapping plans of flying the 737 MAX until at least January. Joining us now is Yahoo Finance's Alexis Keenan. Help us understand what's going on here. Is this a joint review by European officials as well as U.S. officials? What's in play?
Adam, this is an international group of aviation regulators. It is made up of regulators from the U.S. NTSB, as well as Canada, China, Indonesia, UAE, EU, and Brazil regulators. And what they're looking at here is specifically the certification process by the FAA that allowed the 737 MAX to take to the skies. They're really looking at here not the accidents themselves, but how the aircraft was approved as an iteration of a 737 model aircraft, given that it differed quite a bit from its predecessor 737 models. They're looking at that MCAS system, that automated feature that pushed the plane's nose down and is known to have played a role in both the Ethiopian Air and Lion Air crashes. Now, Reuters and the New York Times have published some excerpts from this report. They're getting a preview of it. The board found that MCAS was, quote, not evaluated as a complete and integrated function in the certification documents that were submitted to the FAA. Also, the report finding that the information that was provided to the FAA was so fragmented, they say, that it was difficult to recognize the impacts and implications of the system. So if you read between the lines there, they're not only blaming the FAA, but also the information that was submitted to the FAA by Boeing. Now, this particular review board does not have any veto authority over the proposed changes that Boeing is submitting to the FAA. Boeing has said, maintains that it intends on submitting these changes in the fourth quarter of this year. Now, Boeing said in a statement in response to this report and the reports by the New York Times and Reuters that the company appreciates the work of the Joint Authorities Technical Review, that the company is committed to working with the FAA in reviewing the recommendations and helping to continuously improve the process and approach used to validate and certify airplanes going forward. Now, what those improvements might look like, we are still waiting to hear. Still a lot of investigations ongoing, including by the Department of Justice, the SEC, congressional inquiries, also expecting to hear testimony from Boeing CEO Dennis Muilenburg later this month, and also the Indonesia report expected in November, as well as the Ethiopian authorities report. So a lot of investigations still pending here, though we did hear from the NTSB earlier this month. They have recommended that the FAA revise their existing regulations as to the assumptions that they're making about what pilots can anticipate in the cockpit. Adam?
Alexis, thank you. Coming up, a rough time for unicorns. From Uber to Peloton, we're going to break down what has been an interesting year, if that's the word you want to use. Some would say disappointing for big name IPOs. Plus, take a look at some of today's trending tickers on Yahoo Finance. So earnings season will kick off next week, and analysts don't have high expectations. Many forecast negative earnings growth. Our next guest says third quarter earnings growth should eke out a positive year-over-year number, though he says it will be close. Brian Nick is chief investment strategist at Nuveen. Explain to us why we're not going to go into an earnings recession.
Well, you've seen pretty aggressive downward revisions to this quarter and actually to future quarters too. And what normally happens is during earnings season, you have just enough companies beat a high enough percentage beat, and they beat by enough that the earnings expectations get moved up throughout the quarter. But the earnings revisions that we've seen have been, negative for a while now, not just for this quarter, but for the prior two. And it's really only been those beats that have rescued us from an earnings recession in Q1 and Q2. So this doesn't look like it'll be quite as rough as it was in 2015-16 when we actually did have about a 7-quarter earnings recession. But this is going to still feel like a big slowdown.
So as always, the earnings season kicking off with the large banks. What are you expecting to see from the large banks? And it's kind of interesting that they always kick it off because it kind of gives you an indicator of how the overall economy is doing. Anything that you're watching for that might spill over into the other sectors that will then report afterwards?
I'd like to see what they're going to say about sort of their operating model with the yield curve being flat or inverted throughout most of the third quarter. That's not a great environment to be a bank. Things have started to look a little bit better today with the yield curve uninverting, but this is going to encompass obviously the July through September period. I'd also just be interested to see what are they saying about trading volumes. We obviously had a lot of volatility during the month of August in particular, also September, just a lot of kind of oscillation in the markets, policy risk, economic data coming in, in kind of a bipolar manner. So in both of those senses, I'd be interested to see kind of what their outlook is for the lower for longer interest rate environment, how they're going to deal with that.
As we get into earnings season, though, and you talk about some of the forward guidance revisions that we've seen, don't they usually do this to set us lower expectations than, wow, it's wonderful? Is that in play?
Yeah, I just don't think the difference between a plus 2% quarter and a minus 2% quarter is all that great. But this is the game you tend to see, especially in the U.S. It doesn't happen as much in the European earnings season, strangely enough. But this sort of expectations game that happens every time. And that's why we think we will beat by just enough on average to get a positive quarter in Q4.
Okay, so when you say stay defensive, what sectors would you advise? I mean, because we saw the great migration, from growth into value. So what would you tell us?
So defensive is typically going to mean we think defensive growth is where we want to be. Consumer staples, utilities is kind of pure defensive. We have added some to that just on the macro risk, but that's sort of the same thing as like adding to bonds at this point. You're paying a very high price for essentially a defensive asset that provides insurance. Other areas where we're interested, you mentioned financials. That's been an area that's been an underperformer. Out of the value sector, that's our favorite sector. We think absent some kind of major cyclical upturn, energy materials are going to be harder to see leading us into the end of the year.
Hey, Brian, you talk about defensive and playing out there, but we saw this BAML survey today about how people are going into money market funds, and the biggest kind of move since the financial crisis. Now, what does that tell you? Like, does it mean that hey, people are getting too defensive here, and we should maybe set up for a bigger kind of market kind of uptick?
Yeah, we are not advising our investors to move into cash at this point. Our portfolio managers are not moving into cash, sort of saving for a rainy day. We think there's money that can be made in the markets. It's going to come down to security selection. I think sector selection is going to be a big one. And in places like whether it's the municipal bond market or the corporate credit markets, if you're talking about a money market, what are the alternatives to that for somebody who needs income? That's something we're very focused on. We still think there's opportunities in emerging markets and high yield municipal markets that are going to present a better kind of risk return trade-off versus just being in cash. But we're seeing the same things.
Right. Yeah.
When you talk about people being in money market funds, just to give you a quick idea about how you would have gotten burned in the last 52 weeks, S&P 500 has been flat, right? And as of right now, if you were in a money market and you missed out on the last couple of days, we're up on the S&P right now about 5.5%. You would have missed this upshot. You would have missed the growth.
Sure, and money market funds are actually one of the asset classes that we think are probably going to become less attractive if the Fed cuts rates again. You sort of know what you're going to get, and if they cut rates 25 basis points, the rate you're going to get on the money market fund is going to go down too, while everything else might become somewhat more attractive.
Brian Nick is the chief investment strategist at Nuveen. Thank you for being here.
Thanks very much.
The 2019 IPO market has seen its ups and downs, with many companies struggling since they went public. Despite big gains from today's rally, shares of Uber, Lyft, Slack, they are all trading down from their IPO price. But others like Zoom, Pinterest, and Beyond Meat, well, they're performing strongly since their debut. Yahoo Finance's editor-in-chief Andy Serwer sat down with NASDAQ CEO Adena Friedman at yesterday's Yahoo Finance's All Market Summit and asked for her take on where things stand right now with IPOs.
every year you have a mixed experience for IPOs. You know, whether or not the company is races off the gate and has a huge run up, or whether or not they might have maybe not as smooth a path into the public markets. The fact of the matter is their success is going to be measured over time. Their success is not determined by the first day, the first month, the first quarter. Their success is going to be measured by, are they building a scalable model that provides value to their customers while also providing value to shareholders?
Brian Chung is at the Wi-Fi Interactive touchscreen with more. Brian?
Well, it hasn't been a very good year for these large unicorn IPOs, but a few worth highlighting. The largest one recently being Peloton. This is the bike company that has the monitor, that has the content that you use that you can have and exercise inside your own apartment. So year to date, it's been down 12%. But keep in mind that these metrics that you're looking at are actually measured to the opening price on the day that it went public, not necessarily the actual price of the initial shares themselves. So Peloton actually began at $29 a share, which means that it's actually really down 21%. And we want to control for this for the same other IPOs that we've seen of the past as well. Uber Technologies, that being the ride-sharing company, has been down 28% year to date. But keep in mind that this is because the company actually ended up having its shares fall on the first day of trading. The original initial pricing for this, $45. That means that it's actually down about 34% year to date. But there's been one shining star, despite the fact that we've had these pretty bad IPOs, one of them being Pinterest. This is the online social media company. This has been on a tear. We've seen it's up about 10% year to date, but actually it priced at what was $19, which means that it's actually been up 40% year to date. So this stock, one that's on a tear. Relative to the S&P 500, however, keep in mind that the shares in the actual index have been up 18.9% year to date. So that makes the metrics for Uber and also Peloton look even worse. And we haven't even talked about the other ones like Lyft and Beyond Meat is a whole nother story as well. So
people should remember, and I'm not comparing Facebook to these IPOs, but Facebook, remember, after it opened, it went down to a low of like $17 a share.
Right, and that's the thing, is that you wonder to what degree you want to measure these stocks and these companies based on the stock movements in a very short-term period of time. This is something that Miles Udland has kind of always said. You always want to judge the company by its long-term stock price. It's not very, not very valuable to try to figure out, especially in its first early days as a public company, what the stock is doing, because people are barely getting familiar with the company itself as they're trying to find out what the business model is and how profitable it is.
And you mentioned Facebook, and was it 2012, 2013? I can't remember the exact year.
It was 2012, but don't quote.
I was reading about how the stock went down another leg because the lockup period opened up, right? So that was another kind of pressure on the stock that people sort of weren't happy about seeing. In the next 2 months, you're going to have 30 more 2019 IPO companies have more lockup periods opening, including Uber, Pinterest, and Zoom Media. So even more downward pressure perhaps on these stocks.
And the point that I'm trying to get at is that, people who might go onto even our site and take a look at a stock price, it's not necessarily reflecting the true value that's changed for that stock. I mean, you might look at, like I said, at a Pinterest and see actually it's only up by 10%, when in reality, the actual pricing of those shares, the prices that people in the initial offering actually paid, it's up 40%. I think that's a more honest measure than you might get when you just search it really quickly. So I think for those that are interested in looking at IPOs, it's important to keep that in mind.
The man speaks the truth. Coming up, let's make a deal. General Motors CEO Mary Barra reportedly held a secret meeting with UAW representatives in an effort to end the ongoing strike. Plus, take a look at some of today's most actively traded stocks by volume. right, 12:30 here in New York City. We're 3 hours into the trading day. Stocks are trading higher. We anticipate the announcement on some kind of breakthrough with the China trade negotiations. Take a look at what's happening with gold. Gold had been well above $1,500 an ounce, but now it is falling $1,487 an ounce. In search of a deal, a new report says GM CEO Mary Barra secretly met with UAW workers as the automaker looks for a way to end its ongoing strike. Investing in the final frontier, we'll talk to the company that claims it can take your money to infinity and beyond. And a new beer label has the internet burning up. The musical artist that teamed up with Coors Light to tap the Rockies just ahead. Welcome to On the Move. I'm Adam Shapiro. Good to have you here. Let's talk about General Motors because GM is pressuring the United Auto Workers to reach some kind of resolution in their strike, which entered its fourth week this week. The strike at General Motors, CEO Mary Barra secretly meeting with the union's president, Gary Jones, on Wednesday. We want to turn to our panel, first with Prost, to talk about what might have come out of these talks. And they talked about them going into, there was a meeting, I guess, at the Renaissance Center downtown at GM's headquarters, right?
Right, and GM is basically going straight to the workers now to say, hey, this is the deal we gave your leadership. Do you want it? We're addressing the concerns you had about health care, wage increases, and converting workers from temporary to permanent status. Now, I think the big issue right now for GM is the costs are really mounting here, right? We had some new data from the Anderson Economic Group come out today saying GM has lost $1.1 billion in profits since the strike started in mid-September. Employees have lost $624 million in lost wages, and the federal government has lost $250 million in tax revenue. So this is like hitting a lot of people in the pocketbook, and for GM in particular, because they're Moody's might downgrade their debt. So,
well, and you know, those of us who covered the GM collapse and then bailout with the federal government more than 10 years ago, you know, one of the things that Mary Barra has to hold the line on is those costs. Now, working on those lines is difficult work. It's not easy. But one of the concessions that they got as part of the bailout was that there would be a two-tiered structure for pay, and that people coming in, new hires, would come in at a lower place, but they protected the salaries of those who had been there much longer, but now they want to do away with that, and that's going to set GM up potentially for problems in the future if you're looking at buying this stock, isn't it?
Yeah, I mean, this is this overhang that the companies like GM, Ford, and FCAU, for less percent, have because when compared to Hyundai, compared to the Subaru, for instance, they don't have these legacy labor costs, pension costs that GM does. Ironically, GM workers are saying, hey, those guys get paid more money in those plants than we do, and they're non-union. So it's a really weird dynamic.
Okay, and then Ford's having some trouble. You know, their vehicle sales in China really are in the back seat. They have been down throughout the third quarter, dropped nearly 30%, and they're getting ready to introduce over the next 5 years. Is it 30 new models in China?
I mean, the thing with China is that it's not just Ford that's having a tough time. There are a lot of automakers having a tough time in China right now because of the economy. They're kind of slowing down just a bit. And also they're pushing more towards electrics. So Ford, I think, is of those 30 models, I think a huge percentage of those are fully electric models, which I think will really kind of more appealing to that market. But we'll see because it's sort of slowing down there too.
All right. Well, something that's not slowing down, luxury watches. From aviation to watchmaking, Bremont Watch Company was founded back in 2002 by two British brothers after an unexpected run-in with a small-town farmer. Here with one of us now is one of the founders, Giles English, to tell us about the watches. But very quickly, you made an emergency landing in a field, met a farmer, and how did that lead to the launch of your successful company?
Well, we grew up, my father was an amazing guy, he's a PhD aeronautical engineer and loved his aviation, but also loved his watches and clocks. So we grew up with that. And then he sadly died in a plane crash with my brother. My brother amazingly survived. And 3 years after that, we set up Bremont, went to Switzerland to start off before we brought it to the UK, and we had this chance encounter. My surname's English, couldn't use that as a name on a watch, and we had a forced landing in a field in French farmers' pea field, and this amazing old farmer called Antoine Bremont saved us, and we thought that's a lovely name, Bremont. That's where the name came from.
I've been mispronouncing everything today, so forgive me. I called it Bremont, but I'm holding actually one of your latest aviation tributes, and you call it, this is the Hercules, and it's a tribute to the plane we know in the United States, the Howard Hughes Hercules, and I just got to throw this in there. Does it tell time simultaneously in Monte Carlo, Beverly Hills, London, Paris, Rome, and Stade?
Well,
a famous movie.
Not totally, but it's an amazing watch. So
it's beautiful.
Working with Evergreen Aviation Space Museum, so you have parts of the original aircraft based into it, and so if you turn it on the back, you see the wood.
The rotor's beautiful in the back.
Oh yeah, look at that here. But I'm going to hold this up so you can see it. So this has actual parts of, well, not parts from the Hercules, but
parts from the Hercules. So that wood on there was flying on that aircraft in 1947 when it did its a maiden flight that no one thought was possible. And we've been raising funds for the museum to keep the aircraft in the condition it is now.
There's a beautiful watch there. So I had to ask, the luxury watch industry is having its moment right now, right? It's a lot of interest in it. Watch blogs popping up everywhere. People are really into it. You see the vintage market also coming up, all in the face of the Apple Watch's popularity. So why do you think people are really coming back to the mechanical, handmade, sort of craftsman type watches we see here right now?
I think it's a fascinating question. I think partly, what I love about mechanical watches is 86,400 seconds in a day. That watch will be within probably 4 or 5 seconds accurate. But that watch will work in 200 years' time. Yes, you have to service it. If it breaks, you can fix it. So it really is about one of the few things a man can buy as a piece of jewelry which will last forever. Each watch tells a story. It says a lot about the owner. And I think a lot of the part about smartwatches, it's at least getting people to wear something on their wrist again. So I think that all helps.
Yeah, I was going to say, as a referendum here, it seems like 25% of the people here have a smartwatch, the one person being me. I mean, how do you try to differentiate your product then from, hey, people's watches can now work on their own. You can now call people on it. You can store gigabytes of music on just your wrist. Why should people be wearing an analog watch, though?
Well, I think that that watch you've got there in 2 years' time, it's totally out of date. You'll chuck it away and buy a new one. Whereas that, it won't do. And I think there's a lot of people, you can have all of that on your phone. You want something that is a gift to give to your children. 20% of our business is making for the military around the world, and these guys are buying it because it is something that it will be passed down as a family heirloom.
Mine's already starting to break, so I might
check
in the market for a new one.
You can come over to me, Albert.
Well, I'm curious because I'm one of those people, the $95 fossil watch versus the luxury, potentially $25,000 watch at the end of the day. But who's buying? I mean, because you have watches which are luxury watches for much less than this one. Yeah. But who's the market?
So the market for us is quite interesting. It's probably 30 years above, up to probably 70. A lot of watch collectors, but it's gifting as well as buying. But we'll have individuals who own 30 of our watches. And they're good investments as well.
Right. Hey, Giles, real quick. So I was actually kind of surprised. I didn't realize that actually British watchmaking back in the day was the preeminent kind of source for really high-end watches, not the Swiss. Isn't that correct?
Oh, yeah, totally. So if you go back 100 years, half the world's watches and clocks will be made in the UK. And 2 world wars knocked that out. If you can, we're machining components to about 5 microns. Human hair is 75 microns. So if you can make a watch, you can make guns, planes, and everything else. Sure. And the industry passed away, and we're one of that we're doing our bit to bring back British watchmaking. So come to Henley-on-Thames, you see that's built by hand in our workshops.
And again, very quickly, how much is this one? This is the gold.
That's a golden, so we're only making 75 of those, so that's about $25,000.
Very nice. Thank you so much.
Thank you very much.
Giles English, founder of Bremont Watch Company. Thank you for being here. We wish you success and that all of us have accounts that we can afford a watch like that in the future.
Come to our store in Madison and show you that, but thank you very much.
Coming up, investing in infinity and beyond, we're going to talk to one company that wants to help you cash in on the space race. Let's take a look at some of today's winners on Wall Street. All right, let's take a look at the top trending stories on Yahoo Finance right now. Inspections of Boeing jets have turned up structural cracks in more than 3 dozen 737 NG planes. Now, this is a different aircraft than the MAX. The discovery is raising a new safety issue for the company, already dealing with 2 deadly crashes involving newer versions of the plane, the same aircraft. Boeing declined to identify which airlines found problems. Wendy's is expanding into Europe. CEO Todd Penegor made the announcement at the company's Investor Day. The European openings are set to happen within the next 12 to 18 months and are part of the company's efforts to jumpstart growth. Turns out it is harder to make an electric car than a vacuum. Dyson announced it will shutter its automotive business, saying the company can no longer see a way to make the vehicle project commercially viable. The company says that its automotive team will be absorbed into its home division, which builds products like vacuum cleaners and hair dryers. Elon Musk says SpaceX could launch astronauts to the International Space Station as early as next year. The news represents the next step in the commercialization of the space industry. So, how can an investor get in on the action? With us now to discuss all of this is Andrew Chanin, the co-founder and CEO of Procure AM, issuers of an ETF focused on companies that are engaged in space-related activities. It's good to have you here. I'm going to throw out a number. I think they are predicting by 2030 that space industry-related investments are going to be more than $1 trillion.
So I believe you're pointing to a Morgan Stanley report, and it's actually by 2040 they believe it will be over $1 trillion industry, where Bank of America actually came out with more ambitious expectations, believing that we're looking at possibly a $2.7 trillion industry by 2045.
So I can buy into the ETF that you're now offering, UFO, and I don't have to wait to 2040.
So you could buy UFO and you get exposure to actually over 30 publicly traded space-related companies from around the world.
So a question, by the way, I love the PG-3s that you got on set. They're beautiful. But I wanted to ask, I mean, the kind of elephant in the room is that SpaceX is still a private company, right? Is there any sort of expectation among analysts in this community that they will go public at some point, or the expectation is that they'll continue to remain private and just kind of, be in their own ecosystem for the time being?
So Elon Musk, certainly has his experiences working with both private and public companies, and certainly sees benefits and possibly negatives to doing so. So I would say that SpaceX will make that decision when it makes the most sense for them as a company to do so. But looking at kind of the other billionaires that have been investing across space, you have Bezos and also certainly Virgin Galactic and Richard Branson. And you were just talking about Boeing, and Boeing actually just announced a couple of days ago that they're actually making an investment into Virgin Galactic, which is actually expected to IPO shortly later this year.
But where's the real growth in all of this? Is it going to be the space tourism? I mean, or is it already where we know there's profit, satellites?
So I think that we're going to see, in the immediate term, data. And the way I'm looking at this is you're seeing these various megatrends and these different areas like, 5G and cloud computing and machine learning and Internet of Things connected devices are heavily reliant upon space-based systems like satellites. How does that data that's being generated to, the tunes of, just an incredible amount of data per second going from A to B, how's it going to get there? And in many cases, it's satellites. So satellites are a major part of this fund, and certainly something that many investors actually don't have much exposure to already.
Does the UFO fund consider, are you guys going to consider private companies too as part of your investment kind of matrix? Or
so right now the fund only invests in publicly traded companies, and it's kind of difficult to get exposure to some of these private companies. But to the extent that something like Virgin Galactic ends up doing this IPO through the SPAC that it was merged into, that's certainly something that the index could include. And because we're a passive fund, we track that index.
When you look at where to invest, do you talk to companies? I mean, there's the proposals to mine minerals off of asteroids. It sounds like pie in the sky. No one's actually done it yet. But do you have discussions with any of these companies about this is when we expect to be able to start doing the test to do it?
So we're learning about what different companies in the space are doing, and actually the index provider that helps select these companies is actually a former director of the Space Foundation. So he has a background in understanding the space business, space policy, things like that. And he's actually doing the research to determine what companies go in and out. And he believes that it's certainly something that's possible where we can not be too far away from from the technology, but really it's the expense side of it. So when we get to more reusable rockets, if we could turn that asteroid that we're mining also into a fuel station that will help power those rockets to take the minerals back to Earth, it could be a lot more likely. But we're probably decades and decades away from mining asteroids.
Okay, but you can buy into the UFO ETF right now. Andrew Chanin, co-founder and CEO of Procure AM. Thank you for being here on The Move.
Thanks for having me.
The Trump administration and the Trump Organization, the sprawling holding company for Trump assets, have a history of getting entangled. I spoke with Eric Trump, Executive Vice President of the Trump Organization, at Yahoo Finance's All Market Summit to talk about that. And I asked him the pitch that the president made to hold the G7 summit at a Trump resort in Florida and the potential of that being viewed as a conflict of interest.
Yeah, because we'd be doing it for nothing, and a lot of people love South Florida, and it's the right time of year for it, and we've got a spectacular property.
No one denies it's spectacular, but it just appears to be a conflict, doesn't it?
When they do G7s, and this is one other thing that people don't ever kind of give us credit for. Anytime the government comes and if my father travels, they stay at our properties for free, meaning like cost for housekeeping effectively, because you actually have to legally charge government something. So everywhere that he goes, if he stays at one of his places, the government actually spends, meaning it saves a fortune, because if they were to go to a hotel across the street, they'd be charging $500 a night, whereas we charge them like $50, right? And they're there on property. And he never gets credit for that. And the whole point with the G7 is he would have totally funded it as well. It actually would have saved the U.S. a tremendous amount of money, in that they wouldn't be paying for massive amounts of rooms at some hospitality company that was going to milk the hell out of the U.S. government, because quite frankly they knew they could. Doral is 5 minutes away from the Miami airport.
So is the Biltmore, by the way.
Incredibly easy to get to, and it sets up well for it. And it's 800 acres, and it would be the perfect spot to do it. And if it happens, great. Quite frankly, if it happens, the government will save a lot of money, because again, we won't charge. And if it doesn't happen, they'll go somewhere else that will charge a government an absolute fortune. They'll spend a fortune like they do on everything else. And I think America would actually, and then I think third of all, I think my father's a prideful guy, and he built something incredible, and there's a comfort level there, and he would like to show hospitality to these countries like they do to us.
One thing you should know about the Trump Organization is that year over year it has lost revenue. I think it was $452 million in 2017. In 2018, it was reporting $434 million in revenue. Now, we don't get to dive into these numbers because it's not publicly traded. But what do you think? You think the Trumps are making money with Mr. Trump as president?
I mean, this is the first time I've heard them say, we're not going to charge market rates for these rooms. Like, give me a break. I mean, people are staying, all other foreign governments are staying at those hotels and paying a lot of money to do so. I don't know what they're going to do when the U.S., I mean, the G7 is going to, what are they going to pay for everyone's room? Going to be like a discounted $50 rate? That's crazy.
He did kind of say it would be free.
Well, I think that he kind of missed the point, which is that free is kind of problematic too, right? I mean, when you think about the idea that when government officials, and this isn't even international, when government officials stay at hotels, they can't be getting those hotel rates for free, because then it'd be a bribe or perceived to be some sort of gift, right? I mean, for the Trump administration to host dignitaries from around the world at his own resort for free, that could be perceived as giving a gift to those foreign dignitaries too. And as we've seen with this administration, the optics of, working with other foreign organizations, I mean, it just doesn't look very good. And I think even Eric Trump acknowledged that. He was saying that, when other government officials do stay at hotels, they often have to pay a rate. But then he flipped it on its head and said, well, we can offer it to them for free. It's like, well.
But then I said to him, look, just avoid the image of a conflict of interest. But for the record, the Biltmore, I grew up in South Florida. We used to go onto the golf course there, the greenie we called the guy, would chase us off. But it's a luxury resort in Coral Gables. It's a huge golf course. It's a if you know it, you can Google it right now. It's this luxury hotel.
Or Camp David, as you said.
Bingo. It's been there before. It's also been on, what's the island off of Georgia? I forget the name, but it wasn't Hilton, it was another one.
Sea Island?
Sea Island.
Oh, Sea Island.
I think it was at Sea Island. So anyway, coming up, they are a sucker for Coors Light. Really? Coors Light? The rockers that will now grace the beer's label. Plus, take a look at some of today's losers on Wall Street. It's time for the buzzer beater round. 3 stories, 1 minute each. We're going to start with this. NBC Universal will stop airing a Trump re-election campaign ad on all of its cable networks. The ad claims that presidential hopeful Joe Biden promised Ukraine $1 billion to fire a prosecutor looking into a Ukraine gas company with ties to his son, Hunter Biden. All right, let's ask the basic question. What do you think? NBC's not going to accept the ad. They say it's misleading.
I don't truly understand the optics of or rather the mechanics of whether or not media organizations can or cannot post certain political ads. But I think it does lend itself to a slippery slope about picking and choosing which ads do go on air.
Yeah, I mean, I am for NBC kind of policing that, but I think that raises the same, like you said, the same question of, are you the police of these ads? And I think that in our country we allow, kind of puffery, and we allow certain speech that's political, that's is protected, right?
It's the cable property. So let's go right to the elephant in the room, MSNBC. Why would Trump advertise on that echo chamber? Nobody there's voting for him.
Right, yeah, I don't know. That is kind of a curious question, but yeah.
All right, this is much more palatable. Got chicken? Costco seizing control of its chicken supply chain. The move is so it can keep the price of its rotisserie chickens at $4.99, $5. Costco believes it can slash the rising cost of chicken by bringing production in-house, saving up to 35 cents per. Oh, let's just cut to the chase. If you can get a $5 rotisserie chicken, you're going to Costco, you're going to buy something else, right?
I mean, you might. I mean, this chicken looks pretty good.
It is good.
I was surprised that they're actually going to they're controlling the production from chicken, farm to production to the whole until it gets to the store. They actually are doing end-to-end sort of control of their supply chain.
Do the same with vodka. The Kirkland brand vodka.
Okay, so you got to pay, was it $60 to get the Costco card a year?
Something like that.
Okay, so still, look, $5. How much is the vodka?
It's cheap. It's
okay,
very cheap.
So vodka and chicken, it's party time. Yeah. I mean, look, right?
What else do you need? But no, deflationary pressures, right? The Fed's got to cut. No, I'm just kidding.
Oh, yeah, please. They're drinking a lot of vodka at the Fed. Buzz, now please save me. The Jonas Brothers announced they will partner with Coors Light for a limited edition batch of their own beer. The Brothers Brew will feature their faces on the iconic mountains of each bottle. Would you buy this? No offense, but I can't name one Jonas Brothers song.
No, I'm not going to buy it, but they have a ton of fans and they will buy those. Well, their fans might be too young, but
I was going to say
of age fans,
yeah.
Right?
A Coors Light is a fine beer, though, is my hot take.
Oh,
Mr. Connoisseur of beer?
Oh. Yeah, of the cheap beers, it's the best. Bud Light is like water. It's terrible.
Jenny Cream Ale?
Coors Light is fine. Jonas Brothers are fine, too. I'm indifferent towards them. But I would
show the label. It shows their faces on the mountains, the Rockies.
It's just a weird tie-up, though, too, right? Like why Coors Light and why the Jonas Brothers?
Right? Why not White Claw or a hard seltzer or something?
Yeah.
But I don't know. I guess Coors Light needs some help, but I don't know. Joe Bros are great.
I think
they have this song Year 3000. That's a banger. That's a catchy one.
They need to have the Bon Iver, Bon and Viv.
Oh, that's smart.
You know what I'm saying? I think that would work. That's a
drink scotch. Let's take one last look at the markets as we get ready to hand off to Wi-Fi PM. And you can see the Dow is still trading higher. Of course, we're going to have that announcement. We expect some kind of deal, at least outline for a deal from the White House regarding China trade. The president's going to be meeting with the vice premier this afternoon. So keep an eye on these markets. And remember that Wi-Fi PM is going to take you through the next hour of trading.
It is 1 p.m. in New York City, and the major indices are surging on a positive update to U.S.-China trade talks coming from the White House. On tap for today, geopolitics is the name of the game, why President Trump is so upbeat about negotiations on trade, and priming investors for the, quote, good things he sees happening with China. As the Pentagon prepares to deploy additional troops to Saudi Arabia, a former White House director of global engagement will break that move down for us. Plus, Houston Rockets gear reportedly disappearing from Nike shelves in China. Why that seems to fly in the face of the company's history of backing powerful causes. And e-cigarette health warnings mounting. The professor behind the first study linking vaping to cancer in mice will join us. Why he says it's just the tip of the iceberg. All that and more. This is Wi-Fi PM. Good afternoon. Happy Friday. I'm Zach Guzman, and joining me on Wi-Fi PM today is Yahoo Finance's Julia LaRoche, along with capitalistbook.com author Nathan Latka. Guys, happy Friday to you both.
Happy Friday indeed.
We have a market rally on our hands. It's going to be a good day.
It's a strong way to end the week. We want to check the market rally Nathan's alluding to there. And right now, the Dow is up about 400 points, the S&P up by about 44, and the NASDAQ leading the way higher, up 1 3/4 of 1%. We'll see where things go throughout our hour. But first, President Trump kicking off this rally by tweeting about trade negotiations with China earlier today, writing, quote, good things are happening at China trade talk meeting. Warmer feelings than in recent past. More like the old days. I will be meeting with Vice Premier today. All would like to see something significant happen. That meeting is slated to take place at 2:45 p.m. Eastern Time today. And joining us now is Global Situation Room President and former White House Director of Global Engagement, Brett Bruen. Brett, good to see you again. Great to be with you. In studio this time. We just saw reports indicating that Beijing is open to a partial trade deal, which is something that the White House has been calling for here. What are your thoughts on what we might see when it comes to a short-term trade deal?
You know, it's interesting because you're seeing a convergence of common interests. Beijing wants to end this trade war. The uncertainty is not good for international investment. It is clearly having some negative effects on not only the economic standing, but Xi's political standing. So he wants this done. Trump desperately needs a deal done.
Well, I guess the question is, why haven't we seen one get done? Because do we think one, even a partial one, would that even be possible at this point? Because we get all this hype, oh, it's going to happen, then it falls apart. We've seen this time and time again. I mean, what do you think it is that's fundamentally stopping a deal from getting done?
The art of the deal. I mean, this is Donald Trump's specialty. He came into office saying, I know how to get a deal done. He knows how, perhaps here in New York, to get some real estate
business deals are very different. So.
But diplomatic deals, trade deals, these are incredibly complicated. And what you've seen, whether it was with Trump, with Jared in the Middle East peace plan, is that New York real estate deal mentality run up against a bunch of brick walls when it came time to actually getting these things done.
That's kind of the thing, too, though. I mean, when we're talking about what might happen here is a short-term trade deal, very different than all the complicated questions that might need to be answered in a longer-term trade deal. But I guess we've seen in the past, just pausing tariffs that are slated to go in effect might be enough to sustain the market rally that we're seeing today, up 400 points off of news that they might get something. Would that be kind of what a short-term trade deal might look like, is just pausing or removing planned tariffs to go into place?
And it's a confidence-building measure. And Trump is starting to understand that he needs to build trust. He needs to build some momentum through to a trade deal. So he may not be able to get the whole enchilada, but if he can get some movement heading in the right direction, maybe then he can get the Chinese to make some more compromises.
Brett, you say Trump needs it. You also say Beijing needs it. And obviously in the art of the deal, it's about who can afford to walk away. So that's the question I've got for you. Who can afford to walk away with less consequence?
Remember the Chinese, and I've been to Beijing doing some talks and meetings over the last couple of years, astounded by how their long-term thinking is so different from Washington's, from Europe's. So what you're seeing play out now is two completely different approaches. Beijing is looking over the long term. I would say between the two, they are the ones more willing to walk away.
Yeah, I mean, we talk about the luxury of not having term limits over there. Xi Jinping can let this play out as long as he wants. But it's not just trade that we're watching today. We're also watching the price of oil after an Iranian oil tanker was struck by missiles in the Red Sea off the coast of Saudi Arabia. Iran's state media noting the explosion damaged 2 storage tanks and caused an oil spill that is now reportedly under control. No blame has been assigned from any Iranian government officials at this time. But Brett, this comes as Reuters reports the Trump administration is gearing up to send troops to Saudi Arabia after the oil attack on Saudi Arabian oil facility last month. And right now is an interesting time when it comes to global policy for President Trump, because he's noted, when you look at the situation in Syria and the Kurds and Turkey, he didn't want to stay in a conflict in the Middle East for a long time, but now the Pentagon's saying 2,000 troops are going to be sent.
2,000, much more than I think initially some of the observers were counting on. And it just goes to show how complicated this situation is and how much we have to put on the line, especially after the alliance with the Kurds was broken. Mm-hmm. I think confidence is in the United States, in our leadership, in the willingness to carry these issues forward, to take on these fights. It's going to be much less. What you're seeing play out in Saudi Arabia right now is an effort by the Trump administration to shore up confidence.
Does it seem interesting to you, though? I mean, when we talk about the decision to, a lot of people labeled the decision to remove troops from Syria there as turning our backs on a U.S. ally in the Kurds. Does it seem that that could be at odds with what we're seeing with Saudi Arabia? Obviously, the timing of this is interesting since we're waiting to hear the valuation of Saudi Aramco, which could be the world's largest IPO. That obviously was very much at the heart of what was going on with the attack on Saudi Arabian oil facilities there. Does that play into this at all when you look at it?
Well, let me break down a couple factors. One, I think what you're seeing play out across the Middle East right now is what we used to say in the Situation Room is an asymmetric conflict. You're seeing Tehran try to launch some attacks that they're not taking direct credit for. Similarly, today, I think what is taking place probably has the fingerprints of Riyadh all over it. And yet, at the same time, it's a bit of a dancing match where they're strutting their stuff. They're showing what they can do. They're showing the cost of this conflict. Yet neither party really wants this to escalate. Mm-hmm. So it's a very interesting tango that they're involved in.
No doubt. And as I said, we still await what the final valuation on Saudi Aramco will be for that IPO. But nonetheless, 2,000 troops going to Saudi Arabia. Brett Bruen, thank you so much for breaking all that down. Appreciate you taking the time. Well, Blackstone CEO Stephen Schwarzman weighed in on U.S.-China trade relations during Yahoo Finance's All-Market Summit yesterday. And Julia, I know you spoke with Schwarzman on the topic. What stood out on his thoughts in the conversation?
Well, let me just set some context real quick. Steve Schwarzman, the CEO of the Blackstone Group, has been at the heart of these discussions for more than 2 years now. Look, he knows the top officials in China, and he also is friendly with the Trump administration. So he's helped facilitate some of these talks. And so I asked him, look, Steve, are we ever going to see a deal? And the takeaway is this is really hard to handicap. I mean, obviously, it's been going on for so long. They're some of the most difficult negotiations. And will we expect maybe a full deal? Probably not. So take a listen to what Schwarzman has to say.
We're asking the Chinese to change their system. Their system was brilliantly designed as an emerging market, developing market economy. It's a time for adjustment. The question is, how fast will an adjustment come, over what time frame, and how dramatically at each point? Because no one would give up their entire system because someone else asked them to do it.
Well, you can check out our full conversation on yahoofinance.com from the Yahoo Finance All Markets Summit. And guys, it sounds like there has to be an adjustment. It's just a question of what does that adjustment look like? What is the Chinese delegation willing to bring to the table? Would that be satisfying enough to the U.S.?
Yeah, and whether we'll get that answer will probably come out at 2:45 when President meets with Xi
That's really
Jinping.
optimistic.
They spring it on us, before the weekend. It's always a Friday news thing.
Yeah.
Right? Especially if it's bad news. You expect it to come out a little bit later on Friday.
Something else that I forgot to bring up is that we often think of China as a monolith, and that's something he brought up. That they have their own internal politics as well, and that's something also to keep in mind, that there are folks who do want to see reform in China as well.
I don't think, by the way, you see Trump close out this reality show now, because it's not the best. He doesn't get the most from it. Now, 3 weeks before the election in 2020, if he announces a major deal with China, that's going to do way more for him politically than bring closure to this today. So I don't expect I would not expect to see closure on this thing today or anytime soon.
Sure, no, that's a good point. Plus, he doesn't want to see the market dive either, though. He's got a nice rally going on today.
Tease it.
Just painting positive vibes.
Tease it with Twitter.
So we'll see. We'll see if he continues to tease. No doubt he has in the past. That trend might continue. All right, well, the NBA's problems with China are growing. It's not just President Trump and Xi Jinping we're talking about when it comes to China. The NBA, obviously, this story has been going on all week. And now the Houston Rockets sneakers, apparel, and other items are being pulled from several Nike stores in major Chinese cities. Reuters reporting that managers at stores in Beijing and Shanghai were told through a company memo to remove the merchandise from store shelves. And this comes as the NBA's China games went ahead as previously planned, but players and executives were not made available to the media. Guys, interesting to see Nike now getting ensnared in this as well now.
Not surprised, though. Look, I think the big question is, will companies put principles ahead of profits? And in this case, it doesn't seem like that's going to happen, because they look at China as this massive market, hundreds of millions of consumers, also the viewers. Basketball is huge in China. And I think that on the flip side, you also bring to light what's going on in Hong Kong. I know a lot of folks in the investment community have been paying attention to it because it's a financial capital, but now you've brought it into your average American's home who watches the NBA, and you're starting to see folks wear these signs or T-shirts at games, bringing the issue further into the light. So I don't think it's going to go away. Again, I'm not surprised that companies are doing this. Is it the right thing to do? That remains to be seen.
And you're going to have to, you're going to see a lot of companies starting to take more positions. They'll try to avoid the politics and just state facts. We're going to talk about Amazon, obviously, later and what they did recently related to this.
Yeah.
But Zach, you're a big NBA fan. Doesn't this feel a bit hypocritical?
It's very strange. We're talking about how players in the league have been tiptoeing around it. But Nike, when you look at it, $1.68 billion coming from China in terms of revenue over there. So they've got real profits on the line here. But if you think about what their branding has been in the past, it does seem a little bit hypocritical, because when you talk about Nike, think about the bold statements that company has made in recent campaigns. Of course, you might remember the ad with former NFL quarterback Colin Kaepernick. Take a listen to that one.
Believe in something, even if it means sacrificing everything.
So you think about sacrificing everything. Come on, Nike. It's $1.68 billion is a lot of money in China, but it's not everything for you.
No, I hear you. And I guess that also brings up the question is, do you weigh in on domestic issues, or do you tread into the international issues? And I think you're not seeing, I think companies are afraid to do that. And I only think they'll see real change is if American consumers say, you know what, those aren't our values. We stand for free speech. We also stand for pro-democracy, and we're not cool with that, so we're not going to be buying your merchandise. But I also don't expect American consumers to do that.
Yeah, it's one of those issues that I don't think a lot of people here have actually been paying too much attention to, despite the fact that it's been going on for, almost 18 weeks when we talk about Hong Kong protests.
Yeah, I think that started in June.
I'm not sure if the trade-off between pro-con taking a stance on this one particular issue, as opposed to maybe guns, as we've seen Walmart and Dick's take stances.
But at the same time, it's not going away anytime soon. So, I think you'd have to see one make a step first for others to go in that direction. And right now, I think companies are afraid.
Yeah. Is that the way that most businesses might weigh something like this, that is breaking down what money is at stake?
Most entrepreneurs, coming from an entrepreneur perspective, I hate having anyone tell me what to do.
Yeah.
So if I was one of those folks at the Nike stores in China getting that memo, I'd go, I mean, it would pain me to be doing this right now, to the point like businesses will only respond where there's profits at stake. And unfortunately, I don't see where Nike actually feels this in the States in the form of protests or things. So I think they probably will just kind of get away with it, and you'll see this tiptoeing. What I don't like, though, is when you have, press conferences where players can't comment on it or reporters are barred from asking questions about it. I think this is going to continue to boil, and I mean, we'll see what happens.
Yeah. I mean, the games, as we noted, did go on as scheduled, but again, that kind of media blackout is something strange to see when it's an American league in China being tossed around like that, just told what to do. Not usual for the NBA. All right, well, we're also watching Walmart, one of those companies that we mentioned did take stances, and that company is going through a leadership shakeup. The head of Sam's Club will become the next president and CEO of Walmart's U.S. division. Julie, I know you track Walmart very closely.
And I've met both of the folks. John Furner is the head of Sam's Club right now. And guys, I have to say, I think it's the right move. He's been with the company since 1993, started out as a college student, hourly associate, working the garden center, and literally worked his way up to store manager, regional manager, held roles for Walmart International in China as one of their chief merchandisers, then Sam's Club, and he was really responsible for the Sam's Club turnaround that we've seen in the last couple of years, growing those critical same-store comp sales numbers, making important decisions like closing stores, but also placing folks in different roles, using technology in the store, whether it's from the shopper's experience or the worker's experience. So again, this guy is a Walmart lifer. He is so admired internally at the company. I'm telling you, when I was at the shareholders week, that cheering section for Sam's Club is just insane. Like they were louder than the Walmart section. Sam's Club is a lot smaller. It's that membership store. Now, Greg Foran, who has been the Walmart U.S. CEO, came over from New Zealand, really grew up at the Woolworths, a really famous supermarket chain in Australia and New Zealand, was passed over for the CEO role there, came to Walmart International first, then Walmart U.S. This guy is a legend in retail, and he has been so responsible for Walmart's tremendous growth in the last 5 years, getting the same store sales up, also rolling out that really successful online grocery pickup and delivery, which has just been a game changer, making the stores better. And I got to also talk to him, and this guy literally makes unannounced store visits. He wears his Walmart vest. He loves wearing his Walmart vest. Like, and even when he's given just a regular talk to investors, he's always in the Walmart vest.
Real.
Yeah, keeping it real. But he'll just show up to a store, like walk around the parking lot, go in the produce section, check it out. Like, he just knows retail so well. I think one of the main takeaways, I was reading a Bank of America analyst note, they think that it will be viewed as a significant loss. I'm not sure that's the case because the stock has not reacted. So investors look what he's done the last 5 years. They set the company up for success. The momentum will continue. People do admire John Furner. And when he steps in the role, I think that he will also make the right changes or continue that momentum, especially given his tech chops.
Yeah, and the outgoing CEO.
So that's my Walmart spiel.
Yeah, that's a good spiel.
I know that was a long-winded answer.
No, it's a good spiel. And the outgoing CEO going back to work with a New Zealand airline company as well.
No,
so he's got his next thing lined
Airlines,
up as well. All right, well, coming up, Amazon taking a major stand on some major political issues in a new corporate manifesto. But could alarming working conditions at Whole Foods suppliers already be proving it to be more spin than truth? We'll discuss that. Plus, how Facebook might be impacted by Senator Elizabeth Warren's threat to break up big tech. What the company's chief creative officer told me right after this. Welcome back to Wi-Fi PM. Right now we're checking the market action. We got a market rally, folks. The Dow up 360 points, the S&P up by about 40, and right now the Nasdaq losing a bit of steam, up 1.6%. We'll see where things go with the rest of our show, guys. We'll see what happens out there. But Amazon, for now, is speaking out on a number of issues in a statement called Our Positions. The e-commerce giant states the federal minimum wage is too low. Serious action is needed to combat climate change, and announced its intentions to continue providing tech services to energy companies among the highlighted points of what I'm calling a manifesto. But these are just some of the policies that the company outlined. It also stressed government regulation for facial recognition technology and immigration reform. But Nathan, we were just talking about this. It's interesting to see Amazon take a stance on some of these positions, including climate change, because even internally, they had been attacked by some of their employees for not going far enough.
Yeah, I think this kind of gives them a battering ram so that when Bezos and Amazon continue to be attacked, and they will be over the next 16 months going up to the election by kind of the Warren and the Sanders and other Democratic candidates, and who knows, maybe Trump one day as well, that they at least now have positions stated that they can say, here's our position, we're communicating clearly. But to your point, what they chose to discuss and what more importantly they chose not to discuss was interesting. We have the Ping Identity, IPO coming up, which is interesting because it's in the identity management space related to data. Mm-hmm. You've got Amazon commenting on facial recognition technology. As you know, that's really the backbone of how the Chinese government, right, through their social program manages their folks. So this is really, to me, some noise and then a statement on data.
Yeah. And we also had in there talking about counterfeit penalties, penalties for selling counterfeit goods, which to me sounded interesting.
Why'd they put that in there?
Because it's a big problem that Amazon runs into. We've seen competitors launch
third-party sellers selling bad things.
Yeah, and so if you think it's large enough, a big enough problem to put in your manifesto here, you would think that you might be doing more.
Yeah,
it's
almost like don't attack us. We've removed 3 billion bad listings on our own site. Like we spent 400 million policing it. Like don't attack us. We're doing good things. But it is an odd thing to talk about and choose to talk about when you police your own problem, essentially.
Well, I guess what is the punishment? Yeah. You need to have a punishment, I suppose. If you just kick them off and then they find a way back on the platform to police it that way, it might have to come to that.
It's just funny though. I mean, you've tracked this at Walmart too. The way that Bernie Sanders has kind of attacked Walmart for their minimum wage and the way that they shot back at him saying, look, we pay our workers higher than the federal minimum wage. If you have a problem with the minimum wage, do something to change it. You're a politician. And then we're seeing Amazon kind of put this manifesto out there. It just goes to show how companies as big as Amazon are continuing to become political.
I know it's kind of getting some criticism, but at the same time, I would wonder what people think internally, because I think as we get out of this whole fourth industrial revolution, and Mark Benioff talks about this going into what's called the fifth industrial revolution. I mean, businesses have to do good. You're going to have to stand for something in the future. Maybe this is just a start. I know people might not agree with everything on there. You didn't put this on there. I wish this was on there. Maybe I want this phrase differently. But it's a start. It's a different era that we're seeing for business, and I think we're going to continue to see more of this.
Yeah, well, it's one thing to put out, a bunch of bullets on a piece of paper and say this is what we care about, but it's another to actually live that. And we want to dig into that a little bit more because Amazon is also facing scrutiny following a shocking report about the worrisome working conditions tied to its subsidiary Whole Foods. A new Oxfam report ranked the grocery chain the lowest out of 10 supermarkets for its treatment of workers throughout the company's supply chain. And join us to discuss that in more detail is Oxfam Great Britain Ethical Trade Manager Rachel Wilshaw. And Rachel, thanks for taking the time. The real reason here, I mean, we're talking about farm workers. They're not actually Amazon employees, though. So explain what you found from your Behind the Barcodes report and how those farm workers are actually treated and why Amazon and Whole Foods might be complicit in this.
Sure, thank you very much. Yes, we published some additional research yesterday that kind of built on what we published last June, all under the Behind the Barcodes campaign banner, to highlight the conditions for workers in the food supply chain of supermarkets. As you say, we're not looking at their own workers. There may be issues there, but we're focusing on the hidden suffering and often deep poverty that is in their supply chains and that consumers may not even be aware of it. So what we published yesterday highlighted that people in Brazil growing tropical fruit don't have sufficient protection from pesticides. Workers in Assam's tea estate, they earn so little that they are entitled to government handouts of rice because they fall below the extreme poverty line. So these are the kind of issues which have come through our research. And we think that supermarkets need to factor this into their approach. And we're just not seeing that happening at the moment with Whole Foods.
Well, Rachel, I just want to read what Whole Foods said in response to that report that you put out, because they had a direct statement to make. They said Oxfam's latest report does not accurately reflect Whole Foods Market's longstanding efforts to address human rights and labor issues in our supply chain. So what's your take on that response? I mean, what have you seen out of Whole Foods in terms of how they actually show that they care about these issues?
So we would say that Whole Foods, considering their marketing is all about, being especially sustainable and ethical, they're seriously underperforming in this area. Yeah, they may have a policy that says something about human rights, but what does it actually mean for the workers in their supply chain? And what's their response to these kinds of concerns that we're highlighting? What are they going to do about that? Mm-hmm. One of the things we'd really like to see them do is engage with Oxfam. We have a lot of understanding of these issues. We don't bite. If they come and engage with us properly, as we've been trying to get them to do for a couple of years now, we could actually help them address some of the problems that they've got here.
Got it.
And they could appoint a head of human rights who has understanding of the issues, who's got a remit to take decisions and really make their policies come to life. That's what we're not seeing at the moment.
Rachel, you're just highlighting things that you would like for Whole Foods to do by engaging with you all, but I'm curious, who is doing it right? When you just look broadly, can you name some names of folks who are actually getting this right?
Sure. So if you look at if you sort of search on Oxfam Supermarket Scorecard 2019, you'll see that we assessed 16 supermarkets in the UK, the US, Germany, and the Netherlands. Whole Foods is one of the lowest performers, Kroger too, but nobody's scoring well. I mean, the highest score is 38%, which is Tesco in the UK, also Sainsbury's. So actually, interestingly, Walmart is at least on 23% and has improved somewhat since last year. And they have engaged with Oxfam, and I think that is a factor, but they have policies around buying from women-owned businesses. They were a little bit more transparent. They have policies around supporting small-scale farmers, which I think just puts them in a sort of different position than Whole Foods at the moment. But there's plenty of time plenty of opportunity for Whole Foods to step up. They can be more transparent. They can show what their policy actually means for workers on the ground. They can engage with Oxfam, and that maybe next year when we come to do this, they'll be way higher.
All right, well, we'll continue to track that, and you got to bring us that update when you have it. But for now, Rachel Wilshaw, thank you so much for bringing us that in terms of digging into how they're performing. Appreciate you taking the time.
Thank you.
Well, we were just talking about Amazon and its support for $15 minimum wage, at least that being one of those issues that they are delivering on. A battle cry of Senator Bernie Sanders is. But it's not the only tech company responding to political pressure these days. Facebook, of course, has been in Senator Elizabeth Warren's crosshairs for being her prime target in her quest to break up big tech. And yesterday at Yahoo Finance's All Markets Summit, I got a chance to ask Facebook's Chief Creative Officer, Mark Darcy, about how something like that might impact the company. Take a listen to what he had to say.
I can't speculate on that specifically, but what I can say is, as I said, if you've been in the company about 8 years, the way in which these platforms are focused on a singular mission around connecting the world, giving people the power to build community, express themselves, it's a common sort of focus. And the way the company is structured to support that across the applications is something you see the benefit of every single day.
Yeah.
And businesses see it as well. We just announced today 140 million businesses are using each of the applications, and the vast majority of them use all of them in a different way to connect and grow their businesses.
So guys, a well-measured response there, but interesting to think about. It's not just shared learnings across Instagram, Facebook, WhatsApp, like hiding likes for the end user, but also how businesses enjoy using both platforms and being able to put ads on all of them across the board. Nathan, I know you work with a bunch of technology and software companies. I mean, how true is that you could take learnings from one, share it with everything else, and make the overall bigger company whole.
Well, when you look at capitalism in general, which tends to be a negative word, right, Julia, these days, but ultimately, people forget about this. It's not just about how much you earn, right? A penny saved is a penny earned, but it's also a penny saved. And so when these kinds of companies build these massive ecosystems, they are getting cost savings, which ideally then pass off to, in this case, Facebook's customer is the brand with cheaper ads, right? Or a more effective way to communicate with their customers. So I am generally a fan of letting entrepreneurs and companies, right, state their policies, right, be clear about how they're using data, but ultimately let them scale to bring efficiencies to the system, more efficiencies for consumers, more efficiencies for brands. Julia, whose side are you on? Easy question.
I mean, I'm not in the breakup camp.
Yeah, not a lot of people are in the breakup camp.
Which camp? Your breakup camp or
for me?
I'm not a breakup camp.
For me, I mean, each problem is very different, right? You can talk about the way that she's focused on Amazon and the way that they're selling their own products. Anytime you have like a marketplace promoting their own products over third-party sellers, I could see that being an issue for consumers in the end. But if you're talking about Facebook, a free service, as we mentioned, if you don't like it, you can get off of it. But we're talking about Instagram versus Facebook. I'm not entirely sure what the when we talk about monopolies, what she's necessarily trying to approach, aside from maybe some of the concerns that I think are separate when it comes to data.
You can have real regulations around privacy that can be smart, and we probably do need something. I mean, the world's changed a lot in the last, 10 years since these platforms have, I'm getting old now. But the world's definitely changed, and I think you need regulations to catch up.
I was going to say, this only becomes dangerous, Zach, in my opinion, if monopolies start to, if so-called monopolies start to use power to keep competitors out. Because when there's no competition, prices go up, like we're seeing in healthcare, which needs more competition to be more capitalistic and bring prices down for consumers. So that's my take.
That is a very good point. That is something that has also been talked about when we talk about breaking these companies up, is the risk of capturing and just buying out competitors that might bring your costs down. But for now, Facebook's saying that they're fine where they're at. We'll check in with Scott Gamm, though, on the floor of the New York Stock Exchange for more on the market rallies we're seeing to wrap up the week. Scott, what do you see a move?
Well, Zach, we've got the Dow up about 390 points right now, near session highs. And of course, that meeting between President Trump and China's vice premier is set to begin in just over an hour. And with President Trump's tweet earlier this morning talking about how good things are happening in negotiations with China, that got the market excited. And it seems like the market is taking those comments seriously. This is the best day for the Dow since early June. And so with that, you've got the trade-sensitive stocks in the Dow leading us higher, names like Dow Inc., Caterpillar, and 3M. Apple, another trade-sensitive stock, is up about 2% today, hitting a new record high, nearing $235 a share, blowing past its prior record high of $232 a share that was reached in early October of 2018. Your laggards in the Dow are names like Coca-Cola, McDonald's, and Procter & Gamble. Now, this shows that the value trade starts to unravel a little bit when you have a lot of trade optimism. We're certainly seeing that dynamic play out today, Zach.
All right, Scott Gamm on the floor of the New York Stock Exchange. We'll check back in with you later on in the show. But next, on Wi-Fi PM, the professor behind the first study linking vaping to cancer in mice. He'll join us to break down the new health risks facing e-cigs as vaping-related deaths continue to rise in this country. What you need to know next, plus why one Wall Street firm is slashing the price targets he has on cannabis companies by an average of 50%. The analyst behind that shares his thoughts as the weed woes continue. Wi-Fi PM is back in 2. Good afternoon and welcome to Wi-Fi PM. I'm Zach Guzman, and joining me today is Yahoo Finance's Julia LaRoche, along with capitalistbook.com author Nathan Latka. Guys, good to see you both again on this happy Friday. I say happy because the market action right now we're seeing, we got a market rally, folks. The Dow up more than 400 points, the S&P up by about 46, and right now the NASDAQ continuing to lead the way higher, up by about 1.8%, I should say. So we'll continue to track that market rally as the week ends on a positive note for now. Well, President Trump's, it's a very important piece. President Trump's financial records may soon come to light. A federal appeals court upheld a House subpoena ordering his accounting firm to give Congress the documents that have long remained private. And guys, this comes as Trump's legal team is fighting another case with New York prosecutors to turn over tax filings. So these are two separate ongoing cases right now. We saw, of course, the Manhattan case. That one was going through the appeal process. We brought you that update a little bit ago. But this one's separate from that, and now it continues. Getting closer to seeing President Trump's tax returns.
I was going to say, Julia, what are we going to see in the tax returns?
That's a great question.
I think we're going to see a lot of stuff that once people understand and dig through them, if they do actually ever come out, they'll learn a lot. But again, you have to put your mind in kind of Trump's brain here for a second. Mm-hmm. He doesn't, he's going to keep, even if it's like they're totally fine, he's going to keep fighting hard because it's a storyline that's distracting away from other bad things happening, like, potential impeachment.
No, for sure.
So, keep fighting. If they come out, we'll see what happens. But little pieces are already coming out. We're seeing with the news over the past couple of days related to associates and foreign deals and things like that.
Well, I mean, the thing is, too, we talked about the appeal process on the other one, how long that could take. That could potentially be a year when you think about that process. This one as well could go to the Supreme Court. So this could be something that drags on and on.
Yeah, and I guess the other question is, does this give Democrats some fodder going into 2020 if there are things that could presumably be used from the tax returns, or if they can drum up the narrative again around the tax returns, the mystery there of what could be in it or maybe not in it.
Yeah, for sure. I mean, a lot of speculation right now, and you got to think, if there was nothing to hide, you wouldn't necessarily be opposed to releasing the tax return. So we'll see how that battle continues. As I said, not going away, and TBD for how long that will be drawn out. But we want to shift to some health updates for everyone out there watching the vaping concerns continue to rise in this country. The CDC says the total cases of vaping-related illnesses rose to nearly 1,300 incidents and at least 26 confirmed deaths across the U.S. This comes as New York University researchers published a study revealing the connection to e-cigarette exposure, linking vapor and e-cigs to cancer in mice. And joining us is NYU professor Moonshang Tang, the professor behind the study. Thank you so much for joining us.
You're welcome.
Appreciate you taking the time.
Sure.
The study was interesting because it was the first one linking vaping to cancer in mice.
Yes.
Tell us kind of what you saw, how shocking the results were, because this is something that other people hadn't seen yet.
Yes, indeed. 2 years ago, we found that e-cigarette vaping actually cause DNA damage and inhibition of a DNA repair mechanism in mice, lung, heart, and bladder. So that motivated us to think to do the tumorigenesis experiment. We think because those processes are involved in the cancer formation.
Yep.
So that's why we exposed that mice that is smoke for vaping for 54 weeks, and we found that tumor formation actually is a cancer in lung, and also that the pre-cancer the development in the bladder tissue also.
Yeah, bladder tissue as well. But to me, what's interesting here is kind of the link to everyone had been pointing to e-cigarettes being healthier than cigarettes because they had been saying that when you look at those cancer markers in people's saliva and urine were lower than traditional smokers. But that was another piece of your study that was surprising to me, that you were saying that potentially those markers actually stay in the cell, so they wouldn't show up in saliva.
That's right. Yeah, what happens is the nicotine gets into the cell. There's a chemical reaction occur called nitrosation. Converted nicotine become nitrosamine, and the cell has a bundle of enzyme will metabolize the nitrosamine, become DNA damaging agent. So the nitrosamine no longer exists. So because they are they become a damaging agent.
But that's what's interesting, because Juul and other e-cigarette companies have pointed to that, saying that's why our products are safer here.
That's right.
When you look back at Juul's co-founder at the House hearing on this subject as well, basically the company had said, they were asked point blank, is nicotine itself dangerous? And they deferred and said, look, we can only say what the FDA says, which is nicotine itself is not the problem. But your research would seem to indicate that nicotine is a piece of the problem.
That's right. We did nicotine direct straight as human cell. We found the same thing. Damage the DNA, cause a lot of sensitized cell become easy to become tumorigenic. So the nicotine is not carcinogenic. It's based on one study long time ago. So, and that particular study also deemed inadequate.
Wow.
Inconclusive. So the general conception, the notion of nicotine is not carcinogenic, and I don't know where they come from.
So how big of problem? I mean, how in trouble, how deep in trouble would Juul be if more research like yours comes to fruition that nicotine is in fact actually cancer-causing?
You know that the compound, the intermediate compound from nicotine to DNA damaging agent, there's an intermediate called nitrosamine. And nitrosamine has been proven human carcinogen, very potent human carcinogen, as well as in animal. So if this compound can cause mice lung cancer, the probability of causing human cancer
is much higher.
You can make that judgment.
All right, there you go. It doesn't take a PhD in health to connect those dots, I don't think. All right, Professor Moon-Chong Tang, thank you so much for taking the time to join us. Really appreciate it.
Thank you. You're welcome.
All right, well, the carnage in the cannabis space continues today, folks, after the sector as a whole was absolutely shellacked, and I do not use that term lightly, following a revenue warning from Canadian cannabis giant Hexo Corp. Sent those shares tumbling some 24%. Other big names in the sector are getting hit with more negativity today. Jefferies downgraded Canopy Growth to hold from a buy rating and cut overall price targets for most of the cannabis companies it follows by 50% to reflect more risk being priced in. Guys, Canopy Growth also appointed Constellation Brands CFO David Klein to board chair. Constellation, of course, has been consolidating power in the weed company after it threw $4 billion into Canopy Growth last year. But the pressure to become profitable is clearly getting heavier and heavier in the sector. Nathan, I know you focus on a lot of tech companies as well that are kind of similar. We've had this debate before on the show about cannabis companies being similar to tech companies, in that in your growth stage, you shouldn't really be focusing on becoming profitable if you're trying to capture the market. But how hard is it to just say, hey, I want you to flip a switch and become profitable right now?
Yeah, well, the cannabis industry has a actual growth stage, where software companies do. That was a good one, right?
Nice.
Where software companies do not. But what I would tell you is, if you're bullish on the cannabis industry, it is definitely early innings. There are companies like LeafLink, who I just spoke with actually 3 days ago on my podcast, and he's talking about how they're providing all these ancillary services related to accounting for these companies that banks won't touch, or marketplaces for buyers and sellers to do it legally across many different states. And they're doing extremely well. So yeah, I don't think you focus on becoming profitable right now. If you're in the cannabis industry, you focus definitely on market share.
Those companies are getting hammered, though, or when we're talking about how they've failed to really deliver on what their shareholders, we should say, kind of Wall Street watchers are pushing for right now, showing profitability or at least progress on that front.
I just remember, there's so much hype about a year ago, last fall, and the stocks were just going bananas. And I mean, I kind of take the Whitney Tilson approach, is stay away. It's not a good idea. I don't think it's a good idea to, I'm not going to give investment advice here, but again, my take is, if I don't know people using CBD or these products like they would their normal coffee habit, it just doesn't seem like, I don't know. I don't know anybody who uses it, so
that's what's interesting is even the analysts that have been downgrading their price targets or cutting their price targets, they haven't necessarily cut their forecast for the overall market category. So, I mean, it's not like they're saying, oh, no one's going to use
it just feels a little
this in the
goofy
future.
to
It's
me. That's just my take.
I think the question is which companies are going to be profitable and which ones can actually execute in a way that makes sense financially moving forward. But for now, pain continues across the board. Well, the Breaking Bad movie finally dropped on Netflix for those fans out there, and people are going wild in this week's Fame and Fortune. Joining us with the details is Yahoo Finance's Alexandra Canal. Ali, good to see you.
Good to see you.
When we're talking about El Camino, obviously it's a Breaking Bad movie, and it debuted at midnight. What has the reaction been so far? Because now we're about 12 hours past that.
Well, fans have been going crazy, and this is mostly because the anticipation for this has been insane. Netflix announced in August that they would be working on this project, but they didn't give too many details. Even the trailers were very mysterious, not a ton of dialogue. I did dig through Twitter and found a couple reactions from fans who have been waiting anxiously. We have this tweet, me waiting to go back from work to watch El Camino. This one, I laughed, cried, yelled, cheered, didn't blink for 2 hours. It was everything my heart needed. So this is a huge moment for Breaking Bad fans, a big moment for Netflix.
Yep.
I'm sure we're going to be seeing some stats coming out about how they just smashed records. And Yahoo Finance sources told us that Warren Buffett is a huge fan.
Oh, there you
and he's
go.
really pumped for this.
He's a huge fan. No, I think, and Vince Gilligan who is the creator of Breaking Bad from my hometown, by the way, in Virginia, Farmville, Virginia. I think we went to the same preschool, obviously different years.
That's cool.
Just giving that shout out, Vince, if you're watching. We always love a famous person, but yeah, I mean, I think it's interesting the fact that it's a big movie. It's got a lot of hype, and I can watch it from the comfort of my own home.
But it's also an AMC title, right? So that's the other thing too. When we talk about Netflix really flexing its originals, this one is kind of in a weird quasi. One of those other creations that's in a weird quasi. Is it Netflix? Is it not Netflix?
Yeah, and the Breaking Bad story is very interesting. So it was an AMC original series. It was doing very well on the network, but they were having struggles financially, and they were worried that they would have to cut the series prematurely. So they had to get a little bit creative. Now, this is all the way back in 2013. So Netflix was a thing, but it wasn't as big as it is now. But AMC and Sony, they decided to put the first 3 seasons of Breaking Bad on Netflix, hoping that fans would discover it, watch it, love it, and then go to AMC for new shows, for new episodes. That plan worked. 1 year later, the Breaking Bad season 5 premiere more than doubled in viewership. That number was about 5.9 million. By the end of season 5, that number was well over 10 million. So Gilligan, the rest of the Breaking Bad team really credit Netflix for transforming the show. They thought the show would be over after season 2 if it wasn't for Netflix. So the fact that the movie is now going to air on Netflix is a full circle moment for Gilligan, and he was very pumped to have fans be able to experience this movie on the platform where they first fell in love.
So even if they're not flexing original content, they are flexing the platform in terms of showing what it can do.
And this isn't the first time. Breaking Bad was set the stage for this, but have you guys watched Lifetime's You? I say Lifetime because...
Nathan, come on.
No,
not even guilty.
I watched You
Not
before
even
it was cool. It was first on Lifetime. It got 0 buzz. Then Netflix picked it up.
Oh, yeah,
All
I
of a
remember
sudden,
that.
it was one of the #1 shows of 2018. And now heading into season 2, it's going to be a Netflix original. So that just goes to show Netflix's power when it comes to creating content and taking content that's already been created and elevating it to that next level.
That's true. I mean, that's a plus. That's a plus when you're talking about flexing the platform. But at the end of the day, U.S. subscribers still kind of what people are focusing on. They've got earnings coming up. They have never missed their own subscriber growth 2 quarters in a row. That's something that we could see potentially if they miss this time.
Exactly. So subscriber growth number, that's what investors are going to closely be watching when Netflix reports earnings October 16th. And just like you said, that investors were pretty disappointed that last quarter they let that number slip. It's never happened 2 quarters in a row. So if that happens now, not too good for Netflix, especially as we have Apple and Disney right around the corner with their video streaming launches in November. Make or break quarter, but they do have Stranger Things season 3 baked into those numbers. That came out July 4th. But the pressure's on and the streaming wars are just getting started.
We'll get the answers next week. But for now, El Camino's out there.
El Camino, everyone go watch it.
If you're a fan.
If you're a fan. Warren Buffett's watching, so you have
so you got to get involved. All right, Alexandra Canal, thank you so much.
Thanks, Zach.
Appreciate you taking the time to break that down. Well, speaking of breaking, we got breaking news out of Washington on the U.S.-China trade negotiation front. For more, I want to get to Jessica Smith live in Washington, D.C. with the updates. Jess?
Well, Bloomberg is reporting that negotiators have reached a partial agreement that would lay the groundwork for a broader trade deal between the U.S. and China. This is along the lines of what we expected going into this, just a partial agreement to kind of ease tensions as negotiations continue. Bloomberg reports that this agreement includes agricultural concessions from China and tariff relief from the U.S. You'll remember tariffs are set to go up on October 15th. Now, the president is supposed to meet with the Chinese vice premier in just about an hour, and Bloomberg notes this partial agreement could change based on how that meeting goes. But the word for right now is Bloomberg reports a partial agreement. We'll be sure to keep you updated as we learn more throughout the day.
All right, Jessica Smith from Washington, D.C. Thanks so much. Guys, I mean, when we're talking about partial agreement there, we're seeing the market reaction right now, not necessarily anything higher than what we saw before. So you would have thought any news of a partial trade deal would have made the markets react, but nothing yet.
Maybe they're waiting for after the meeting with the vice premier and President Trump to see where that goes. But I mean, at the end of the day, it's just partial. We still don't have the actual fundamental issues addressed from the IP theft, from the forced transfer of technology, those sorts of things. They haven't been ironed out at this point.
Would agricultural concessions and the tariff front on the U.S. be enough in your mind to warrant a larger reaction than what 20 points we're seeing?
For me, this is actually more about an IP and a tech play. Our markets are totally available to the Chinese and everyone else around the world, but the Chinese market is not available to the rest of the world, including the U.S. We have to win on that front, and this trade deal, for me to be extremely bullish on it. Now, I think what you're going to see come out after the meeting is some form of spin on some form of win and some concessions, but we're seeing right now up 420 points. At 11, earlier this morning we were up 499 points, right? So the market not really reacting right now, and I think to Julia's point, I think folks are going to wait and they're going to see what comes out after 2:45 p.m. Eastern.
Mm-hmm. Yeah. Well, that's the key language here. Of course, we're reading the Bloomberg report here. Some tariff relief. The question there being, what does that actually mean when it comes to the October 15 tariffs or the December 15 tariffs? If it were both, if that comes out after President Trump meets with Xi Jinping, that would seem to warrant a much larger reaction than what we're seeing right now. Again, just kind of a swing of about 50 points off of this news.
Yep. Yeah, and I think, again, this also goes back to just how much traders, investors are focused on trade and how much that matters to where the market moves. It's not about these other factors. I mean, we're getting into earnings season, and that doesn't seem to matter. It's really just trade that's in focus. And, yeah, right now you're not seeing the huge reaction because we haven't seen the actual deal concessions come to fruition at this point.
Mm-hmm. You could also, this is speculation, I want to point that out, but you could also leak something like this prior to the meeting for Trump and the administration to see if the markets do react. They're not reacting, which potentially gives the administration leverage at the 2:45 meeting to potentially walk away, right? Because the positive news that was bluffed before the meeting is not moving the markets, right? So I guarantee there's got to be they wouldn't let that kind of news go out to Bloomberg, right? If they didn't want it to before the meeting. So I'm sure there's some testing of the waters happening here.
That's a good point. And it's also a Friday afternoon.
They had been hinting ahead of this meeting. Again, remember, the President Trump was hinting at positive developments. This obviously would be, again, we don't have many developments to share.
Positive. It could just be that it was already baked in, and that's just the move you're going to get.
Or that, yes, of course, what you're suggesting would be moving 5 steps ahead to say, okay, let's see what this looks like.
I'm a chess player, Zach. I'm a chess player.
Oh, but we know that the president is as well. He continues to talk about how he can negotiate well here. But to me, I think the reason why we may not be seeing that immediate market reaction is because so little has been known about what positive developments we're talking about here and what exactly tariff relief necessarily means. Again, when it comes
what would you want to see? What would you want to see come out after 2:45 for you to see your prediction? What would actually move the markets up?
I think if you're an investor trying to make sense of what you're seeing coming out of the White House when it comes to those tariffs, it would have to be what we saw before in the way that the market reacted when we had those big up days in response to the tariff news. Was suspending tariffs.
Got it.
I would think is what you'd need to see. That not being what's reported right now when we talk about the trade developments that we're bringing to you right now. Again, Bloomberg just reporting that there is some tariff relief being the language around that right now. But to your point, Julia, just because we're getting this right now, we've seen President Trump, even within a day, hours really, reverse his thinking when it comes to these negotiations. We've heard things going well, only to have things fall apart in the later day.
For now, it's just a positive baby step. That's all I'll say.
Well said.
Baby step.
There it is. Positive baby step is a better headline than potential trade truce or partial deal. I like positive baby step for now. All right, Nathan Latka, thank you so much for being here for the full hour. Julia Roche, thank you as well. Appreciate both your guys' insights. Let's check in with Scott Gamm on the floor of the New York Stock Exchange to see if markets continue to digest the trade headlines we're getting. Scott?
All right, Zach, thank you very much. I'm joined now by Peter Tuchman, and Peter will continue the conversation we've been having on that report of a partial trade deal between the U.S. and China. Obviously, the market is reacting to this, but we still don't know the details.
No, we don't, and we haven't known the details for a while. We inch our way back. I believe there's a lot of hope on the horizon on the deal. I mean, they're giving us as much positive news as we can. We need to know and be nimble and flexible if you're trading it. I mean, if you're an investor, might say, just stay in the trade because the market's showing you there's value here no matter what goes on. But if otherwise, you need to be nimble because this could get flipped over in a moment. Right now, we've got a lot to hang our hat on as far as hope goes. About the meetings today have been productive, and that seems to be super positive, and the market's loving it.
And even with this big gain today, it's not like we've reached new record highs. I mean, we did in Apple and some specific stocks, but not for the broader market.
Well, I think we also, look, the market's catching up. A lot of the Dow can be heavily weighed in a few stocks, although the S&P's up 50 handles. I mean, these moves, I think it's important to note, though, that 400, 500-point moves in the Dow and 50-handle moves in the S&P seems to be more of a new norm when there's news that's positive. So,
does the market care, though, about the trade details? I mean, it seems like it just wants a deal. Is it going to get that granular?
The people who are actually investing in this market, the big money guys probably know all about what the ins and outs of it, right? Stocks with Chinese exposure, how it's going to affect our farmers, and all of that detail. And that detail is important. They're telling us, I'm not an economist, and they obviously know a lot more than I do, that obviously there's still value in this market up at these levels. We're trading right off record highs, right? So even with just hope, they're buying the market here. I would imagine some of this is a bit of a short cover on a Friday. We don't really know what's going on. I believe if we get a deal etched in stone, this market goes a lot higher. So if there is some short exposure in the marketplace on people who are betting against this trade, they're covering. That's my gut.
And when you say the market goes a lot higher, do you think the stocks that have led us higher over the past couple of years, like big tech, continue that leadership?
Well, I believe so. We're seeing a nice boost in tech, and I think that we're coming into earnings season. We're coming into Christmas season. We've seen a little bit of a pop in the retailers. Let's just look at what this last quarter usually does. Market tends to go higher. Net retailers tend to get a little bit of a boost. And there, you're buying the stocks that have been beaten up pretty severely, right? And finding value in all the rest. The energy sector for one, for sure.
Well, we know that some of the higher quality dividend stocks have been on huge rallies this year, right? McDonald's, Procter & Gamble, Coca-Cola, all three of those stocks are down today on a day where we have so much trade optimism.
You know what? Look, they may be taking advantage of, people could be taking profits in some of those better names. They're the underperformers that people buy, the outperformers that sometimes people sell, right? You want to be locked in and take some profits here too. We don't know what's going to happen. There are still a lot of unknowns, right? We have a situation going on with Syria and Turkey that's a problem. We have situations going on in the administration which seem problematic. The only thing we're hanging our hat on is a Chinese deal. Does that wipe out all the other cause for anxiety? Maybe not. It depends where our focus is and where the narrative is. China trade is a big deal, but the rest of the world seems a bit fragile. Maybe Brexit's on the table. So there's a lot to be anxious about, one thing to be possibly positive about, and that seems to be taking the market higher.
All right. Peter Tuchman, we still have 2 hours left in the trading session. We'll see what happens. But
it's a Friday.
Thank you as always.
Market never disappoints, guys.
All right, Zach, back to you.
All right, coming up, President Trump slated to meet with China's vice premier in less than an hour's time. Stay tuned for live coverage on Yahoo Finance next. The ticker starts in 2.
Good afternoon and welcome to the ticker on Yahoo Finance. I'm Akiko Fujita. I want to get to some breaking news out of Washington because Bloomberg is reporting that the U.S. and Chinese negotiators have reached a partial trade deal. Now, as part of that deal, according to Bloomberg, China would agree to some agricultural concessions in exchange for tariff relief from the U.S. And of course, we are awaiting that meeting between President Trump and Chinese Vice Premier Liu He, which is set to begin in about 45 minutes or so. Checking the market reaction here, we are seeing the Dow up 443, the Nasdaq up 153, and the S&P 500 up 49. Let's bring in Scott Bauer from the CBOE in Chicago. He is with Prosper Trading Academy. Scott, let's get right into the reaction that we're getting from the market. Surprising, perhaps, that we're not seeing a bigger bump coming on the back of these reports. It seems like investors are a bit cautious given that President Trump and Liu He have yet to meet to at least say, look, this is kind of the starting point to move forward.
Yeah, very cautious. Cautious optimism is probably the right way to look at it. And, I'm just not even sure that if that's what they announced, what Bloomberg is reporting, some tariff concessions and that China's going to buy some more agricultural products. I'm not sure that gets us to sustain this rally here. I think the market is really hoping for more. And if that's exactly what we see, I would actually expect a little bit of a pullback from there.
So we are expecting, again, that meeting to take place at 2:45, so 45 minutes from now. Yep. Scott, I'm wondering what it will take to kind of take that veil of uncertainty, if you will, away from investors. Do we need to hear from President Trump to maybe perhaps show that things are going to move beyond just ag purchases? What specifically do you think investors are going to be looking for there?
I think it's going to be really interesting because we're going to have, about an hour of trade or so prior to the close. So, yes, I think that the market is looking for President Trump to come out and say something because we've seen the tweets before. We've seen the rhetoric before, over and over repeatedly, and then they haven't panned out. So the market is really hinging upon President Trump to come out in the next 45 minutes or an hour or so to say, yes, this is the deal that is in place. However, again, if it is just what Bloomberg has reported, I actually think the market may be a little bit disappointed in that.
Yeah, we should point out that it does feel like we've been here before where the two sides have kind of been on the verge of some kind of truce, if you will, only to have some of those negotiations fall apart. But I want to backtrack a bit to talk about that tweet from President Trump earlier today that really did lead to the rally in the market we've seen today. The president weighing in on those negotiations with China, saying good things are happening at China Trade Talk meeting. Warmer feelings than in recent past, more like the old days. I will be meeting with the vice premier today. All would like to see something significant happen. Now, picking up on your point, Scott, why do you think we did see a rally on the back of some of those words coming from the president, given that didn't really signal that a breakthrough was coming?
Yeah. Well, it's interesting to note the bond market over the last couple days, and that could have been the leader into the equity market pop that we saw today. Much trade really on the risk off side of things. So, there's definitely some skepticism about that, but the president tweeting this morning, the market bought into it, and so far, if you bought into it and you got long, you've been rewarded for that. However, I would be extremely cautious going into this last hour of trade or so after the president speaks.
And Scott, two other geopolitical headlines we've been tracking very closely today. One that has certainly seen the price of oil spike after an Iranian oil tanker was struck by missiles in the Red Sea off the coast of Saudi Arabia. The other move we've been watching is out of the UK and a potential breakthrough on that front on Brexit talks. And we saw the pound surge against the dollar on the back of that. What kind of moves have we seen today on the back of some of those headlines?
Yeah, so let's talk about Brexit first. And, these are really the first positive sort of announcements that we've seen in quite a while. Now, it's obviously getting down right to the deadline here with October 31st being the deadline. To me, this is setting up ideally for an extension, a potential extension for Brexit going into 2020 so that perhaps they can continue these talks. I know Boris Johnson apparently had some really good talks with the Irish Prime Minister today, but next week is really crucial because the EU is meeting in Brussels next week. So I think that is really the timetable for me to see that, okay, there could be some potential progress here, extended again into early 2020.
Okay, Scott, appreciate you keeping us in the loop here on a very busy Friday. Scott Bauer there joining us from the CBOE. Let's get to our big three tickers of the day. Apple touching a record high after a major vote of confidence in its new streaming service. Tilray is back in the green after announcing a partnership with one of the world's beverage giants, and SAP soaring after delivering a surprise announcement to shareholders. Let's begin with Apple, though. Wedbush analyst Dan Ives raising the price target on the tech giant to $245, or from $245 to $265, saying its Apple TV Plus streaming service is a legitimate threat, and we have seen Apple touch those record highs on the back of that. I want to bring in Dan Howley for the very latest on that front. And Dan, you know, I was looking at this note. One of the big headlines I think here is that Dan Ives sees Apple cutting into 10% of Netflix's market share. He's talking about a target from the next 12 to 18 months. How significant is this?
That's pretty huge if you can believe it. I don't necessarily think that Apple's going to make that much headway against Netflix, and I don't see as many people cutting back from Netflix if they get onto Apple TV Plus. Remember, in the first 12 to 18 months, those are going to be free subscribers to Apple. That's because they're giving away the service with purchases of new iPhones, new iPads, new Macs. Anything that you buy as far as hardware from Apple, you'll get a free year of Apple TV Plus, and then obviously you may or may not want to resubscribe. But I don't necessarily think this is going to cut into Netflix revenue because, frankly, when you look at what Apple is offering for Apple TV out of the gate, it's not much, especially when you consider what you're going to get already from the likes of Netflix and Hulu. Now, when they do start adding more and more offerings, then I think we might see some kind of cut into Netflix, especially at the price of $4.99 a month. But right out of the gate for the first 12 to 18 months, I don't necessarily think we're going to see that much of a cut into Netflix.
Meanwhile, you know, we have seen some more recent bearish calls on Netflix, but Netflix hoping to ride the wave of the new Breaking Bad movie, El Camino. I'm certainly very excited about that one. Just released on Netflix. How big of a win is this for the platform? If you look at the stock price, at least today, it's up 2.4%.
Oh, I mean, it's huge. People are already going to go home. If they haven't watched it already, they're going to go and watch it this weekend. It's one of the best shows of all time as far as critics go, in my personal opinion. And I think that this movie is really, really important for them. They managed to get these big names, these big actors, and these big shows onto their platform, and they're able to do this repeatedly. This isn't just a one-off. They're leading with comedy specials. They're leading with big name movies like this. They're leading with repeated series such as Stranger Things. They just had their show Big Mouth come back. Really critically acclaimed shows that people are watching and sticking around for. So I think what their strategy obviously is to make sure that they have enough offerings year-round so that they don't see that kind of churn where people might subscribe for one show, then drop out, then come back again the next year when it pops up again. They want to make sure that they have a consistent slate of shows that people want to stick around for. And I think that's really where Netflix has to focus now, not necessarily getting the subscribers to come on, but getting them to come on and stay on for the long haul.
No question, a lot of people will be watching that movie this weekend. Thanks so much for that, Dan. Let's move on to Tilray now. After a weak outlook from cannabis company HEXO weighed on the overall cannabis sector, HEXO posted disappointing quarterly earnings and withdrew its outlook for 2020. HEXO stock certainly down in a big way. We saw the sector weighed down as a whole, but Tilray back in the green.
Yeah, absolutely. Look, to me, this is another reminder that all of these companies in the Canadian market are dependent on each other right now. We're still in such early days that when one of these companies, even a name like HEXO, which, you know, maybe our viewers know Tilray, Canopy, Acreage, I don't think many of them know HEXO. And let's remember that a lot of these companies are still very small by revenue. HEXO, a company that's going to have $15 million in revenue in one quarter. So these are small companies still. A lot of them are very young. They haven't been around that long. And yet, even the lesser known names still have the ability to drag all the other names down. And that's because, you know, we watch these Canadian names because that's where it is legal for now. In the US, yes, there's momentum. Yes, it's state by state. But Canada is where it is legal in all of Canada. And so those are kind of the only publicly traded names we can watch. So I think that the market has a way of taking the temperature of the whole space by looking at just one company's earnings. And specifically, it wasn't even that HEXO just had bad earnings for itself, but on its earnings call, management said it sees a lot of market uncertainty. I mean, hello, of course. And also a little bit disappointing or slower than expected progress in retail head shops, cannabis shops. So that's a problem for all these players. But as you mentioned off the top, Tilray, the one that has really bounced back, and that's because when you announce something with AB InBev, woof, there you go. I mean, investors like that.
Let's talk about that announcement. AB InBev announcing beverages infused with cannabis. How significant is this number one for Tilray, but also the overall sector.
Yeah, and let's be clear, this is through a separate brand that is a joint venture that has been formed between Tilray and ABI. Look, we know that InBev is the beverage giant of the world. I'm not sure the average person realizes just how much it owns. In the US, it has to be very careful to not have its market share go above 50%, but I think it's like 49.5% of the beer market. And in the world, I mean, everything is owned by Anheuser-Busch InBev. So if you are a cannabis player and you want a big name to attach yourself to and you want to do a CBD drink, InBev is the name to do it with. And so Tilray bouncing back. We mentioned how HEXO brought down Tilray. HEXO is still down 7%, but Tilray sort of successfully uncoupled itself today because of this. Will this be a huge business for AB InBev? Will this be a huge success? I don't know, and I'm very skeptical about it. I think CBD drinks, just like all the CBD products, it's still very unclear to the average consumer. Well, what is the effect supposed to be? You know, on our Yahoo Finance live shows, we have pro athletes lately marching in, and they're all announcing their CBD deals. And each one of them, what's interesting to me, has a different thing they say CBD helps them with. One says, oh, it helps with my joint pain. It's amazing. The other says, I take the gummies and it helps me sleep. Someone else says, oh, it's a heat rub. It's like, well, it does it all. It sounds like it's what doesn't it do? And so now you're being told to do a drink. I don't know how it will do, but certainly if you're going to try one out, Anheuser-Busch InBev is a company that the size and scope of that company, that's the company to have.
Well, and also what we're seeing is a lot of these beverage companies making the decision to at least position themselves in the market.
It's like, we'll try it.
To at least tap into the potential and see where it goes.
We'll dip a toe in. It's like blockchain, you know? Oh, we're doing blockchain.
Blockchain and cannabis connection there. All right, thanks for that, Dan. Our third ticker of the day is SAP. CEO Bill McDermott stepping down from the European software giant after 5 years at the helm. Board members Jennifer Morgan and Christian Klein will act as co-CEOs. Inez Ferre is with me. Inez, there's a lot of question about the timing of this. The company has certainly been under pressure from activist investor Elliott Management to boost profits. How much of that do you think played into the decision for this sudden resignation?
Definitely, when you have Elliott Management coming in with a more than $1 billion stake in the company, then you know that there's changes that will be coming, and those are big changes. Now, this company is one which, at the beginning of the year, had talked about this restructuring plan, launching this restructuring plan, getting rid of around 4,000 employees. What's been happening is that the challenge has been that they've seen some slowness in cloud bookings. And cloud is really the growth driver, but then you've got margins getting squeezed because you've got companies like Oracle, like Salesforce. Salesforce holds a larger market share than SAP. So basically, the street has not been so content with the performance, especially in the second quarter. And this restructuring plan that they announced comes on the heels of last year. They closed a deal to acquire Qualtrics. That was for $8 billion. So that's the online customer sentiment tracking company. So a lot of big changes at the company. As you say, though, the timing of it is interesting because of this Elliott Management stake, which was taken back in April.
And looking at the stock reaction today, it is up 10%, not just based on that announcement from the resignation, but also because of those preliminary earnings that came out that certainly at least pointed to a strong position for the company.
Right, exactly. So the street had been complaining a bit about the margin squeeze, about the cloud booking slowing, but in the third quarter, they certainly came out with a solid quarter, given also the backdrop of the macroeconomics. So the street pleased with this, and also the fact that they've named two co-CEOs who are insiders, definitely investors liking this move.
Okay, thanks so much for that, Inez. Well, coming up, Chinese investments in Silicon Valley rapidly drying up. Can a trade truce reverse that? We'll discuss next. Plus, a damning new report released on Boeing, the FAA, and their handling of the 737 MAX jet certification. A top expert joins us to weigh in. Don't go away. Welcome back to the ticker. Well, we have seen the markets in rally mode today on optimism about a partial trade deal between the U.S. and China, but that hasn't necessarily reversed the course for Chinese venture money leaving Silicon Valley. New data points to a drastic drop in Chinese fund flows into the U.S.-based startups. Joining us with the details is Yahoo Finance's Crystal Hu. And Crystal, we were looking at some of these numbers over the last several years. It is pretty alarming to see how quickly that drop has happened.
Yeah, so according to PitchBook data provided by Yahoo Finance, Chinese venture capital investment in the U.S. have dropped by 2/3 this year. And we have seen bigger ones like Tencent, who used to make 15 deals in the U.S. on average every year, only worked on 2 deals this year. And then smaller names like GenFund, which is an early stage investor backed by Sequoia China, like they last year invested in 14 startups in the U.S., but this year they decided to pull out from the U.S. market entirely. So why is that? As we can see, there are some sentimental changes in Washington, but also a bigger reason we have learned from investors is the new regulations on foreign investments on those venture capital money.
Yeah, so we're talking about CFIUS, which is the committee, of course, which approves some of these investments. They have really gone through kind of a change since last year that have really cracked down on those investments as well. How much of it is tied directly to that? Essentially, Chinese VCs saying, look, if these deals can't be approved, there's no reason for us to be here anymore.
Yeah, so for those Chinese investors, a big risk for them is that the process of getting a deal approved and the time they need it is much longer than before. So for the first time, the CFIUS regulation captures non-controlling investment, which includes a lot of like minority stakes of the VC money interested in. And also they are increasingly putting focus on emerging technologies because the U.S. wants to protect its technologies from being stealing from by foreign investors.
What we've seen with some of these big funds like Tencent that you just mentioned is as they've pulled money away from the U.S., they've tapped into other markets like India. I mean, if we look at where the political climate is, if there is some kind of deal, maybe calming of tensions, is that likely to bring the money back to the U.S.?
So according to some lawyers I talked to, they think that's not likely to be happening anytime soon because the new legislation is a past law. It's not going away by the trade negotiations, say if we reach a deal today. And that will be in place for a while. And that's a way when venture capitals need to find a way to get away with it. Now we see some of them do, find a way, say if starting a separate fund with a U.S.-based partner, which is a U.S. person, so make it less subjective to the CFIUS regulation. But for Chinese companies like Tencent or Alibaba, they will be deemed under foreign investor and subject to stricter regulations than before, that's for sure.
Yeah, it's interesting to see some of the lasting effects of some of these tensions we've seen over the last year or so. All right, thanks so much for that, Crystal. Let's move on here to do another market check because we have seen them in rally mode. Scott Gamm is on the floor of the New York Stock Exchange. Scott, we should mention we haven't seen the kind of pop you'd expect from that Bloomberg headline that came down a short time ago suggesting that the U.S. and Chinese have reached a partial trade deal.
Well, we do have stocks at session highs, and that report pushed the Dow's gain north of 400 points. But yes, there has been trade optimism for most of the trading session, and we've really been in rally mode for the entire day. This is the Dow's best day since early June. And so with that, you've got the trade-sensitive stocks leading us higher. Names like Dow Inc., Caterpillar, and 3M are your best performing Dow stocks right now. Also, names like Goldman Sachs and JP Morgan are surging. Investors are buying the banks just because trade talks are linked to global economic growth. If there are thawing trade tensions, that's better for the economy. And if the economy does better, that is good for the banks like JP Morgan and Goldman Sachs. We should also mention how Apple is at a record high today, crossing $235 a share. This is another gainer in the Dow today. It's, of course, a trade-sensitive stock. We all know how much business Apple does in China. By the way, that record high today eclipses its prior record high from roughly 1 year ago by about $3 a share. And then, Akiko, it's hard to talk about the Dow laggards on a day when the Dow is up over 400 points, but we do have 3 of them right now. Coca-Cola, McDonald's, and Procter & Gamble. Those are the only 3 Dow stocks in the red, and these are kind of the safer, higher quality stocks, and there isn't much of a reason to be buying those stocks today when you've got one of the market's biggest fears. Trade talks seem to be moving on the right side, and of course that's what investors are hoping for later today. To hear more details about that, Akiko.
Okay, thanks so much for that, Scott. And again, a reminder, we are awaiting that meeting to begin between President Trump and the Chinese Vice Premier at 2:45 this afternoon. All right, Boeing is under fire yet again after a new report from a panel of international air safety regulators reportedly criticizing the FAA's review of Boeing's 737 MAX jet. The report also faults Boeing for not improving the airplane's design. Boeing responding in a statement saying Boeing is committed to working with the FAA in reviewing the recommendations and helping to continuously improve the process and approach used to validate and certify airplanes going forward. Joining us is Jim Corridor. He is the Director of Industrials Equity Research at CFRA. Jim, we've come accustomed to getting some of these damning reports from Boeing, but this is pretty significant, it seems, given that the report essentially says that the FAA just had inadequate awareness of this MCAS system, which has been at the center of this investigation. What was your read into what came out from the report?
Yeah, my read is that clearly mistakes were made. I mean, when the second plane went down and it became clear that the MCAS system was at fault, you knew that Boeing had made some mistakes, that the FAA had made some mistakes. This report is a look back which shows that they weren't working closely enough together. The FAA didn't have enough men or enough understanding of the system, and maybe Boeing was not as forthright as they could have been about the fact that this was an entirely new system that should have been better evaluated by the FAA. So mistakes were made on both sides. Hopefully now, with this report in place, looking forward, we can come to an understanding that Boeing needs to be regulated very closely, and when the plane does come back into service, it will be looked at very closely by European regulators, by U.S. regulators, by global regulators, and will be safe.
Jim, having said that, if we look at this from the market context, we're looking at the Boeing stock up about 0.9%. It does seem like those recent reports that have come out critical of Boeing, or maybe perhaps pointing to additional delays to the 737 jets, haven't done a whole lot to move the stock. How much of all of this do you think is actually baked in right now?
Well, I think the stock today is reacting more to news of a potential China trade deal and less tariffs on type of aerospace parts that could help Boeing in the long run than about this. I mean, this is something that's been known. Boeing has been very forthright in acknowledging it's made mistakes. It's been working with affected airlines to compensate them. They've been working with the families to try and compensate them. There's going to be a lot of lawsuits, a lot of costs, but that's pretty much known at this point. This is not any news that's going to affect anything. Maybe with the extra scrutiny for the planes, the timeline for the return of the MAX might be put now into January. We'll see some airlines acknowledge that by changing their flight schedules. So it's not enough to really move the stock downward. We think the China news on tariffs and trade seems to be the more prevalent thing today.
Let's talk about some of the airlines now. Delta reporting mixed quarterly results as high-paying passengers boosted revenue, but the airline provided weak guidance for the rest of the year. You've got a buy rating on the stock right now. What stood out to you in the numbers that came out?
Yeah, we've actually got a strong buy. It's actually our favorite stock pick in the airline sector. Certainly, costs are rising because they did give a 4% raise to ground workers and flight attendants during the past quarter. The guidance on unit revenues was a little bit soft, which is why the stock didn't do so well yesterday into a very strong earnings report. But we think that the company is operating very well, record number of passengers, record revenues in the third quarter. They're going to see growth in the fourth quarter as well in terms of top line and bottom line growth. We think the valuation on the stock is very compelling, trading at about 7 times forward earnings when the stock has a 5-year average of 13.7. So it looks very good on a valuation forefront to us, generating a lot of cash, using that cash to pay a 3% dividend yield and also buying back stock, which is cutting the share count meaningfully. So they're doing a lot of things right. Certainly, we have to watch out for unit costs creeping up in the next quarter.
Yeah, I mean, a $75 price target or 12-month price target, certainly a bullish call there. You've pointed to a number of things that you like about Delta. What do you think is one big catalyst that investors should be looking for?
I think it's Delta and other airlines do statistics on a monthly basis in their investor updates, some kind of advanced look at what unit revenues are coming in at. So it's important that we keep seeing fares go up. We see unit revenues go up because that's going to provide a lot of growth and operating margin expansion for these companies. So we got to watch that.
Okay, Jim Cordor, appreciate you joining us today. Thanks so much.
Thank you.
Coming up, stocks are soaring as President Trump set to meet with China's Vice Premier Liu He just moments from now at the White House. But are the bulls getting overly optimistic? Plus, General Motors patience reportedly wearing thin with striking UAW workers. We'll have those details ahead. Welcome back to the ticker. I'm Akiko Fujita. We've been checking the market action, certainly in rally mode all day, especially given these reports that have come through over the last hour or so that China and the U.S. has reached a partial trade deal. Those details coming from Bloomberg that suggest that China will increase agricultural purchases of American goods in exchange for lifting of tariffs, or at least a delay of tariffs. We are awaiting that meeting between President Trump and the Chinese Vice Premier, set to begin in 15 minutes, and the Dow right now is up 462 points. Let's give you a quick recap of some of the tickers we've covered in the show today. Our first ticker was Apple. It's touching an all-time high after Wedbush's Dan Ives raised his price target on the stock to $265 a share, and that is up from $245. Ives saying that Apple's new streaming service will likely take a bite out of competitors like Netflix. He's also predicting strong demand for the iPhone 11. Second ticker was Tilray. It is back in the green after a major sell-off yesterday, triggered by a guidance warning from rival Hexo. But today, Tilray announced it's teaming up with Anheuser-Busch to make CBD-infused non-alcoholic beverages in Canada. And our third ticker, SAP. It is leaping after an early release of its latest quarterly earnings, which saw strong results. The company also announced its longtime CEO, Bill McDermott, is stepping down. 2 executive board members will take over as co-CEOs. We are checking the closing price of oil, and we did see it spike after an Iranian oil tanker was struck by missiles in the Red Sea off the coast of Saudi Arabia. You see the price there, $54.62 a barrel, roughly up 2%. And Iran state media now noting the explosion damaged 2 storage tanks and caused an oil spill that is now reportedly under control. No blame has been assigned from any Iranian government officials at this time. Well, let's get to our next 3 tickers. GM is rapidly losing patience with UAW union strikers, according to new reports. Roku is scoring yet another big upgrade, and Wendy's is unveiling bold new plans for breakfast and for expanding overseas. First to General Motors. The car maker is reportedly pressuring UAW workers to speed up negotiations for a new 4-year contract. Now, according to a letter obtained by the Wall Street Journal, this comes as the strikes reach into its 4th week. And Dan Roberts is back with me to walk us through this story. At least this, this was the first meeting between CEO Mary Barra and UAW president. That's going to at least be a good sign, right?
Well, you would hope so, although that was yesterday, and we haven't really heard much out of that meeting, other than that both sides have said to the other, you're not doing enough. GM is losing patience, but UAW has said that the company is dragging its heels and not giving enough. Now, what's interesting here is that GM did, within the last 24 hours, announce a pretty big concession, it seems, which is a $7 billion investment directly in the factories. And there's question here, I don't want to get kind of too in the weeds, but there have been questions over which investments from GM are direct versus indirect in terms of going directly to these workers and their jobs and their health insurance. And GM has said that this additional $7 billion it's giving is direct investment in its factories. But let's be clear, 30 different GM factories are basically at a standstill, and we're talking about more than 50,000 workers. So there is a question, too. Do you see something like this show up on the next labor report? This is significant enough. But both sides want this to be over. This is now going into its 4th week. It is the longest-lasting strike since the 1970s that GM has faced. So it's a major issue. It's interesting, though. With everything else going on, I feel like the story has been somewhat undercovered.
You do wonder, though, one of the concerns with the UAW was these factories moving abroad and the expectation being that some of those will come back. If you're looking at the GM side of things, from a business standpoint, they have argued that simply doesn't make sense. So how much of that does that play into whether there is an agreement or not?
Yeah, I think that's part of it. It's hugely fraught. All these stories that we're hearing about companies and trying to move certain production out of China to appease certain macro factors and wrestling with that, they're all related. Even the NBA in China is kind of a similar story. We were talking with the owner of the Jaguars yesterday, who owns a company that makes car bumpers and supplies GM and other major automakers. He was Shad Khan. He was at our All Market Summit, and he was saying that, I have a factory in China and many others have factories in China, but you have to play ball by how things go there and how they do business, and it also can cause problems in the U.S. So that's a big part of the workers and their complaints, but it seems to me like the biggest sticking point is no longer even pay for the salaried workers, it's temp workers and the extra benefits they want for temp workers in the factories. And GM hasn't yet given what the UAW wants on that specific issue.
Yeah, more than $1 billion in losses for GM.
Right.
So you have to wonder where that pain point is. At what point do they say we're coming to the table? We're going to be following that story closely. Thanks for that.
Stock up today.
The stock is up today, although the market as a whole is up today. Well, let's move on to our 5th ticker. That is Roku. The stock is popping after an upgrade from RBC to outperform. The firm also upped its price target from $107 to $155 a share. Dan Halley is back with me on that report. Dan, walk us through this bullish case.
It's basically that the stock price has kind of come back down to earth since its earlier highs this year. And so that's why they're seeing this bull case now going forward. And I think one of the interesting factors about Roku is a lot of people look at the upcoming streaming services from Disney Plus, from Apple, from NBC, eventually whenever we find out that that's going to come out, and they immediately think that that's bad news for Roku. But in reality, they're not looking at this the right way, because Roku as a platform is able to host all of these disparate services, unlike some other streaming platform makers. And because of that, they're able to also serve up ads in those welcome screens that they have on the Roku streaming platform. So they're able to serve up ads there, which feeds into both sides of the Roku equation, the ad platform as well as a device side of things. And they're also expanding outside of just the streaming devices. Now they're expanding into speakers. So there's 2 different lines of speakers that Roku now has, one for Roku-specific TVs and then one for TVs that aren't made by Roku. So they're really diversifying on the hardware side, and the platform side, rather, is really going to see benefits, I think, from the likes of Disney and Apple launching, because it's just more of an opportunity for people to be on their Roku devices.
Yeah, Dan, one of the other cases that RBC makes is that international expansion that Roku has been pushing, as well as the scaling of that Roku channel. What is the potential on that front?
Yeah, the Roku channel is really something that they're pushing because that's another example of where they can get these advertisers to jump on board, make the money off of that. And they've seen, obviously, the Roku platform, which is what they call their advertising side, take over from the hardware side as far as revenue gains. So that's now the higher end of the revenue versus the device side. And I think expanding internationally for Roku, they're not available in very many countries outside of the US. That's going to be a big benefit for them as well. They could be as popular abroad as they are in the US as far as the actual streaming devices go, and then those additional services like the free Roku channel.
Okay, thanks so much for that, Dan. Let's move on to our sixth ticker of the day. That is Wendy's. Shares there are popping after the fast food chain announced plans to expand into Europe. The company also revealed it will invest about $20 million in its 2020 U.S. breakfast launch. Inez Ferre is back with me. So Wendy's, Inez, let's start with the European side of this story. How much competition do they face over there, especially when some of these other fast food giants have already had a presence?
That's right. And this is a way for them to be able to compete with some of their big competitors that already have a presence there. What they're planning to do is first re-enter the UK. They actually had been in the UK up until the year 2000. Go in there. They say they've done their research there. They've had some pop-up stores there, and then expand from there to the rest of Europe. So they're hoping that in the next 12 to 18 months, they'll have this European expansion. This is going to be able to jumpstart their growth. They're hoping that by the year 2024, they'll have some 1,500 international stores. Now they have around 950.
Okay, so let's talk about the big breakfast news as well. As we've seen with some of the Wendy's competitors, that certainly is a big catalyst. What are we expecting on that front?
Well, they're saying that this is going to be different because they have received a lukewarm reaction from Wall Street. They've done breakfast in the past. They've attempted this 3 times, once in the 80s and then 2 times since then. But they're saying that this is really different. They're projecting that breakfast sales are going to grow to at least 10% of their sales. Now, in the past, what they've done is done this regionally. That means then that the media has to be regional and their advertising was local. In this case, they're doing this nationwide. They're having a big media nationwide push next year. And they also are introducing the Baconator, which they've talked about. This is an interesting timing for the Baconator because pork prices are up. But certainly, they're very bullish on this. They're hoping that this will drive sales.
Okay, thanks so much for that, Inez. Well, President Trump is scheduled to meet Chinese Vice Premier Liu He at the White House in just minutes. And this comes as Bloomberg reports a partial trade deal has been reached between the U.S. and the Chinese. Joining us is Rebecca Walser. She is the president of Walser Wealth Management. Rebecca, you know, I look at the headlines here and you get the sense that, look, it feels like we've been here before.
It does.
Is there anything that you're seeing that says this time around could be different?
Yeah, I do think so. We're hearing that, and of course it's going to be announced by the president. He's going to have that all-important meeting face-to-face. But we're hearing now that basically maybe China's willing, as of the beginning of the January next year, with new companies to not have a joint venture structure required for businesses, American businesses that want to start and expand into China, which is unprecedented and
that
huge.
Seems like a significant leap for the Chinese.
It's huge. So we don't know exactly the structure of the deal. This is all just the, coming across the wires. And so we have to see what actually gets announced. Obviously, Steve Mnuchin didn't want to give away any thunder at his press conference that he just had, a little bit ago. But we're excited because this is what we get. This is really huge. We need to make sure that there's teeth. We need to make sure that it's enforceable and that how are we going to track it, trust but verify. But this is different. We've never had this before.
There's certainly going to be a lot of layers that we're going to be looking for
Absolutely.
in any kind of announcement. On the one hand, it sounds like based on the Bloomberg report, there could be a delay in tariffs. How big of a catalyst is that, especially given that the December 15th tariffs would have been a huge burden on consumers? How much of what we're likely to see in the market will be about the details and the teeth that you pointed to in any kind of partial trade deal?
That's really what we were expecting. We were just expecting this to be a pause. We were expecting to say, okay, China's going to buy some more soybeans, and we are not going to escalate next week, October 15th, and then we're not going to escalate in December. So that we were all sort of just expecting a pause, at least I was, and thinking that this was just going to be a sort of not a real. This is really a shock, to be honest with you, to get something that actually talks about where we can go. And one of what I call the 7 deadly sins that Peter Navarro is always structuring of the 7 things that China does that we need to stop, joint venture, and it was not something that we expected to hear today. So it's interesting, and we have to get the details, but it's exciting news.
I think a lot of investors will take that with cautious optimism, if you will, until the details are announced.
That's exactly
Obviously, all of this is kind of weighing into where the Fed sees the outlook as well. We've heard Jay Powell talk a lot about the trade uncertainty and trying to navigate things on that front. Minneapolis Fed President Neel Kashkari telling Yahoo Finance yesterday that while economic fundamentals seem to be good, the risks of a recession have increased. Take a listen.
The good news is most Americans still have jobs. Wages are slowly growing, so families have a little more money. They're spending that money. That's 70% of the economy. So still the economy is in a decent place, but the risks absolutely have increased to the downside.
Do you agree with that?
Well, he's looking at the global slowdown, right? And we do have a global slowdown. Germany obviously has a major pullback in manufacturing. You've got Italy, you've got Japan, you've got China has had the worst economy in 27 years because of the trade war. So clearly we are not in a silo. We will be affected with a global slowdown. So he's actually, in listening to his pieces and what he specifically, shared with Yahoo Finance, I thought it was really interesting that he's talking about being more preemptive than the Fed has typically been. The Fed is usually looking at only target inflation rates and benchmarking around that, and they follow the Phillips curve. And it was interesting, they also had a discussion about the Phillips curve specifically. He didn't want to really get wonky and say that, but he said, listen, usually full unemployment makes inflation. We haven't seen that. He doesn't actually believe that we have full employment yet, because he wants to count people that maybe aren't necessarily looking for work. He doesn't believe in necessarily the numbers. So he is talking about, listen, in December of 2015, we preemptively started to raise rates, and now we should preemptively continue to cut rates. My concern is that with the federal funds rate at 1.75 to 2, how much gas are we going to have in the tank left if we're cutting when we don't actually necessarily need a cut right now?
Now, prior to the minutes being released this week, we did hear from the Fed chair talking about an expansion in the balance sheet. There's been some debate of whether that's QE or not. We did get some news today saying the Fed's going to begin the initial buying of $60 billion in Treasury bills. Is this QE? How should we be looking at it? And I guess the ultimate question is, does it matter how we define it?
Well, I think it does matter, because QE is obviously an entire economic school of thought that some people disagree with and a lot of people don't.
Well, that would also signal that the Fed sees a slowdown.
That's exactly right. So I think this is, interestingly enough, they talk about this was more around the liquidity needs of paying third quarter taxes. All American businesses remitting taxes to the IRS around the same time frame makes liquidity in banks dry up really quickly. But we've had that, forever. We always have third quarter taxes, and this is the first time this has happened in 10 years that we've had this sort of infusion. So I don't know if it's not a QE technically, but at the same time, it is interesting, and I'd like to get more into the details of why this was necessary.
What do you think that suggests, though?
Well, I do think that the Fed maybe they don't want to cut rates as much as Trump wants them to cut rates, because they want to stay out of the politics of it, but they are seeing some slowdowns, and they're trying to see what else they could potentially do.
Okay, Rebecca, great to have you on today.
Thank you.
Well, coming up, President Trump will meet with China's vice premier in the Oval Office just moments from now. A top expert joins us on whether to expect a partial deal. Plus, PG&E facing mounting backlash against its preemptive blackouts in California. Well, President Trump is set to meet Chinese Vice Premier Liu He at the White House just about now. It was scheduled for 2:45. This comes as Bloomberg reports that a partial trade deal has been reached between the two countries. Of course, it's all contingent on how that meeting goes. But let's bring in Derek Scissors. He is a resident scholar at the American Enterprise Institute. Derek, how optimistic are you at this point in terms of a partial deal being reached?
I think a partial deal is very likely. The president always has to step up to the mic and say he agrees with it, but he's been optimistic in the last couple of days. U.S. negotiators have been optimistic. So the question is, what's the scope of the deal today, and where do we go after that? If the scope is just postpone the tariff hike on October 15th, there's a long way to go and not much time before election politics gets in the way. If they can also bring in the December 15th tariff hikes and postpone those, they've made more progress, and I think then a lot of the optimism today would be justified.
So, Derek, at this point, we're going off of those Bloomberg reports because we haven't heard from the president or the vice premier. But if this really is about ag purchases and a delay in the tariffs, where does that get the U.S. to that ultimate goal that Robert Lighthizer has talked about, which is structural change within the Chinese model?
Yeah, if it's just purchases and tariffs, President Trump's happy with that because he's primarily concerned about the trade balance. But I don't think Ambassador Lighthizer would be. I think he's hoping for more now, and if not now, then soon in the next month or so. We do need the Chinese to say they've started an IP review process or something along those lines, that they'll at least talk about raising ownership caps for foreign ownership in various industries. That may not come to anything, but if they don't even talk about it, it's no progress. So yes, just ag for a tariff delay, ag purchases for a tariff delay really gets nowhere on structural reform. I think they've been trying to go beyond that today, but the question is whether the president's in agreement with what we got.
Let's talk about one of the other structural reforms the U.S. has talked about, and this is this need for American companies to form joint ventures in order to do business in China. Our guest earlier, Rebecca Walzer, had mentioned the potential for there to be a breakthrough on that front. Is there any indication the Chinese have given that they are willing to come to the table on that issue at this point in the negotiations?
Yes, they have, although in very vague fashion. I mean, China is short of money now, which is something a lot of people don't appreciate, but that's what happens when you run up debt for 10 years. So they're looking for foreign capital. Of course, they're looking for foreign capital under their own conditions. So I think we could get something from the Chinese that says, look, we'll allow more foreign ownership, but that there's an immediate hurdle of they're going to allow foreign ownership. They're going to give those licenses for wholly owned foreign joint ventures where they want to and when they want to. So it's a step forward. They're willing to talk. We could get a public statement to that effect, but the proof is in the pudding of what foreign firms will actually be allowed to set up.
One of the things that we've seen emerge here is potentially a divide between where the White House is and how far they're willing to go to get some kind of partial truce, if you will, and where some of the hardliners in Congress have been. One of the things that we've seen reported out is potential waivers for companies that do business with Huawei. And another thing that we've seen floated around from the likes of Senator Marco Rubio is to put stricter restrictions in place for Chinese companies that are listed in the U.S. If we get any kind of waiver, let's say, on businesses that do Huawei, that the companies that do business with Huawei, are we likely, you think, to see some pushback from Congress on that?
Yeah, I think you're putting your finger on a very important issue. I think the administration has become less hawkish, but Congress hasn't. There's an election looming. We could get a hawkish Democratic candidate on China policy. So the administration might be easier for them to deal with China, but for the rest of the government, it's not. And taking Huawei in particular, the administration has been trying to say, look, we're not negotiating with the Chinese over Huawei. We're making our own decision on Huawei. But nobody really believes that. I do think the administration has a separate process. But if the talks went south, we wouldn't be giving Huawei licenses because we'd be angry at China. So the only way that process goes to giving Huawei licenses is the administration is happy with China. And if the Congress isn't happy with China due to Hong Kong or human rights practices in Xinjiang or many other issues, they're not going to see that this is the right time for Huawei licenses, and you will get pushback from Congress.
Derek, you just mentioned human rights issues. One of the things that it seems like we've seen emerge this week are the U.S., or at least the administration, coming out and trying to take a harder line on those very issues on human rights. We saw the Commerce Department go after 28 Chinese entities that they believe are involved with those Uyghur camps in Xinjiang. And we also saw the U.S. put forward visa restrictions for those who are involved with anything that's happening there as well. Is this the U.S. or at least the administration right now trying to separate all of these issues that we've seen over the last several months kind of piled into the trade discussions?
Well, I'm going to be a little bit cynical and say the U.S., the executive branch was trying to preempt the Congress before the trade announcement. So I don't think the administration wants to go as far as many members of Congress want to go. And I think they got out in front on human rights so that would not be brought up to spoil a trade deal, to say, wait, how can you sign a trade deal with these human rights violators? The administration can say, well, we already took action on that front. So I don't see a big emphasis in the administration on human rights. They've had plenty of opportunity to now. And I don't think it's a coincidence that the sanctions were announced just before what is likely to be something of a trade deal today.
Okay, Derek, always appreciate your take. Thanks so much for joining us today. Let's give you a quick recap of the tickers we've covered in the show today. Our first ticker was Apple. It's touching new highs after Wedbush's Dan Ives raised his price target on the stock to $265 per share, up from $245. Also in focus, Tilray. It's teaming up with Anheuser-Busch InBev to make CBD-infused non-alcoholic beverages that will be available in Canada. The news coming after big losses for Tilray and other Canadian pot stocks yesterday due to a major outlook warning from Hexo. And we also looked at SAP, the company delivering early third quarter results with a big beat of expectations. SAP also saying its longtime CEO Bill McDermott will step down. And it's our last tick of the day. It's PG&E. Customers experienced a sweeping power outage across much of California this week because of PG&E's lagging system. That's according to the LA Times. The utility company cut power to about 730,000 homes as a method to prevent wildfires. Dan Halley, Inez Ferre, and Dan Roberts all back to weigh in. We should point out those rolling blackouts, for much of it was in Northern California. Yet we are still seeing fires, although we've seen a lot triggered in Southern California as well. Dan, PG&E stock is up today. What do you make of what's playing out in California right now? And what do you think the implications could be for other power companies?
Well, look, the issue when we talk about these utilities is liability, right? And so this is still playing out. I think that's the risk if you are heavily invested in these utilities all the time. Now, there was some short-lived optimism, I remember, a few weeks ago when there was news of PG&E looking at a potential bankruptcy. But now it's interesting when you say the company is back up today. I mean, we are seeing a huge market rally, so I'm not going to interpret too much optimism about that. But I think this story about the lack of sort of responsibility or the lack of foresight and the idea that PG&E is maybe more to blame for these blackouts than previously thought, I think that could be pretty damaging, but we'll have to keep watching because all this stuff takes months and months and months to play out and really assess what the liability of the utility is when we have these natural disasters.
Dan Halley, yesterday we were talking about what this could mean for some of these energy companies, like a Tesla, if you will, if we do start to see a breakup in a way where we're seeing some of these communities really start to rely on each other for energy. We're talking about the microgrids that could potentially be formed. Tesla's got these solar tiles out, right, for their roofs. I mean, are we likely to see something like that maybe emerge more on the back of this?
We could, and what's interesting, you talk about solar. A lot of people who have solar panels out in California still lost power because what happens when you have a solar panel is it doesn't necessarily store the energy in your home for you to use later. It feeds that back into the grid so then you don't have to pay as much on your bill. That's kind of how you end up with having a cheaper bill than someone who's just using regular straight up electricity. So just because you have solar doesn't mean you would be safe from these kinds of rolling blackouts. You would just be as susceptible as anyone else. You would just be also giving the power company some extra power on their side too.
All right, let's go beyond the ticker now. Uber announcing it is buying a majority stake in Latin American grocery company Cornershop. This comes as Uber has been declining revenue in the area. Inez, I know you've been following this story today too as well. What do you think is the strategy behind this? And I guess some would argue maybe Uber is trying to get into too many projects right now.
Some would say that. I would say, though, that Uber in Latin America has been growing hugely. So if you go to Colombia, if you go to Brazil, Argentina, Mexico, Chile, relay that Uber is a very, very well-known app. And so, and it's very much needed in these countries because the transportation is not good. The buses are old. The trains tend to be old. And also, as far as drivers are concerned for jobs, this is something that is very much welcome. So although I agree in some respect that they're getting into a lot of businesses, but I think it's they're trying to get in first.
Yeah, and certainly you could argue for international markets, it's also about pushing their brand awareness. Dan, what do you think about this decision for Uber to get into the grocery business? Dan Roberts.
Well, look, you said off the topic, Kiko, that some would say that they're trying to do too much. Yes, I would say that they're trying to do too much. That would be my take. Now, we know that this is a really desirable market, and we know that there's a lot of growth in grocery delivery in that business. But man, Uber first has to get its core business right, the ride sharing.
Okay, certainly a lot of investors would agree. And we should point out one more announcement that came out of Uber. They're starting boat service over in Nigeria. So another market they're looking at. All right, coming up, investors are eagerly awaiting news from the White House as a meeting between President Trump and China's vice premier scheduled to get underway. Stay tuned for the final round. That's coming up next.
Hello, everyone. I'm Jen Rogers in New York, and this is the final round. Stocks surging here to end the week as a mini trade deal may be on the table.
And Miles, up in this, as the Fed announces it is definitely, absolutely not doing another round of QE. We'll have more on that in the market action coming up in just a bit.
Plus, Wall Street goes all in on hard seltzer with another big upgrade. It is our call of the day. And the NBA versus China. Should players stay silent on social issues? Plus, we get a peek into the massive worldwide insurance market with the CEO of Lloyd's of London. Right now, Miles and I are digging into the market action on a big up day here. You can see the major indices are higher. The Dow's up almost 500 points. Is a big rally on Wall Street right now. We've got stocks, we've got bonds surging. The deal here is we have reports that the U.S. and China have struck a partial trade deal, bringing the major indices into positive territory for the week. The Chinese delegation is at the White House as we speak. Jessica Smith is live from Washington, D.C. with the very latest on this and the timeline for the rest of the afternoon. Jess, we've got another hour of trading here. Should we expect more details?
We are waiting for more details from the White House at any minute, but Bloomberg is reporting that there is a partial trade agreement that negotiators have reached. Now, this agreement should lay the groundwork for a broader trade deal between the U.S. and China. And Bloomberg reports this agreement includes agricultural concessions by China and tariff relief from the U.S. You'll remember tariffs are set to go up on October 15th, and another round of tariffs is set to go into effect on December 15th. Now, this agreement is tentative, and it's all dependent on what President Trump says and how this meeting with the vice premier goes. Secretary Steve Mnuchin said to reporters earlier today that talks were productive, and he was asked about how the market is so optimistic about this news. And I want to show you this exchange he had with one reporter who pressed him on that.
The stock market is very optimistic about what it sees over at the USTR's office. Are they right to be optimistic?
The stock market's always right.
No, but
Mnuchin said he was going to brief the president right after he had that news conference. And then at 2:45, the president was set to meet with the Chinese delegation. That is closed press at the moment, but Mnuchin said he would not be surprised if cameras were allowed into the room, reporters were allowed into the room at some point. I do think it's important to note that this report from Bloomberg is along the lines of what we expected to happen today, just a partial agreement to kind of lower tensions and then lay the groundwork for more talks later on. And if it really is more agricultural purchases and maybe a delay in those October 15th tariffs, we still have a long way to go before a complete trade deal is done. Jen and Miles.
Jessica Smith, live in Washington, D.C. Imagine we'll be talking with you again. Good to see you and the Secretary having common ground about the stock market
Tremendous.
Always being
Wonderful.
right.
Makes me warm inside to see that Stephen Mnuchin also believes the stock market is never wrong. And for more on what the stock market is doing today, let's go to Scott Gamm, who is live on the floor of the New York Stock Exchange. Scott, let's switch gears from trade for just a bit. Apple shares hitting an all-time high earlier in the session amid this broad rally. Certainly it's all about trade, but I think the Apple story just so far this year perhaps somewhat overlooked by investors.
Well, that's exactly right, and that record high started at the market's open this morning when Apple crossed about $233 a share, and it's really intensified throughout the trading session with Apple shares now over $236 a share. The prior record high for Apple was back in early October of 2018 at about $232 a share, and now so far this year, Apple is up a staggering 50%. Which is a pretty incredible rise just given where the stock was at the start of the year when we were worried about Apple's guidance. That report tanked the broader market, a much different story right now. And, you know, this shouldn't be a surprise, the gain we're seeing in Apple today, just because we've seen countless examples over the past year or so of how sensitive Apple stock is to trade headlines. And we certainly have plenty of good trade headlines today. But as important as the gain in Apple's share, Apple stock is today, I think equally as important are some of the laggards within the market today, especially within the Dow Jones Industrial Average. The worst performing names are McDonald's, Procter & Gamble, and Coca-Cola. And these names have also been up pretty big this year, but you know, these names are also perhaps less attractive on days when you have such strong trade headlines, and we're certainly seeing a slight decline in some of those higher quality dividend stocks today. Now, I mentioned McDonald's as it pertains to some of the laggards within the Dow, but I might as well mention some news about McDonald's rival Wendy's, which had an investor day today, and they announced some strong revenue growth figures for the coming couple of years and also announced an expansion into Europe, which is somewhat surprising just given some of the economic woes we've seen out of Europe recently, but certainly Wendy's seems confident enough to expand their store count within Europe, guys.
All right, Scott Gamm live on the floor of the New York Stock Exchange.
Let's go to our analyst call of the day. Bring in Dan Roberts here. It's Citi's bullish note on the Boston Beer Company. The firm upgraded its rating on the stock to buy from neutral, also raised its price target by $54. That price target now sitting at $448. Stock trading just above $402 right now. A Citi analyst, Wendy Nicholson, writes that it is just too hard to sit on the sidelines when hard seltzer growth is truly terrific. Last week, Boston Beer president and CEO Dave Berwick was on this very program, and he had the same sentiment. Take a listen.
Hard seltzer it's part of a huge disruption that's going on in the beer business today. The next generation of drinkers, millennials, are choosing things other than beers, also other than spirits and wine, and they find something that's healthy, 100 calories or fewer calories, easy to drink, super refreshing, lots of variety. People are looking for variety, and it's also we're noticing it's a drink that people are drinking all year.
Boston Beer CEO there. Citi acknowledges that even though Truly could give up some market share, it expects hard seltzer as a whole to keep growing at a double-digit rate for the foreseeable future. I mean, I think when you look in here at what they're expecting out of, Truly on pace to nearly triple in 2019. You're part of the hard seltzer trend?
Not only am I part of it, you guys happened to interview the guy from the brand that is, for me, my choice. Now, I'll drink whatever there is. If it's Bon and Viv, if it's White Claw, fine. But I actually like Truly the best. I say that completely, separate from any business stuff.
There's no sponsorship deal that you have.
Exactly right. I just, as someone who has had all the brands now this past summer, but emphasis on summer. The big fear for this category, which has exploded, is that it was a summer phenomenon, and that as the weather cools, people won't want to drink it as much. Now, I think it's fair to go either way. You can predict that that's not true and that those fears are overblown, and if you enjoy drinking it, why would you stop just because it's not summer anymore? But you could also go the other way, and anecdotally, some anecdata for you, all the places that I drank this stuff over the summer, they were backyard barbecues and outdoor parties during the summer. That's what it's for. Now, most interestingly, this guy on your show said to you guys...
This guy? You mean the CEO?
This executive, Dave, I just couldn't think of his name. Dave Burwell.
The CEO.
Dave Berwick.
The CEO.
Okay, well, you made me say it and I said his name wrong. Dave Berwick.
No, I'm just saying he's not a guy. He's the CEO.
He said that as much as it seems like everyone is talking about this stuff, everyone's drinking it, the category's huge, still only 5% of U.S. households have purchased hard seltzer. Yeah. So you can interpret that either way. That means it's not as big as you thought, or it's, huge runway, lots of room to grow.
I think it's, I think no one denies that it's a huge trend. You kind of look at the data here. So in 2018, the sales mix for Boston Beer, ticker SAM, great ticker.
Sam Adams for people that are following along.
The sales mix had $309 million of sales for beer, $125 million for hard seltzer. Citi now projects that by 2020, there'll be $234 million of beer sales and $495 million in seltzer sales. So you're going from seltzer being about a third the amount it was, relative to beer, and now it's going to be double that in 24 months. So if that happens, I guess great, right? I mean, it's a changing business. It's really not a beer company anymore. I think that the business in general, and what are they going to do? Just stop selling hard seltzer, but trying to analyze it, as an analyst, think about it as an investor. It is kind of like, well, what if the trend doesn't continue to accelerate? Where are we left with there? Because what I don't think is going to change is the deceleration in the consumption of beer.
And they point out in here just how bad the beer trends are. They use the word horrifying.
They are horrifying.
How often do you see that?
If you are a beer distributor.
What's more horrifying, beer or soda right now? The declines.
Beer.
Oh, really?
Beer.
I think I still drink beer. I barely drink any soda, but that's just my anecdata. They say in the Citi note, pretty horrifying trends for the company's core beer and older portfolio. Okay, so great, beer's bad. But then there's one thing about this seltzer trend. You remember the whole cider trend, which they've also played in that space?
Which was never as big as seltzer.
Orchard. Okay, so that's it. You don't think they're comparable. Because Angry Orchard's already falling out, they say, having fallen 9.1%. The craft beer portfolio has fallen 11%, so a little bit better on the Angry Orchard. That's despite the continued success of the Angry Orchard Rosé. So I don't know. You don't think that cider was hot and now
you're not wrong
hot?
To bring it in, because for a while every brand was launching a new cider. I remember when ABI pushed a big campaign for Stella Cidre. Remember that one, Miles?
Remember it.
Sparkling Cidre.
I don't remember that.
Stella Artois cider, but they spelled it C-I-D-R-E, Cidre. And yes, for a while everyone was doing their cider, but there's always been hard cider. That's always been a thing. Yes, some people launch new brands, fine. And there are people, I know certain people who don't drink beer at all. They prefer hard cider, and they can almost always find hard cider. This hard seltzer thing has been a more contained, sudden, lightning fast, abrupt trend.
This is like
now
an
some people think
invention.
fad. I mean, it kind of came out of nowhere, and suddenly it was comical. I mean, it was like blockchain or CBD, to the point where, you know, in August, every week another brand came out and said, you know the other guys, but check out Natural Light, you know, dropped its seltzer. Said, forget the other guys. We're 6% alcohol, whatever it is.
Right.
I mean, everyone now has a seltzer.
I think the concerning trend for these companies is the fact that each new iteration of these products resembles alcohol less and less, because the actual trend is to consume less alcohol.
No, that's funny. I think it resembles alcohol more and more, but it resembles the brand less and less. Like they're becoming more absurd and over the top. Like
This tastes like water.
Yeah, it tastes like nothing.
Right, the
We
natty.
had it
Oh, I
after-
see what you're saying.
it
The
just
natty
tastes
one
like-
tastes
it's
like soda, but it's dangerous.
I know, but
you
what
chug two down. and
We
you're
had
drunk.
this after the show on last week, and I thought this just tastes like sparkling water.
Yeah, no, the problem for the industry is that I think our peers want to drink less in general. And so the new
Absolutely
products
right.
are less and less like alcohol. So this is masking over that trend. And that is why I think, okay, you can get in bed with the seltzers, but the core beer business continues to deteriorate. The trends are horrifying. And I think that when this fad does eventually phase out, you're kind of be left with a portfolio of like, okay, now what? You know?
Cannabis.
CBD drinks. There you go.
CBD on the blockchain.
Of course. All right, coming up here, we will ask, are you retirement ready? Expert AJ Smith will join us on the best ways to stretch your dollars when you are done working. But first, let's take a look at where European markets closed on this Friday.
Now let's get to our retirement segment brought to you by Fidelity Investments. In order to know how much you need to save for retirement, you need to have an estimate for how much you will be spending. And joining us now to discuss the best ways to save and spend money during retirement is AJ Smith, Vice President of Content and Financial Education at Smart Asset. So, look, you don't want to be broke. You want to be enjoying your life a little bit, but you're also just going to have regular costs of like living. How do you possibly figure out
how do you plan for
what
this?
you're gonna need? What is the rule of thumb right now?
Well, the biggest thing is what the experts advise is that you'll need about 80% of what you're currently spending in retirement. But here's the thing: at Smart Asset, we always say personal finance is personal. What you're going to need is going to be different than what I'm going to need. What I envision as retirement is going to be a little different than what you envision. So my biggest piece of advice is to take that rule of thumb, but then personalize it. Run your own numbers.
What is the other 20% that I'm going to get rid of? Sorry, that's
nothing.
No, but what is
You
that?
need the 100.
That's okay.
So things go down.
What? Like my work, like dry cleaning?
those costs do go away, but housing costs generally go down in retirement. Many people have already paid off their mortgage, or at least paid a lot of it down. Transportation costs go down in retirement. In fact, a lot of costs go down. The one big cost that does go up is healthcare. So you have to remember to keep that in mind as well.
And then in thinking about, so let's just take the 80%. Okay, someone's trying to get to that number. I think young people today assume that there will be $0 from Social Security available for them, but realistically, what kind of mix should people be targeting in terms of money that they have saved, so 401k, things like that, versus what they're going to get from that Social Security check?
Absolutely. And I think a great way to think about it is that Social Security, whatever is there, will be gravy. It's a good idea to kind of think about how.
So it sounds like it's almost zero that you should plan for.
I think that's the most empowering way to look at it, because then you feel like you're in control of that. There's very little that you can do maybe to control whether or not you're going to get Social Security, how much that will be, but you can control how much you're saving. How much you're spending now will obviously impact how much you're saving you're going to have for later that you can spend in retirement.
Let's talk about young people and what you think they are doing right or wrong when it comes to this planning. A lot of our viewers probably not thinking about retirement at all yet, but I know that the lesson always appears to be, well, they should be.
Yeah, I think the biggest thing is exactly what you say, that they're not thinking about retirement at all, or that they're sticking their head in the sand. This is going to be a depressing conversation. I'm not going to have it. I'm going to wait till later. But really, so the biggest thing is to start thinking about it now. Envision what retirement looks like for you now, and that may change when you're 20, when you're 25, when you're 30, when you're 50. Your view of retirement might change, but if you start thinking about it, envisioning it, that makes it easier to prioritize when it comes to all of the other things that are pulling at your money, pulling at your budget. It helps you to prioritize that if you at least have that vision in mind, even if it changes.
My vision in mind is I'm going to spend more.
and that's true for some people.
Like 150%. I don't know.
But that's true for some people if you're thinking you want to travel. And honestly, in many cases, people do spend a little more in the first couple years of retirement. When you're young, when you're still young, you're healthy, you're active. You may spend a little bit more in those first couple years of retirement. But later on, that number is going to decrease, is likely going to decrease on average. Again, it's all personal. Think about what you want. And if you do want to travel for your entire retirement, you've got to start planning for it now.
Do you think that people are going to actually retire the way we conceive of it as retiring in like 20 or 30 years?
I think already the concept of retirement is changing. We're seeing more and more people working after 65. Some of that's, of course, out of necessity. Some of that's because we see more and more research that you're going to stay healthier longer if you're active in retirement. That you may find that it's surprising that having nothing to wake up for in the morning or not a workplace to go to can be, not a great place to be in your life. So, I think we see more and more people working past, is it the traditional workplace? Are you still working 9 to 5, 8 to 6, whatever that might be, every single day? Maybe not, but maybe you have a part-time job. Maybe you have your side hustle that becomes, a little bigger part of your life.
Your side anchor hustle.
Exactly.
65.
150% of your spending.
With the robots.
Yeah.
AJ Smith, Vice President of Content and Financial Education at Smart Asset. Have a great weekend.
Thank you, you too.
All right, coming up here on the final round, we'll get a peek inside the massive worldwide insurance coverage market with the CEO of Lloyd's of London. We're back with that conversation right after this.
Climate change, geopolitical uncertainties, and rapidly advancing technology are all affecting how insurance companies compete in the market. And here to discuss what his business is doing to evolve is John Neal, the CEO of Lloyd's of London. And I want to start with climate change because I think that we all see these headlines, these big storms, fires. What are you doing to prepare for this change? Because it's got to be meaningful to your bottom line.
Just open the newspaper today and there's a typhoon going hard into Japan, cancelling rugby events which are insured at Lloyd's. So we spend a lot of time studying climate. There's a difference between weather and climate. We've got 25 years of data, so we're very certain of the likely change in climate and the pace it's moving at. So as best we can, we legislate for what we think climate is doing and really what policyholders, customers want us to do to help them protect their assets. And we try and develop that data over time, share that data with them to encourage them that there is a value in transferring the risk to us. But it's moving fast, but we have probably more data than almost anybody.
Well, and I wanted to, you mentioned it's moving quickly. I wanted to ask about that because it does seem, at least from our vantage point outside the insurance business, but talking to folks who are in the business from time to time, that the last couple of years, the conversation around how climate change might impact the business has accelerated. Does it seem like that from the inside?
Yeah, very, very much so. The conversation is much louder than it used to be. To give you a feel for the numbers, we set aside 10% of the premiums we take in every year for climate-related events. So that's our working assumption of the cost. So it is a lot. And what we know is that the likelihood of an event, we just don't know where. 2017, it was here in the US, Harvey, Irma, Maria. This year, we've seen 2 typhoons in Japan. So we know that the events are getting more frequent. We know that they'll cost more money, but we just don't quite know when they're going to occur.
John, you've been doing this a while. Lloyd's has been doing this a while. We know that Warren Buffett really made his bones in insurance, and he loves to geek out about this stuff, about the odds. I had the chance to interview him a few years back, and he was talking about a sign that Berkshire insures that was in Fenway for years and years. And it was like, if you hit this sign, you get X amount of money. And it was a promotion with Jordan's Furniture, which I know from back home in Massachusetts. But it was remarkable to hear him talk about, he knew the exact odds, and you would think, well, no one's ever going to hit, right? Oh, no, they could, and here's exactly how much we would have to spend on it. Is that something that's fun for you? I mean, this stuff is fun for you guys, right?
Yeah, I think it's good fun. I mean, we ensure that all the things you'd expect us to. We've been talking about climate. We talk about event cancellation, whether it's a concert or a rugby game. But we also get some of the odd things. As an underwriter, as a young underwriter at Lloyd's, I'm sat there and someone comes and sees me and says, look, we've got a blind man who wants to break the world speed record. Will you insure him? And it's all about assessing the risk, So if someone sat next to him, what's his team doing? How well is it being managed? And the answer is really, really well managed on a beach that's been closed down. So great risk, yes, we'll insure it. But
did you insure that case?
We did insure that case, and he did break the record, so it was good all round.
Talking about Warren Buffett reminds me that at the annual meeting this year, they were also talking about what's going to happen with more autonomous vehicles. So the idea that actually maybe there'll be fewer accidents there, but the accidents that do happen are probably going to be more expensive to cover because the cars are more expensive. But just in technology overall, so if climate is more of a headwind and you're setting aside 10%, when you look at technology, is it making our lives safer? Does that go into your thinking? And not just specifically cars. I mean, it's aviation. It's everywhere.
I think it makes things more complex. So if you think of the car, 10 years ago, a car in an accident, little bump, the fender's damaged, it's $1,000. Today, a car's in an accident, and to protect the pedestrian or the passenger, the airbags go off, the car crumples. That same damage today is $15,000. So we're getting much better at sort of protecting people in society, but there is a corollary and a different cost against that. We just need to think through the implications of that and how we address insurance to meet the demands of a changing landscape, changing world. Technology applies almost across everything we touch.
Now, you've been here in the States for about a week. Certainly our political situation is volatile, but across the pond, things are also quite interesting.
They are.
In terms of thinking about the state of Brexit negotiations, I don't really know where we would even say we are at this point, but in thinking about it for Lloyd's, how have you guys been working through the last couple of years, which have in many ways gone nowhere, but in some ways quite a bit has changed?
Yeah, I mean, if you think of the UK, 25% of the UK's GDP is financial services, banking, investment banking, insurance. So it kind of defines our economy. With the Brexit news, all of us, and including us at Lloyd's, thought, well, we just need to be Brexit ready. So we reconstituted a part of Lloyd's in Brussels and then branched from Brussels into the rest of Europe. And we began on the 1st of January this year with the assumption that Brexit had happened. So we've been working on that principle since the beginning of the year. Whatever the political debate and the delay, we're trading today as if Brexit had happened on the 1st of January. So we're ready. It's just the disruption, uncertainty it causes in the meantime that's the problem.
So even if there is no Brexit or there's a hard Brexit or whatever they come up with, would that change your plan, or have you just been operating, said, you know what, the vote happened, 2016, we are going to figure out where we want to be in 2019, 2020?
Yeah, the vote happened. The working assumption would be that the UK is outside of the European Union, therefore we really need to reconstitute that bit of Lloyd's to operate on that basis, and that's what we did. Done.
I think here a lot of people know Lloyd's for insuring some of the more, I don't know.
Exotic.
Is that what you guys call them? The exotic
Yeah.
items out there? I don't know, America Ferrera's teeth, we've heard, Keith Richards' fingers.
Yeah.
You guys have any new ones that you can reveal, or do some people want to keep these quiet?
No, I think people generally do want to keep them quiet, where they insure. We had someone in the other day who was a chocolate maker, and we were insuring her taste buds because obviously and they were insured for £1 million.
And how much does something like that cost? What's the?
Well, I think the policy it would vary really depending upon what the risk is assessed, but they're almost impossible to price. So they are slightly exotic. The more conventional insurances are awfully data-driven in the way in which you determine the price, but we still get the odd exotic request.
I mean, they need to insure Gardner Minshew's mustache, the Jags.
What about your mustache? We were thinking of Miles' hair.
Nice.
Yeah, that'd be good. That'd be good. We could sort that out this afternoon.
There you go.
It won't be too much.
There you go. Right. I mean, how much is it really worth? The answer. The answer.
A lot of money. $20,000, I would think.
Of course.
Thank you so much, John Neal, Lloyd's of London CEO.
Thank you.
All right, coming up here, we'll have more in the final round, plus the NBA versus China, the story that just will not go away. We'll discuss whether players should stay silent on social issues in China and elsewhere. We'll discuss that right after the break. Hello everyone, Miles Upton here in New York. This is the final round on Yahoo Finance. Stocks surging here. We've got a mini trade deal reportedly in the works, though Trump is currently meeting with Chinese negotiators. We'll have more on all of that coming up in just a bit. Plus the NBA against China. That's the story that won't die. Should players stay silent on social issues? And what's next for the hard-hit IPO market? We'll discuss with venture capitalist Ryan Hinkle. Plus, a big week for Trump is in the books. We will have your Trumpometer score with Rick Newman coming up in the 4 o'clock hour. Joining me now, as always, my co-host Jen Rogers and the host of Wi-Fi AM, Dan Roberts. So with 30 minutes to go in the session, let's take a look at where we stand right now. All three majors higher. The Dow at 450 points right now. Dan, it's funny. You were saying to me earlier, why isn't the market up 600 points after the mini trade deal?
Yes.
And my response to you was like, well, it was already up 400 points, so that trade deal is only good for 61.
Well, let me take you a step further. It was already up 400, I guess, on the assumption that we'd get some kind of mini trade deal, which is very interesting. Now, let's also make sure we give the small caveat here. We don't actually know yet if we've gotten a partial trade deal. There are reports of it. But let's say that suddenly Trump comes out, okay, I've met with Liu He, and here's what happened during the meeting, where we've come to a little mini deal. I would think we'd see a leg higher. Now, of course, the market's about to close. But you would think that some kind of real deal, and maybe the mini deal that we're hearing about is too small and unsatisfying, but any kind of actual full deal with more than just tentative agreements would shoot markets higher. I mean, that's what I would expect. But this one, I guess, people just assumed that since we're meeting in person, and it's interesting to me, all of this, every day, it's all a story of assumptions. We hear one encouraging thing, and we assume that this means something good, and stocks move a little higher, and then we hear, China doesn't like this, that Trump said, and we assume that things aren't going to be good, and we assume that it means we'll never get a deal, and things move lower.
Jen, you want to tell them?
What, they were never getting a deal?
Well, you don't have to like it. It's just those are the rules.
Oh, those are the rules.
No, I don't like it. Those are the rules.
Sorry, Steve Mnuchin also agrees. It's
never wrong.
Why are we even up 400 points?
Right.
Is this buy the
Nothing's
rumor,
official.
sell the news? Wait, nothing's official, but you have to just look at everything that's happening with the NBA and China. I think I'm surprised that Apple's hitting a 52-week high, given the complications for their business and how much they are reliant on China. Just see what's happened with them in the App Store. This is not going away. I'm sorry, no matter what they come out and say. And to me, that means it's a sell the news event, but we'll wait and see.
Yeah, or squeeze the shorts on the news. Maybe that's the alternative for that. All right, for more on today's market action, let's go to Scott Gamm. He is live on the floor of the New York Stock Exchange. Scott, let's talk a little bit about crude oil prices. They had jumped earlier today following reports that a missile had hit an Iranian oil tanker in the Middle East. Where did oil settle for today in the week?
Well, some very interesting action within crude prices today, at least for West Texas Intermediate, which did see a boost this morning, as you mentioned, on that report that an Iranian oil tanker was hit perhaps by missiles. But even with that report, oil prices were not really able to stay above $54 a barrel for that long a period of time. In fact, we went below $54 a barrel. The most interesting part of today's action in oil came after that Bloomberg report saying that the U.S. and China had reached a partial trade deal. That gave oil another boost, and we are now well above $54 a barrel, in fact, near $55 a barrel, so at session highs. Now, two takeaways from today's action. One, the geopolitical tension in the Middle East, when we see these reports, tend to trigger short-lived knee-jerk reactions in the price of oil. And then two, and we kind of knew this, oil is also very sensitive to trade headlines, just like the trade-sensitive stocks. So when you have thawing trade tensions, it boosts the price of oil just because thawing trade tensions tend to signal a stronger economic outlook. And we know the price of oil is very much tied to whatever the sentiment is when it comes to global growth. Now, for the week, guys, oil prices are up about 4%. And then when it comes to today's action, we're seeing the energy sector gain steam. It's not the best performing sector in the S&P 500, but it is up about 2% right now as we speak. Now, outside of oil, we also wanted to highlight the surge in Uber's stock today. It's up about 4.5%. Now, I don't know if there's a trade angle with Uber. I don't think that's the reason behind the surge in Uber today. It seems like there's a trade angle with almost every stock today, but we did see reports that Uber is acquiring the grocery delivery startup Cornershop for an undisclosed sum. Clearly, Uber wants to move into grocery delivery. It might be a nice complement to Uber Eats, which is its food delivery service, but nonetheless, Uber shares are up right now on this Friday, guys.
All right, Scott Gamm, we'll talk to you after the closing bell.
China trade, obviously the focus of so many headlines, but the protests in Hong Kong have presented a unique challenge for many corporations that do business in China, and even the NBA, which we have found out this week. Shad Khan, the owner of the Jacksonville Jaguars, shared his thoughts about working in other countries at the Yahoo Finance All Market Summit yesterday. Take a listen.
I want to have opinion in America. You know, there's a civic duty to really engage and do the right thing. But it's really having an opinion on those sovereign matters in other countries. It's for those people to decide, you know.
I mean, this is an issue now when it comes to China for a lot of American businesses, obviously.
I have a factory in China.
There you go.
Okay. You know, and there are thousands of other people who have factories, operations in China. They do very well. But you have to respect the norms.
Yahoo Finance tech editor Dan Howley is here with more. We're going to discuss with you all the tech firms doing business in China. And the trouble here is that they are speaking one way in the United States.
Oh, yeah.
Right? I mean, Apple wants to be out there, be really progressive. And then on the other side, they're not saying anything.
Yeah.
How does this work for these companies in China? How's this going to pan out?
It's really just, you know, we look at it now like it's some kind of big change. You know, Apple going out and taking this app that was allowing Hong Kong protesters to follow police. They took the Quartz news app down in mainland China. It's still available in Hong Kong. But we look at this as if it's something new, but it's not. This is exactly playing by Apple's regular playbook. A few years ago, they took down virtual private network apps out of the App Store that allowed people to circumvent China's Great Firewall that allows people to access outside websites. They've moved iCloud servers into China and then made sure that the keys to decrypt people's iCloud accounts are also in China. So it's stuff like this that they've been doing for a while. So this isn't exactly outside the norm. But you're right, they are kind of talking out of one mouth and one side of their mouth and then the other in China, where they basically say, look, we support freedom in America. We're all for diversity and change and this, that, and the other thing. But then when it comes to China clamping down, they say, yeah, we'll do whatever you guys want.
Well, and I was just going to add, the NBA really did that overtly. You talk about speaking out both sides of your mouth. I mean, releasing two versions of its original statement, and the Chinese language version, people figured this out right away, was much more severe in its language, saying that the Daryl Morey, that's the Houston Rockets GM's tweet that supported Hong Kong protesters, you know, severely hurt feelings or hurt feelings and was really, you know, they used extra qualifiers. And then in the U.S., the statement was more like, you know, apologies if this offended. And I think that people are realizing this and noticing it and are not going to just excuse businesses anymore. So instead of trying to play both sides, they're going to have to make a decision of, okay, let's just be completely vapid and vacuous and acknowledge that we're a business. And then you don't have to try to pretend, oh, free speech. You say, in China, we'll do whatever China wants. And that's the advice that we've heard some people, including a lot of people at our summit yesterday, say. They basically said, if you want to do business in China, great, but you got to play ball with China.
I mean, I guess the reason that people find the NBA example egregious is for a number of reasons, but I think to me, it's that the sport of basketball is an American cultural export. It's not necessarily a business export. And so doesn't that come along with American values as well as the American players and the American experience? Because I think think about the Apple example, like no company has played ball more cleanly with China going from 0 to 60 than Apple, right? They have done everything China has asked over the last few years. But I guess, Dan, like, the NBA isn't Apple, right? Should the NBA conducting its business as if it were Apple?
Well, wait a minute. This is so funny because you usually play the skeptic, the cynic of, you know, all business is business, baby, and all that matters is capitalism, and we're all capitalists. And by that logic, it would be like, you know, yeah, the NBA is a business, and what do you think? They want to lose all their China business? I mean, there are reports now that some teams are trying to at least prepare for the possibility that their salary cap goes down by 15% in a worst-case scenario where all the China NBA business ends. I don't think that's going to happen. I don't think the NBA will let that happen. Yes, I totally understand that's why everyone's upset. And by the way, I'm not excusing the NBA, and I agree that the NBA has talked out of both sides of its mouth. But I do think this is kind of where the rubber meets the road, because if you had really wanted the NBA to always stand for American values in China, you'd have to go all the way back to when the NBA first started making those, at first very difficult, inroads in China and say, oh, if you guys want to go into China, make sure that you let them know that you're the NBA and that you're the open league that supports free speech. It's too late for that now.
There's a difference, though, between the NBA and Apple in that if the NBA were to cut ties with China, you lose that product. There is no other product like the NBA. Sure, you can have, whatever F-League basketball that they might have, but NBA basketball, cut and dry, is the greatest basketball in the world. That's why people go to the NBA. With Apple, in their case, they're a product. You can have other devices available. So that's why I think in Apple's case, it makes more sense for them to play ball because there are other options to consumers there. With the NBA, there is no other option. It's either you get the best basketball or you get, players that
and
are
people have asked, shouldn't the NBA have more leverage then? Why is the NBA assuming that we have to do what China wants? What if the NBA says, stop trying to pressure us or we'll pull all our stuff? Don't you want our basketball product? But I imagine Adam Silver has thought about that and that the calculation is that China is willing to say, all right then, goodbye.
I think there's an argument to be made that all of these are American companies and that for so long they made concessions to get in there, to open up not just this economic area, but they thought they were making a difference and that they were going to be able to change China and change hearts and minds. And they now are in there and they obviously can't. So it's a no-win situation.
I don't even think they thought they could change hearts and minds. I think they knew that they could get the cash.
They just thought it'd be fine. Right. Money's fine.
Dan Howley, have a great weekend.
Thank you.
All right, coming up here in the final round, we'll talk about what's next for the hard-hit IPO market and whether WeWork will ever find its way to those public markets. We'll talk to investor Ryan Hinkle about that after the break. But first, let's take a look at how those IPO names are trading today with about 17 minutes to go in the session.
Breaking news from Washington, D.C. President Trump just wrapping up trade talks with the Chinese delegation, saying that the U.S. has reached a substantial phase one deal with China. Let's bring in Jessica Smith. What do we know about phase one, Jess?
Yeah, we're still working to learn more about this. The president talking to reporters in the Oval Office as we speak. According to reporters that are in the room, he has announced a substantial phase 1 deal. He says it is subject to it getting written. And he says, according to these reporters, that it will take 3 weeks or so to write, and it will conclude around the time of the APEC summit in mid-November. He says that phase 2 will start immediately after. And one of the reporters in the room says that this phase 1 include pieces on intellectual property theft, financial services, $40 to $50 billion in agricultural purchases. But again, this deal is not written yet, and it might take a couple weeks to get done. We did have that Bloomberg report earlier saying that there was a partial deal that negotiators had agreed upon, and it was subject to President Trump approving it and everything going well with this meeting with the vice premier. It looks like things are going well as President Trump announces this phase 1 of a trade deal. So as soon as we get more information, we're able to get the video from the Oval Office. Once he wraps up there, we'll be sure to keep you updated.
Jessica Smith in Washington, D.C. I will note that the market is off its highs for the session right now.
There's the news you can sell, Jen.
There is a little bit more news in what
right.
with the IP and the financial services part. The ag spending also could be a little bit higher, but it isn't lighting this market on fire so far, the early trickles of what's coming out about it.
Phase 1, then phase 2, phase 3. Why stop there? All right, let's kind of go away from trade. Obviously, that's been the big story of the market this week. But a big story this year is still the relatively disappointing IPO class of 2019. Joining us now to discuss where we go from here is Ryan Hinkle, Managing Director at Insight Partners. So I think the IPO market has been fairly disappointing this year. Do you think that that's a fair assessment of what's happened?
Certainly hasn't been disappointing to Insight. We've had a number of IPOs over the past several years that have performed very well, but the big, splashy, consumer-focused IPOs and the ones that haven't happened, which I suspect we'll talk a bit about today, are getting a lot of headlines. And so the great question of what are the public market investors looking for, and is it different in very large companies versus the $1 to $5 billion market cap companies, which actually make up a majority of IPOs.
So when you look at that, I mean, let's just talk about what do you think investors want? Because we've seen, your mid-size enterprise SaaS play, many of them will get 15, 20, 25 times sales, really without blinking, right? The market says this is a great business with recurring revenue. What has not worked, I guess, with your Ubers, your Lyfts, and your Wees that the market isn't excited about paying a huge premium for those businesses?
It's really simpler than it might seem. It's unit economics that make sense, that are predictable, that are durable, that an investor can look at and say, oh, I can see if I fast forward and keep adding customers at this cost and this retention, it yields these returns. In enterprise SaaS, you tend to have 100% or greater retention. If you're a consumer and I can trade one ride-sharing company for another with no real cost to me, that's a more dangerous place to be. That's why the enterprise SaaS contingent gets a lot more multiples.
Well, so then why,
subscription revenue.
I mean, why did the private market then get, I guess I think we're now at the phase where we're like, okay, so what were people seeing in 2012 or 2013 assigning these values, or even in 2016 assigning values to these companies where the unit economics, we always knew they were somewhat challenged, and yet somehow everyone decided they were going to look past that?
Well, there's different aspects to it. You can look at an isolated market and say, well, I'm going to stamp out my success in New York City and 15,000 cities across the world. But New York City is unique in that it's the only one like New York City, and you have different markets where those dynamics might not be the same. We also can remember the housing crisis, and the great mistake of 2008 and before was housing prices never go down. Turns out they can go down, and when they go down, bad things happen. And so unit economics always getting better is an analogy to housing prices always going up. And so investors were overly exuberant on what could happen, such that when it didn't happen, they get slammed.
So, Ryan, my question would be moving forward. Yeah, we know that everyone was over-exuberant. We know that they excused lack of profitability, and now it turned out maybe we do care about companies being profitable, or at least having a roadmap to achieve profitability in the future. So my question now is, in the near future, is this maybe finally over? The idea that Silicon Valley churns out these companies that don't have to even think about profit, and that can come much, much later, and we'll just keep taking VC money, and then we'll have an exit. We'll either sell or we'll go public. Do you think we're approaching the end of that? Is the unicorn parade over?
I don't think the unicorn parade is over by any stretch. There's lots of great innovation happening in all corners of the market. Think about security and all the bad guys trying to do bad things. Insight invests very heavily in security. Think of the ways that technology continues to interact with you as a consumer and the new business models there. What's important, though, and this is an Insight phrase and one that I really like, intrinsic profit potential. So you need not be profitable right now, but you need to be able to show with the same math we've been talking about, let's stop radical growth in sales and marketing, what happens? And if you can convince an investor that you are intrinsically profitable, that's a good thing. It takes high gross profit margins, high retention, good cost of new acquisition economics, and a lot of that is obfuscated in these S1s. It's not as clear as it could be. In my world, in the private world at Insight, I get all the data and I could do this analysis very explicitly, and that will not go away in Silicon Valley.
Let's talk about an obfuscating S1, WeWork, and what happened there. You say it's an outlier, and we've all been trying to figure out what do we take away from the WeWork experience that can inform other IPOs and where we are in the cycle. So when you look at WeWork, if you think it's an outlier, do you think it's more like a Theranos, or is it more like an Uber? Like, what's going on there?
It's definitely not Theranos. I mean,
okay, so you're not
the fundamental business they deliver is not in debate. They take long-term leases and chop them up into small-term leases.
So the whole governance and the founders crazy and all that kind of stuff, no.
Bad governance behaviors don't mean your business model doesn't work. It doesn't mean your thing is a fraud. Let's go back to Theranos. Fraud is very different. And
it's kind of not that great a business.
It is not. And if you take like ride sharing, that too is a thing. Like I need to get from here to there. They are going to get me from here to there reliably, legally, like all of that good stuff. And so the issue is that a valuation sticker somebody put on the company is not necessarily right. It's not, well, and many others before them, right? So just because their sticker is on it last doesn't make it right. And just because the IPO sticker might be low right now doesn't make them right either. The truth is probably somewhere else. I'm not even sure it's in the middle, to be completely honest. And that's one of the great debates that we have to think about, even at Insight in our private company investing. We have to anticipate what something might be worth 4, 5, 6 years in the future and divide by what we hope to return in that time.
All right, Ryan Hinkle, Managing Director at Insight Partners. Really interesting stuff. We'll talk to you soon.
Thank you so much.
Coming up, the closing bell on Wall Street, less than 10 minutes away. We got a lot of news coming out of Washington, D.C. We're going to have to see how we close out. Right now, you're looking at the financials heading into the bell.
Welcome back to the final round here in Yahoo Finance. You are looking at a stock market that is still significantly higher in the session, though we are off our best levels of the day. As you see in the banner there, the president has announced that we've come to a phase 1 deal with China. Trump also saying that we will immediately begin negotiating phase 2. There might be a phase 3. And so I think what everybody in markets had sort of dreaded but knew was going to happen is that these trade talks would amount to something but would continue the parade of trade talks. The tariffs set to take effect next Tuesday will not take effect.
There you go.
That is according to Trump. We have $40 and $50 billion in new agricultural trade expected as a result of these talks. The president is making reference to a currency and a Forex deal. Some around tech transfer limitations. If you remember, the notion that all U.S. companies doing business in China had to give over all their IP has been very contentious. But I still think this is going to, ultimately, it does start to sound like we will be back to where we were in a couple weeks when we realize, okay, so we didn't do the tariffs on October 15th.
Well, we're already realizing.
And then what else?
The Dow
market
is
up
up 340 points. That's it?
That's correct.
So boy, will Trump be disappointed when we do get some sort of phase 2 deal, and then the market doesn't get juiced. Boy, he won't like that.
Right.
I anticipate that tweet.
Well, the old axiom, buy the rumor, sell the news, is playing out before your very eyes.
There is more in here. There is more in here than just the agriculture.
And we hope to hear from the president himself shortly.
Yeah,
he is speaking right now in the Oval. We'll have the sound shortly.
To get more of that and more of the details here. But the idea that it was just agriculture at least doesn't seem to be panning out here. But as Miles says, it's phase 1, it's phase 2. It's just, we're going to do this in 3 weeks. We're going to meet again in, 6 weeks. It's going to be here to stay. That is for sure. Hey, Dan Roberts, before we let you go, you're also working on a big story that's going to be this weekend. Looks like Libra's having a lot of trouble.
We are watching the Libra Association, all of those founding members dropping like flies. PayPal was out. That happened within the last week. Now today, just within the last few minutes, reports that Stripe and eBay are out as founding members of the Libra Association. So Facebook has a real problem on its hands.
What do you know? Facebook not going to be successful as a bank. What a huge surprise to everybody that's
I do think Libra will launch, but it is going to be looking very different than how Facebook wants it to look.
Right.
And Mark Zuckerberg is supposed to be in D.C. on October 23rd, I believe.
There you
Talking
go.
about Libra.
All right, Dan, have a great weekend. Thanks for stopping by. See you on Wi-Fi AM, 10 o'clock Monday morning. Coming up here on the final round, we'll have a closing bell on Wall Street. Plus, Rick Newman will stop by for the Trumpometer score. Another big week for the president and the U.S. economy. We're back with all that right after this.
Welcome back to the final round on Yahoo Finance. I'm Jen Rogers with Miles Udland. We have Rick Newman with us now. You're watching the market here in its last 2 minutes of trading. It is a weakening tape here. We had been up around 500 points on the Dow earlier on optimistic comments on a trade deal. As we start to get more details, President Trump has been speaking to reporters. We will get more details as this continues. But right now we have President Trump saying that 40 to 50 billion in agriculture trade expected. Currency and foreign exchange also in the deal. And when I say deal, it's phase 1. This is a phase deal. Some technology transfer will also be in phase 1. We have an agreement on intellectual property. Comments that we're getting from Treasury Secretary Steven Mnuchin seem to be that, we still have work to do, which is kind of where we were when we were 95% of the way there. The last 5% is always going to be the hardest sticking point, and I think this market is beginning to realize that too. Looking at live pictures, New York Stock Exchange and the NASDAQ market site right there, closing out the week. We did have all sectors in the green just a short time ago. Here on the close, it looks like real estate and utilities will close in negative territory. So, it's still a rally and it's still on trade.
That's correct.
But the stock market, which by the way is always right, does not seem to like this deal.
Again, I love cliches, one, because I have to talk all day, so they're great. They're great stock go-to phrases. They're also true, right? So buy the rumor, sell the news doesn't exist as a market axiom because it doesn't work, right? That's exactly what we saw all day today. People were making jokes about, when there's headlines like Chinese delegation leaves the USTR office. Everyone's like, well, did they look happy? Were they smiling? Were there a bounce in their step? It's like, oh, maybe we should buy stocks up, bid stocks up another 50 points here. Why not? But when we got the actual news, and the news is, there is some stuff, but really the news is there will be more talks. I think the market realized that we were probably going back to what we were.
I think there is one important piece of news, though, which is that the increase in tariffs that was due to go into effect next week is not going to happen.
Many people would have thought that would come out of this.
So that's a tangible takeaway. So I'm looking at how the market went down right as President Trump started to talk about this. Probably the biggest disappointment is that there is no actual deal that is written. This is just a kind of an agreement to write a deal. So no one can point to a piece of paper that they're holding up that says this is the deal. But they have agreed to some things in principle that apparently they're going to jot down over the next few weeks and perhaps finalize in November when President Trump and President Xi get together.
Let's go to Jessica Smith. She's live in Washington, D.C. Jess, do you have more details?
Yeah, we did just get more details from the White House pool report. And I think one interesting part to note is that Ambassador Lighthizer says Huawei is not included in this part of a deal. And that had been some speculation that was going on before this of whether or not the U.S. would grant some Huawei licenses as a part of this trade deal. There was a lot of criticism in Congress on that move. So now it looks like, at least in phase one, Huawei is not part of the deal. And as Rick mentioned, the tariff hike that was set for October 15th is not going into effect at this point. We've also heard that the teams will meet again in Chile in 5 to 6 weeks. And so we'll be looking for more details there. The president said that they still need to get this on paper, but he doesn't see that there will be any problems with this. We're still waiting to hear any word of tariffs on December 15th. We haven't heard any details about that yet. So if we get any clarity on that, we'll be sure to let you know. But the big headline here is no tariff hike on October 15th.
So, Jessica, the other big story going on in Washington right now is, of course, impeachment. Does it seem that, the president's saying, well, we're going to work this out, there's more to be done, but we have this deal. Did he, do you think, have to come out with something today? Is that the feeling from the administration?
Yeah, I think there was a lot of pressure going into this meeting. I think it's pretty accurate that the president needed a win here, needed some positive news in Washington after just a couple weeks of nothing but impeachment headlines. And then we had this really rough week between the U.S. and China as we had the 28 companies blacklisted and the visa restrictions, all of that. So I'd say the president was definitely looking for some good news, and these are positive headlines as they're finally making progress after talks have been stalled for months now.
Jessica Smith from Washington, D.C. Of course, we'll talk to you again if we do get even more details on this, because there's a lot to flesh out in here. We have been told that we've been 95% of the way before.
Told a lot of things.
You need to know how much meat is on the bones here. And it doesn't seem totally clear yet.
Well, and I think if you want to say, all right, the stock market is going to give us a sense of what is happening or where we go from here, and Treasury Secretary Mnuchin was speaking somewhat in jest, where the market is always right.
He was laughing.
But he has sort of said from the beginning of his tenure that the market is a report card, and I agree, the market gives you a good sense of what they think is happening. So if we want to find out what happened today, well, we had that big rally last night on some rumors. The S&P gapped up at the open. 29.63 was the opening price for the S&P 500, and we closed at 29.70. So great job, everybody. Thanks for playing. We gained 7 points throughout the trading session. All the gains were in the overnight gap up, and I think the market ultimately wasn't all that much change today. There was a lot of noise around where we were going to go, but the realization of a deal that does delay those tariffs, that is the most substantive bit, but also sets the table for several more months of talks, wherever they may happen, whatever they may be, I think is going to frustrate some investors.
So it's worth keeping in mind what the stock market actually cares about. The stock market cares a lot about tariffs. It does care about Huawei because that affects U.S. suppliers, especially semiconductors. It does not care that much about structural reform to the Chinese economy. Markets really just don't care because it doesn't affect U.S. stock prices, at least not in any tangible way today or tomorrow. So markets want two things, I would say. They would, first of all, would like to see no additional tariffs. Let's not make this any worse. Let's not escalate. And then if we can get that, if we can do that, markets would like to see, let's remove some of these tariffs that have been put in place. And if we started to get to the point where actually taking tariffs away, markets would love that. We would see a big rally on that, but nobody really expected that, at least this week. Right. And it's possible we could get there sometime. An interesting time for that to happen would be about 3 or 4 weeks before the presidential election in November 20. So, Trump might be thinking he could trigger a little rally then, but we're nowhere near that right now.
One of the sticking points for the administration has always been enforcement, which we have no clarity on right now, especially in a phased deal.
Did see a headline
how that would play out.
Did see a headline that Mnuchin doesn't consider anything done, even the phase 1 part, until it is in writing. So we are kind of at that exact point. I think the administration also feels the same way that you do. Like, where's the, put it, make it real, right? Don't just say it.
I'll make a prediction. Mnuchin is going to regret his joke that the stock market is always right, because the stock, you guys know my view. I think investors and traders have been way too optimistic about breakthroughs on trade. Yeah. And I think at some point the market's going to reflect that.
And I think, to your point, where the market doesn't care.
We will remind him.
The market doesn't care about structural reforms.
It doesn't.
That is something that we haven't seen yet, but I think with what's happening with the NBA, that could also be repricing some of that risk eventually.
I mean, the NBA isn't a stock.
No, it's not a stock, but there's a lot of that. We'll discuss after I go to Scott Gam. For more on today's market action, let's go to Scott Gam on the floor of the New York Stock Exchange. Scott.
Hey there, Jen. Well, if you're just joining us, on the surface, it looked like a great market day with the Dow up 320 points, and it was a great day, but the story is a little bit more complicated, and we can see that in what happened in the last 30 minutes of today's trading session, which was pretty wild, because at about 3:45 p.m., the Dow rallied 500 points, reached session highs. The Dow crossed 27,000 just as we started to get those headlines from Treasury Secretary Steve Mnuchin saying that tariffs on China won't increase, along with the headlines from President Trump saying that the U.S. and China have reached a very substantial phase 1 deal. And then after that, the Dow rally faded a little bit, and here we are up only 320 points compared to that 500-point rally we had just 15 minutes ago. And one trader tells me here it could have been a buy the rumor, sell the news type of dynamic, but nonetheless, we'll take a 320-point gain in the Dow. That was largely driven by a few stocks in today's session: Dow Inc., Caterpillar, 3M, and Apple, which closed at a record high today, crossing $236 a share, taking out its prior record high of $232 a share. That was a level we saw back in early October of 2018. The only laggards in today's session were McDonald's, UNH, Procter & Gamble, and Coca-Cola. Now, because it's Friday, let's take a look at some of the weekly performance within the Dow. You've got names like Caterpillar, Dow Inc., and Apple as your best performing Dow stocks for the week. There's also, of course, a trade theme in that group as well. And then the worst performing Dow stocks this week were Procter & Gamble, Coca-Cola, and Travelers, guys.
Scott Gam, have a great weekend.
All right, bing, bing. This is the story we've actually been waiting for. Forget about the trade deal. We need This Week in Trumponomics. So, Rick,
I'm afraid we can't forget about the trade deal, because that's what This Week in Trumponomics is all about.
So it's interesting. We were discussing, or you kind of prepped us all earlier today, and was like, hey, we usually have the Trumpometer score ready to go, but things are probably going to be happening right up until the minute that the Trumpometer score is revealed. So we've been talking about the latest, but as you see the totality of the week, where do you think does this change your view on the score?
The Trumpometer is unimpressed with the phase 1 trade deal as we know it so far. And as we've been discussing, how much of this is fluff, and is there any actual substance in here? I mean, I think everybody who's been following this has known that at some point President Trump is going to say, we have a deal, whether they have a deal or not, and he's going to proclaim it's the greatest trade deal ever, whether it is a meaningful deal or not. And I think that's probably what we're getting at this point. So this is an evolving situation. As they've said, they haven't even written the deal, so they have agreed to some principles. That's better than nothing, I suppose, and it's a tangible improvement for the market that we're not going to have that tariff increase next week. By the way, that tariff increase, there's already a 25% new tariff on $250 billion worth of Chinese imports. That stays in effect. So all of the Trump tariffs that have been imposed up till now all stay in effect based on this deal. And nobody is talking about actually getting rid of any of those tariffs. You know, what kind of progress have we really made? Very little, it sounds like to me.
So?
Well, this is the last reading. You know, the Trumpometer was off last week, and coincidentally, so was I. So here
it was discussed. We discussed.
We're both back, and the Trumpometer this week is going to say.
Right.
Mediocre.
Interesting.
In the green.
You know, yeah, that's right. So mediocre is actually the third highest. So not bad. I mean,
because it's some deal.
It's a pathway to progress. It is. I mean, again, the most tangible part of this is we will not have a small tariff increase next week, as Trump had threatened to do. So that means President Trump is willing to put some skin into this. And that means he has some expectation of getting something back from the Chinese. But we have seen these sort of agreements in principle disintegrate before. I would say there's probably a good chance that that could happen again. And meanwhile, we're not actually removing any of the stuff that's already put in place. And you know, think about the pattern we've seen with Trump so many times now. He creates a problem, he lights the house on fire, and then he puts the fire out and he takes credit for putting out the fire that he started. So in my mind, he's sort of, running a sink hose on the fire at this point, and, he's maybe dousing a little corner of it, but the house is still on fire.
Okay. I like the analogy. I thought it was going to be weak.
I feel like you were unconvinced by the mediocre rating.
I thought it was still going to be weak. Because I thought we had the upper,
the Trumpometer can always come back for a repeat appearance.
There's a theme that I've noticed in the Trumpometer the last couple of months. It's been weak or mediocre for a lot of that. It feels like we've been waiting for like a real big change to happen.
Well, there have been some failings.
I remember a couple of those.
When Trump has escalated the trade war.
Back in
when
late August.
When he imposed new tariffs in August, that was a failing, and there were a couple other failings around then. So Trump is tiptoeing back. He really needs to get out of this trade war. He's got so many things going wrong right now that he needs something. Even if it's not going right, he needs at least one thing that's not going wrong. I mean, we're not talking about what's happening in Syria, but it sounds like a debacle possibly with ISIS prisoners now breaking out of jail because of everything Trump has set in motion there, impeachment.
No one foresaw that.
The Chinese, no one saw that coming, except everybody in Washington. So, Trump needs something to go his way.
All right, well, mediocre. He can take that into the week.
We'll see what happens next week.
See you back here.
Coming up, stocks are rallying today on trade, but there is concern over the economy, and it isn't just going away. We talked to author Jonathan Swain on how to financially navigate a recession when and if it happens. We're back after this. lots of financial advice out there focused on how to recession-proof your business and just survive, get through the next recession. Our next guest, though, wants you to leverage a recession to your advantage. Jonathan Slane is the author of Rock the Recession: How Successful Entrepreneurs Prepare for, Thrive During, and Create Wealth After Downturns. And he joins us now. So you said people should actually look forward to a recession. In our business, like, a recession is always bad.
No, I appreciate that. We wanted to take a different take on this idea that recessions always have to be a big, scary thing. I think that's been written about enough. The thought here was, what if we researched all of the people that did really well in past recessions and tried to unlock their secrets for how they got ready for future downturns?
So, Jonathan, you say that, I actually appreciate this point. I don't agree that recessions are good. I think no one should ever root for them. But I think it's very interesting. You say, like, if you're a business and you lose your biggest customer, that's a recession, right? Now you've got a problem, even if the business cycle continues to be going well. So I guess, are you thinking about this mostly through the lens of an entrepreneurial mindset?
Yeah, I think that it's really, it's not about fear-mongering. It's not about recessions being good. It's about that even a non-economic recession, you mentioned, like, if you're a business and you lose your biggest client, then you're in a recession. If your 5 best employees leave and they go across the street and start a competing firm, you're in a recession. Or how about this one? How about, what if your CFO or your finance person embezzles from you and they steal $1 million? You're in a recession. Regardless of whether it's those circumstances or an economic one that causes you to be in a recession, the plan would still be the same for how you would move forward.
Hey, Jonathan, Rick Newman here in New York. I know some people who are rooting for a recession, and it's people in New York who want to buy a property, a house or a condo, but can't afford it right now because everything's so crazy, and they figure home values will fall. Is that something you write about? We got
to jump right now. Sorry, Jonathan. President Trump speaking right now from Washington, D.C. on the China trade news.
We've come to a deal, pretty much subject to getting it written. It'll take probably 3 weeks, 4 weeks, or 5 weeks. As you know, we're going to be in Chile together at the big summit, and maybe it'll be then, or maybe it'll be sometime around then. But we've come to a deal on intellectual property, financial services, a tremendous deal for the farmers, a purchase of from $40 to $50 billion worth of agricultural products. To show you how big that is, that would be 2.5, 3 times what China had purchased at its highest point thus far. So they were purchasing 16 or 17 billion at the highest point, and that'll be brought up to 40 billion to 50 billion. So I'd suggest the farmers have to go and immediately buy more land and get bigger tractors. They'll be available at John Deere and a lot of other great distributors. But we're taking the purchase of agricultural products from 40 to 50 billion, meaning in that neighborhood from 40 to 50 approximately billion. And what they've been doing now, I believe, is about 8 billion, right? 8, right now it's 8. The other thing I will say is over the last 2 weeks, a lot of purchases have started going back to our farmers. And you've been doing a lot of business with us, which we appreciate very much. But it really started a few weeks ago. But they intend to go up ultimately, once the agreement is signed, from 40 to 50 billion. And that really was from a base of probably 16 billion. And right now it's 8 billion. And the 8 billion was lower than 8 billion. They got up to 8 billion because they've been purchasing quite a bit over the last couple of weeks. So we also have the agricultural structural issues. We have some incredible progress on the structure and structural issues. And Bob, perhaps you could discuss that, please, on agriculture and explain the importance of the structural issues that we've solved.
Well, I would say probably at least as important as the purchases is the fact that we've corrected a variety of SPS, what we call sanitary, phytosanitary issues, and we've corrected biotechnology issues, and it will be much easier now for American farmers to be able to ship to China. And we've made some collections on our side too that will help the Chinese side.
And that's been completed and pretty much done.
That's correct.
Another big issue that we've come to conclusion on is currency, foreign exchange. And Steve, do you want to explain that, please?
Well, we've had very good discussions with Governor Yi, the head of the People's Bank of China, their central bank. We've also had extensive discussions on financial services, opening up their markets to our financial services firms. So we have pretty much almost a complete agreement on both those issues. And as you know, Mr. President, currency has been a very big concern of yours since the campaign. And we have an agreement around transparency into the foreign exchange markets and free markets, so we're very pleased with that.
We've also made very good progress on technology transfer, and we'll put some of technology transfer in phase 1. Phase 2 will start negotiations almost immediately after we've concluded phase 1 and papered it. And I think phase 1 should happen pretty quickly. So you have intellectual property. We have an agreement on intellectual property. Financial services, the banks and all of the financial services companies will be very, very happy with what we've been able to get. And I think China is going to be very happy because they'll be served very well by these great institutions being able to go into China. And it's going to be a tremendous thing for banks and for financial service companies. Agricultural, structural issues, tremendous for the farmers. As Steve said, that's almost as good as, which I disagree with him on that, but it's almost as good as going from 8 billion and then to 16 billion, which was their all-time high, to 40 to 50 billion. So we're going to be up to 40 to 50 billion dollars of agricultural purchases, which means the farmers are going to have to work a lot of overtime to produce that much. That's the largest order in the history of agriculture, by far, by 2.5 times. And technology transfer, we'll have some technology transfer in the agreement, but technology transfer will largely be done here and also in phase 2. So we're going to start negotiating phase 2 after phase 1 is completed and signed. And then there may be a phase 3, or we may get it done in phase 2. So you'll either have 2 phases or 3 phases. So we're very happy with it. We have great respect for China, great respect for President Xi. And I want to just tell you that I watched the 70th anniversary in great detail, and it was an incredible event. And congratulations on the 70th, everyone. That was really something very amazing to watch. Mr. Lighthizer has done a terrific job. All of my team, I think, has done a fantastic job. The Vice Premier, I want to just thank you very much for being here with your team. You're very tough negotiators. Congratulations. But it's something that we both realized right from the beginning is very important, not only for China, not only for the U.S., but for the world. And every time there's a little bad news, the market would go down incredibly. Every time there was a little bit of good news, the market would go up incredibly. And yet other news that was also very big, the market just didn't really care. They just seemed to care about the deal with the USA and China, and that's okay with me. So we've had a tremendous, really negotiation, a very complex negotiation, but something that's going to be great for both countries. And Mr. Vice Premier, would you like to say something?
这边就是不代表中国政府对特朗普总统在国庆节对中国表示70周年表示祝贺，表示祝贺。
Firstly, on behalf of the Chinese government, we would like to extend our thanks to President Trump for your congratulatory message to the 70th anniversary of the founding of the People's Republic of China.
我们非常同意，中美解决好贸易关系，有利于中国，有利于美国，有利于世界。现在我们已经正在向非常正面的方向走着，取得了很大的进展。
We very much agree that to get the China-US economic relationship right, it's something that is good for China, for the United States, and for the whole world. And we are making a lot of progress towards a positive direction.
这2天呢，我和莱比锡的大使穆斯林台长进行了非常好的沟通。我们在诸多领域，像刚才总统前面说的这些领域，取得了一些实质性的进展，我们感到非常高兴。
Over the recent days, I have had very good communication with both Ambassador Lighthizer and Secretary Mnuchin. And Mr. President, as you just mentioned, we have made substantial progress in many fields. We are happy about it.
我们将继续努力。
We'll continue to make efforts.
感谢总统给我发言的机会。
And thank you for this opportunity for me to speak up, and all my colleagues are happy about it.
Well, thank you very much, and it's a great honor. I think that the currency foreign exchange agreement that we made will be of tremendous benefit, both in terms of the magnitude of it and in terms of the simplicity of what we're able to do. It'll make a very complicated process much simpler. I think that in itself, I just see as something that we've all been working for. Yes, please.
Our President sent a message to you, sir. Do you mind I ask my interpreter assistant to read the letter to you?
Well, thank you very much. Could I see that? That'd be
of course, yeah.
Very nice. Oh, that's very nice. Thank you very much.
Another page.
Yes. Oh.
Do you mind our interpreter to read it?
Yes, this is for guys like John that aren't good with Chinese. They'll have that magnified so fast your head will spin. Well, it's a tremendous message, and thank you very much. And I've read this, and I appreciate it very much. This is from President Xi, and we knew that we were going to have a very successful phase 1. And it took us a long time to get here, but it's something that's going to be great for China and great for the USA, and we appreciate it very much. And please congratulate President Xi. Thank you very much.
Thank you.
Mr. President, I just want to clarify on the tariff. So I was just going to clarify. The Vice Premier has requested and the President has approved. While we go through a process of documenting this, we will not be implementing the increase of tariffs that were scheduled to go in place from 25 to 30%.
The ones that were supposed to go into place on Tuesday next week.
That's correct. That's correct. Those will be deferred while we...
Including the other ones.
Yes. Mr. President, are we now closer to a complete end of this trade war? Do you have a timetable in mind?
Yeah, I think we're very close. I think this is a very important phase. A lot of things are here. Our agriculture will be completed because when we bring it up to $50 billion, I project is going to be the number. I don't know that there's a question as to whether or not our farmers can produce that much, and I think they can, but they're literally, and I said it jokingly, I think I mean it, they're going to have to buy more land, which is okay. Be a good time to own land in Iowa, Nebraska, and a lot of other great states. So they're very happy about it. But we're taking it from $8 billion, which it is now, and it was about $2 or $3 billion. They got down pretty low. But if you take the highest it ever was $16 billion, and we're bringing that to 50 billion. So we're going from 16 to 50. So anywhere between 40 and 50. And that'll start very soon. And they've actually already started purchasing. You've actually started purchasing a lot from the farmers. We just got messages from the Middle West.
Already for 20 million.
Yeah, 20 billion.
20 million tons of soybeans.
20 million tons.
Already.
Yeah, tremendous amount of soybeans. And that was over the last couple of weeks. We got word of that. You know, we got word. We notice it. It goes quickly because we see a price go up a little bit, right? It's incredible the way the market works, but yes.
About 398.
That's right.
Dollar.
That's right.
Mr. President, how will this deal be enforced, Mr. President?
We're working on enforcement right now, and that's been largely agreed to, and that's one of the things in this agreement. We have an enforcement provision, and they're working out the final aspects of that enforcement position, and I think that's something, Bob, you want to say something about that?
Sure. So we're going to have a very elaborate consultation process. We have an escalation in various areas so that difficulties can be resolved. Both parties have allocated or have assigned various people, have created a structure under it, and we're down to the final details of what will happen if there's not a resolution, and that's kind of the final issue that we're putting together. But both sides agree it absolutely has to have a workable dispute settlement mechanism, and we're very close to that.
How do you see the U.S.-China relations right now? Do you see what areas U.S. and China can still work together?
Yeah, I think they're great. I think the relationship in certain ways may be better than it's ever been. We've been through a very tough negotiation. There's never been a negotiation like this. In all fairness, I give China tremendous credit because for 25 or 30 years, they've done very well with the U.S. And now we're doing something jointly. We're doing it in a fair manner. I give China credit for what they've done over the last 30 years. Tremendous credit. I don't blame China. I blame the people representing our country. Now we have a deal that I think ultimately is going to be just fantastic for China and fantastic for the United States.
Mr. President, can you clarify, is this an actual deal or is this progress towards the deal?
No, it's subject to getting everything papered. You have to do it. We've agreed in principle to just about everything I mentioned, all of the different points, and now we're getting it papered. And I don't think it should be a problem getting it papered. I think that China wants it badly, and so we want it also, and we should be able to get that done over the next 4 weeks. We're going to be in Chile in 5 weeks, so we'll see in terms of signing when it happens. We'll do a formal signing with President Xi and myself. But this is just something that's very exciting. And I'm very excited, actually. We cover a lot more territory than agriculture, but I'm very excited for the farmer because there's never been a deal of this magnitude for the American farmer. Do you want to talk about the Huawei?
Ms. President.
Or Secretary Ross?
I'm sorry, the question is,
Huawei.
in this agreement, we're not dealing specifically with Huawei. It's not part of this agreement. That's a separate process.
Mr. President, have you on both sides raised the business dealings of Hunter Biden with Chinese officials?
Well, we're going to discuss where's Hunter. Where is Hunter, by the way? Whatever happened to him? We're going to discuss where's Hunter when I get out because I'll stop at the helicopter. But right now, in respect to China and to the Vice Premier, we're going to only ask questions.
Mr. President, on that point, can you assure the American people that you did not bring up Joe Biden in these negotiations, that you have not brought up that with the Chinese?
I have not brought up Joe Biden. China can do whatever they want with respect to the Bidens. China can do whatever they want with respect to $1.5 billion going to somebody. That's up to China. But we do have to look into corruption, but no, it has not been brought up.
Mr. President, can you comment on that this deal over the next 3, 4, 5 weeks won't fall apart as it's being papered? And
Well, anything can happen. That can happen. I don't think it will. I think we know each other very well. We've been negotiating this for a long time. There's a possibility, of course, that maybe there's something that they're unable to get papered. But I've been doing this for a long time, and the Vice Premier's been doing it for a long time. And many other deals for many, many years, both of us. And his people are very great professionals, and so am I. And I think the likelihood of it falling apart is not so good. What do you think, Steve? What would you say?
I think we have a fundamental understanding on the key issues. We've gone through a significant amount of paper, but there is more work to do. And we will not sign an agreement unless we get and can tell the president that this is on paper. And I know The vice premier needs to go back and do some work with his team, but we've made a lot of progress over the last 2 days.
Mr. President, can you comment on the...
And most of this is also known by the people in China, by President Xi. He's been following it very closely.
Mr. President, have been working together for over a year and a half now. Can you comment on the progress and the performances of the teams of both sides?
Well, I think, are you from China?
Yes, China.
I think the people of China have to be very proud of your team. They are unrelenting. I say that in a positive way, but they're unrelenting. They're tough, they're smart, and they have negotiated a great deal. But I think the people of China should be very proud of this team, starting with the vice premier. He's a very extraordinary man. We've gotten to know each other well. And everybody on my team respects your team. So I think they've really handled themselves incredibly well.
Mr. President, are the December tariffs also suspended?
So the tariffs on the increase from 25% to 30%, that will be suspended. We'll be paying 25%. But we're not increasing it to 30. And then you might want to mention the additional tariff.
The additional tariffs are scheduled to affect, as many of you know, the second half of September. That is scheduled to effect on December the 15th, and the president has not made a final decision on that, but there's plenty of time to make that decision. And that is certainly part of this process that the Chinese are working their way through. So the first one has been suspended. The second one is subject to the president making a final decision, but the way this timing works out, that'll be well in advance of that date.
And we'll be making...
Mr. President, many Chinese students feel unwelcome in this country. They have difficulty. I mean, many Chinese students have difficulty in this country with their visas.
Students?
Yes,
Chinese students. No.
Can you
We're going to be very good to Chinese students. Nope. I've heard this question many times before, including from our own security people. We want all the people that want to come over from China. We have the greatest university system in the world, and we're going to keep it that way. And one of the reasons it's great is we have a lot of students from China. Now, we're not going to make it tough. We're going to make it like for everybody else.
Mr. President,
Okay?
any potential...
What measures will be taken?
We're going to make it. I think that's important. I think, Steve, it's very important, Bob. Our universities are available. The world comes in, they use our universities. We have the greatest system in the world. And China's not going to be treated any differently. I think it's important for you to say that to the people of China. Our system is open. People get in based on merit. We have incredible talent coming in from China. They occupy a big space in our universities, and we want to keep it that way. Okay? Because there was false rumors going on that we were going to close the schools to China. That is so false. It's just false.
Mr. President,
some technical issues we have already exchanged our opinion.
You've already exchanged, yes. Say it.
Reports about canceling of OPT
Wait,
for
1 second.
Mr. President, I think you've been very clear in your directive all along through the trade negotiations on your view on the universities.
are you going to do anything to reassure the students?
Yeah, I can give them my word. I want them coming here. We want the greatest talent in the world coming to our great universities. To Harvard, Yale, Princeton, the great Wharton School of Finance, to Stanford, all of these great schools, we want them coming here. And that's what we have. And that's one of the reasons we have the great system. And there have been discussions about that, not by me, because I ended them very quickly. I want to let you know, I end those discussions very quickly.
Mr. President, what about Chinese potential for rescinding the currency manipulation designation?
We'll be making a decision on that and evaluating it, although I would comment that assuming we close the agreement and we have the assurances, that'll be a big step in the right direction for our evaluation.
Mr. President, what about Chinese business? Do you still welcome Chinese business?
Absolutely, we do. We're doing a lot of business with Chinese companies. We do have to be, security companies and certain companies we have to be careful with, and we have to pay very close attention. But we're doing tremendous business with China and with Chinese businesses. It's tailed off. We've tailed it off. We've purposely tailed it off, but that'll start building up very quickly again. We expect that to build up to a much bigger extent, I think, than even before.
Mr. President, the question is both you and Vice Premier.
When you talk about a big trade deal with China, is this what you've envisioned?
Well, this is phase one, and it's a big part of it. The farmers, the intellectual property, a lot of areas are covered here that frankly are in great shape. Intellectual property, financial services is going to be a massive boon to the banks and credit card companies and all of these companies, including ownership interests. You know, before you had to do certain things that made it very difficult for banks and institutions to really go into China. China's really been opened up now for the first time to financial services and to the big banks and credit card companies and other types of financial services. So that's a tremendous thing. And I think we have complete agreement on that. Intellectual property, a lot of agreement, but we'll have some of that included in phase two. Agriculture should be done. I don't think the farmers can handle any more than what they're getting. Don't forget, we just signed a big deal with Japan. And that was a very big deal, and a lot of that had to do with agriculture also. So the farmers are doing well. Currency foreign exchange, we're all set on that. That we've been able to do, and not only through simplification, but the importance of it. It's very important. And technology transfer. So we're going to have some technology transfer here, and some will be in phase two. We think we'll probably be able to conclude it with phase two, but it may be phase two, phase three. Okay?
Mr. President, question for both you and the Vice Premier.
The idea of doing a phase one. You've been saying as recently as earlier this week that you wanted one big deal.
Because it's such a big deal, and it covers so much territory, that doing it in sections and phases is, I think, really better. And we're talking about very big. Don't forget, we've covered fully agriculture, even in terms of agricultural structural issues, and then in terms of $50 billion of agriculture. So that will be covered in its entirety. Currency foreign exchange will be covered in entirety. Financial services, I think, will be covered pretty much in its entirety. So the banks and lending institutions, all institutions are covered. Some of technology transfer, a large part of intellectual property will be covered. So I think it actually works out to be a very neat package. And now we can focus on phase two.
Mr. President, the last time the Vice Premier was in the Oval Office.
So you said it might take 4 or 5 or 6 weeks
whatever
to put it in paper. At what point would you raise tariffs again if you don't have a deal?
Well, we'll see. Only good faith and bad faith, and I think we have a lot of good faith right now going on.
So no new tariffs in the foreseeable future?
What we're doing is we're going to start, John, right away and getting this papered. Right now, it's already partially papered. Much of this has been pretty much completed from the standpoint of paper. But we think it'll take 4 weeks, 5 weeks, something like that. Now, we happen to be together in Chile, so that could be a point or maybe not. President Xi will be there, and I'll be there for the big summit.
Mr. President, the last time the Vice Premier was in the Oval Office in April, you said a deal at that point was about 4 weeks away. I would love to hear from both of you why this time is different. What's changed in the relationship?
Well, I think we got to know each other a lot better. And don't forget, there's been a lot of back and forth since that happened. We thought we had a deal, and perhaps they didn't. But it didn't work out that way. This deal is a bigger deal than the last deal, relatively speaking. Now, we're talking about big parts of it with financial services and agriculture. But when we talk about $50 billion in agriculture, we never had that in mind in the first deal. We were thinking about 20. We were thinking about anywhere from 16, I would say, to $20 billion. Now we're talking about $50 billion. So this is actually a much bigger deal. It's a big chunk of it, but it's a much bigger deal than we had in mind. Certainly in terms of, I would say, Steve, financial services is bigger and more complete. Intellectual property will be in both phases of the deal. Currency foreign exchange, we didn't really discuss that very much in the last deal. Now we're including it in this deal because a lot of things have happened during the course of the last year that meant it. So I think this is actually, when you add it up, going to be a more important deal, a bigger deal, and more precise.
Mr. Vice Premier, what is your
currency had been agreed last spring as well before talks.
Well, now we have currency. The currency foreign exchange is included. The foreign exchange aspect of it is much more complete now than it would have been under the other system. And don't forget, a lot of things have happened with currency and foreign exchange that we weren't talking about a year ago.
You mentioned about the summit.
Yes, from
you
China.
mentioned about the summit. When and where would you like it to be?
Well, we're going to find that out. That'll be up to the Vice Premier and to President Xi. So we'll find that out.
Okay, amid the global economic slowdown, do you think this kind of win-win will help the...
Well, the United States has been doing very well. China, I think this will be tremendously positive. This is going to be a tremendous thing for China. We've been doing well, and I think we'll do better. I mean, we've been doing really well. We've been leading the world in many aspects of what we're talking about. I think we'll do even better, and I think China will do tremendously well with this deal. This is a great deal for China. It's a great deal for us.
This 40 to 50 billion, is that an annual figure? Will it rise to that figure? Is that over 2 or 3 years?
So it will scale up to an annual figure, yes.
An annual figure of 40 to 50 billion.
Yes.
And you say over how long?
Within the second year.
Over the less than 2 years.
In Hong Kong and the Uyghurs come up and told us a big issue in other parts of on Capitol Hill, for example. Or is that separate?
We discussed Hong Kong, and I think great progress has been made by China in Hong Kong. And I've been watching, and I actually told the Vice Premier, it really has toned down a lot from the initial days of a number of months ago when I saw a lot of people, and I see far fewer now. And we were discussing it, and I think that's going to take care of itself. I actually think this deal is a great deal for the people of Hong Kong to see what happened. I think this is a very positive thing for Hong Kong, but it really has, it's the escalation, it really has de-escalated a lot from the beginning, and we were discussing this.
Yeah, would you put a spot on the blacklist of Chinese companies, which seems to be expanding these days?
Well, we'll be looking at the blacklist, and we'll be making a determination as to which companies would be on that list.
Mr. President, if this deal goes forward, helps the economy, economic growth, et cetera, do you still think that the Federal Reserve needs to cut rates? And so
yeah, I do. I think the Federal Reserve should cut rates regardless of this deal because we're higher than other nations. Germany is loaning money, and when it has to be paid back, they get paid, okay? It's ridiculous. And I think that the Federal Reserve should cut rates regardless of how good this is. We have a great economy, but we have a Federal Reserve that's not in step with the rest of the world. So I think they ought to get in step. And if they were in step, we would, regardless of the China deal is much more important than the interest rates. But because this has to do with more than trade, this has to do with world peace, this has to do with getting along, this has to do with the rest of the world. This isn't just a deal on trade. This has to do with a lot of friction, a lot of bad things that are happening in the world. So this is far more important than the Federal Reserve and interest rates. But the Federal Reserve should cut interest rates, absolutely.
Did you tell them anything about the impeachment process and how that might affect your ability to complete this deal?
Well, I think it's helped me because yesterday we had the biggest crowd. We broke a stadium record. We broke the record in Minnesota. Nobody's ever seen anything like that. And you saw it, and you understand it too. And my poll numbers are going way up. And so the impeachment, it's a hoax. No, we didn't discuss it, but I would tell it's a hoax. It's a hoax done by people that are losing, and they want to try and use it to win an election. And I don't think it's going to happen. And I don't think China believes it's going to happen, because if they did, they'd rather deal with a sleepy Joe Biden who's failing badly. He's not going to make it anyway, but whoever does emerge on the other side, they'd probably be better off maybe waiting. But they also know that when I win, the deal gets even tougher. It gets even tougher. And they expect that I'm going to win. Otherwise, they wouldn't sign the deal. It's very simple.
Mr. President, you made clear that you like putting tariffs out.
I do like tariffs.
What's your inclination then about December?
I think that we're going to have a deal that's a great deal, that's beyond tariffs. This is a deal that's a very important deal for China, very important deal for the world, very important deal for the United States. I think this is a deal that's beyond tariffs. I really mean that. I think that world peace, there was a lot of friction between the United States and China. And now it's a love fest. That's a good thing. But that's good for China and it's good for us, but it's good for the world. The Vice Premier said the same thing. And he said it better than anybody could have said it. He said, this is a great thing for the world. He didn't say China or us. He said this is a great thing for the world, and he's absolutely right. Perhaps you'd like to comment on this.
I totally agree with you. It's good for China, it's good for U.S., but it's good, also good for the whole world.
Yeah. The whole world is watching.
Yes, the whole world is watching.
And it is amazing, and I said...
Not only peace,
yes.
but not only trade issue, it provides peace and prosperity and development for the whole world. I think it's very, very important.
He said peace and prosperity for the whole world. So it's beyond a trade deal. It really is. And, you know, the talk was getting tough. Rhetoric was getting tough. We have ships and they have ships, and we have planes and they have planes. And, you know, bad things can happen. Stupid things can happen. But this is a great thing that's taken place. We have a very good bonded relationship. And I have very little doubt that we'll be able to get this thing finalized out. It's not overly complex, and then they'll start phase 2. But this was a very important deal for a lot of reasons. Thank you very much. I hear a helicopter. I hear a helicopter. I'm going down to Louisiana. We have a totally sold out crowd in Louisiana, and hopefully the governor of Louisiana, who's not doing a very good job in Louisiana. Hopefully he won't get the 50%. We'll have a runoff, and you have a nice new Republican governor of Louisiana. And I hope a lot of you are going to join us. You joining us, John? You're going to be joining us?
I'll be watching, sir.
Huh? Did you watch last night? Did you enjoy it?
You know, it's my job to watch.
Yeah. A lot of people enjoyed it, John. Have a good time, everybody.
Thank you, President.
You've been listening to President Trump in the Oval Office there with members of his trade team and the Chinese trade delegation. President outlining major points of the deal, which, had come out. It was interesting to hear, I think, the tone of what they're talking about. He really was trying to drive home this largest order in the history of agriculture. And the tone of Steven Mnuchin when he said, we still have more work to do. So it's a lot of, there's papering, we've got 4 weeks of papering, then we're going to meet in Chile, and the secretary, there is still more work to do here.
Well, I mean, I think the reality is that there was, and I think it had gone away over the last couple of weeks, but you go back in time a few weeks, maybe this was gonna be the end of it. There was a chance, I think some people believe, that the entire discussion about trade could maybe break down at this moment. And so there's definitely a sense that, all right, well, we've got the phase 1, and then we'll do the phases, right? So we know there's going to continue to be talks, but there had been some growing anxiety, I think, Rick, in the market that maybe eventually China would just get tired of doing this song and dance and would kind of end the whole thing.
Yeah, I guess. Although you've had so much different handicapping in one direction or another. How are the Chinese playing the Trump re-election and so forth? The way I saw, I think markets see that this could go one of 3 ways. It could escalate and get worse. It could, we could have a truce, but everything stays where it is, and we still have a lot of tariffs in place right now. Or it could get better, and we start to remove the tariffs. I'm detecting early skepticism of this so-called deal. So Greg Dacko, he's at Oxford Economics. He's been on our air many times. Just put out a note saying he's calling this the itsy-bitsy teeny-weeny handshake deal. And he says, behind the hype, this is nothing more than a partial and ostensibly unsustainable deal lacking in real enforcement mechanisms. For businesses, this will mean less damage, but not greater certainty. So, we saw markets sort of falling down off highs for the day as the details came out. There's nothing on paper. Details have to be written down and stuff. I think we'll probably see growing skepticism of this next week.
Yep.
They certainly discussed a lot, not the enforcement. They discussed Hong Kong. The president just talking about the Fed. He still thinks they should lower rates.
Yeah, I mean, let's just point out the 2 important takeaways, though. No increase in tariffs next week. That was scheduled to go from, that was only a 5 percentage point tariff hike, by the way. It was going to go from the 25% tariff that's already there up to 30%. So that's now not going to happen. There's another big tariff hike scheduled for December 15th. That's on about $200 billion worth of consumer goods. And they did not say, basically, they said President Trump has not made a decision yet. So he's obviously holding that in his pocket as leverage to get this deal with China.
Yep.
We have the weekend to digest it. Now here's Miles with a look ahead at what will be making headlines next week.
All right, we talked about it. You all know the drill. Trade is what moves the stock market. We saw it all last week. Of course, it came to a head on Friday, the market ripping higher and then selling the eventual news that we've got phase 1 of a potential multi-phase trade deal. Now, this coming week will bring us finally to earnings season. We'll start to get a ton of data on where corporate America stands through 3/4 of the final year of the decade. It's all going to be very important stuff. I just would not expect that all of this news ends up becoming market-moving events, because earnings are not trade. At least they're not only about trade. And it seems that only things that are only about trade are what's going to really push this market around. Now, turning to the calendar for this week, financials will be the market's main focus, though giants from across industries are expected to report results. Of course, Columbus Day Monday, so nothing then, but Tuesday, jam-packed schedule, JP Morgan, Citi, Goldman, Wells, BNY Mellon. Out of the financial sector, also got United Health, BlackRock, United Airlines, all on that Tuesday. Let's move along to Wednesday's schedule. We've got Bank of America earnings, Abbott Labs, American Airlines, and Netflix. They'll be out after the bell. Thursday, we've got Morgan Stanley, Philip Morris, Honeywell, and then PPG. You'll remember that's a trade warning company from back the end of 2018. And then on Friday, Coca-Cola, American Express, Synchrony Financial, and State Street are among the companies set to report their results. On the economic data side, things will be a bit slower. Wednesday's read on retail sales in September will be the week's most closely watched report. We'll also get housing starts, initial jobless claims, and the Fed's latest beige book, only 2.5 weeks away from the next Fed decision. How about that?
Wow, they had to wrap up the trade because it's such a busy week next week. We got to get to the fundamentals.
Well, and then it gets even crazier, because then you've got the Apples and the Amazons and all that stuff.
Does the trade handshake deal change the Fed's thinking?
I don't think so.
Probably not.
I don't think so. I think
it really doesn't change anything fundamentally.
And the president doesn't think it should. He still doesn't change his thinking on it. He thinks that they still need to cut.
This is going to be a very interesting Fed meeting, because I think there's an expectation that maybe this is the one they pause at, and then they would cut again.
Neil Kashkari,
I think they should cut.
Yesterday at Yahoo Finance All Market Summit, he kind of hinted that 2 cuts was enough, and I think he's the most dovish member of the committee, isn't he?
Yeah.
Close?
Has been, yeah. Jim Bullard's a little more dovish now, but yeah, interesting.
Update for the market. So we ended off the session highs. That's all for now from New York. I'm Jen Rogers with Miles Udlin, Rick Newman. This is the final round on Yahoo Finance. Stay tuned for this week's episode of My 3 Cents coming up in just 2 minutes.